Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. It's the Millennial Takeover version 500.
Boomers don't want to work anymore.
Yeah, get rid of them. They're out and about. New York, the big city.
Getting prepped for some bagel intake.
Oh, I wonder if that's what they're doing right now. Maybe.
Must be.
I mean,
Absolutely must
you
be.
don't want a hangry Tom.
That's very true. That's very true. I mean, the content's tough enough to watch. If he's hungry too, I mean, oof.
What kind of day do you think it's gonna shape up to be for them for live market action?
What do you think, Mikey? I'll give you the first crack at it.
I think it's going to be disappointing. I think it's going to be a pin just around 6,700. If you look at SPX, implied volatility, we have a 32-point expected range, plus or minus, for the rest of the day. So it's not too bad, but I think we chop around here and digest what this week has brought to us.
Yeah, I'm unfortunately in the same camp as Mike. I think it's going to be tough. It'll be perfect for their 0-day trade because they'll definitely put on an SPX or E-mini 0-day trade, which will probably be good today. I think today is going to be an inside chop fest, and I agree with Mike. I think the 6,700 mark, probably a good mark to play for going into the end of the day today. Triple witching. You know, we've had a crazy week. I think it's time to chill out a little bit.
We'll see what happens.
Yeah.
I think we all look very nice in our party shirts, though.
Hey,
party shirt
the
Friday.
vibes high. The market may not move, but we will be moving in the party shirts.
Where are you guys headed next for your whiteboard tour? You guys have a show coming up not too soon.
Correct. We're headed down yonder to Dallas.
I was like, I don't know where yonder is.
And someone in the YouTube chat let us know that they have a Dallas State Fair or a Texas State Fair that will still be going on when we are there.
Oh, that Texas State Fair food is epic. Watch those TikToks.
Yeah, we're ready for some fried Oreos, maybe some Twinkies.
Oh, they'll do fried butter.
Fried whatever.
I'm
the ready for it.
And barbecue, and everything's bigger in Texas, including your cholesterol.
Oh, yeah. Can't wait. It's going to be fun. But yeah, October 12th, Sunday, 6 p.m. Be there or be square.
Yes.
Totally free to go. It'll be a fun show. And we're excited to do it.
Yes. You should come.
Yeah, why not?
Yeah.
Why not? I haven't been to Texas in a hot minute.
I know. Join us. We're going to do the rodeo too.
Oh, yeah.
Friday should be fun.
Wow.
Yeah.
Are the Cowboys at home?
I don't think so.
That's a good question.
No, I think they play on Monday. That's what we were like.
Oh, okay.
Like, what if it's a Sunday night football game, but it's a Monday game, I believe.
Well, guess what? How about them Cowboys? The Cowboys are coming to Soldier Field. What'd you say?
I said they're playing the Panthers at noon.
Oh, okay.
Or that's October 12th.
Okay, yeah. So the game will be over by then.
Yeah, game will be over, and hopefully they'll win that one. But yeah, the Cowboys Bears game has me quite perplexed. It's a pick'em line, which is not good. The Bears should be favored at home. I mean,
based on what evidence?
I was about to say because of winning the offseason and the hype that we had going into the year, you would expect that to be a favored home game.
But people have eyes. They saw that we lost by over 30 to the Lions last week. So
yeah,
that was sad. That was very sad.
How is your guys' fantasy leagues going?
pretty well.
Yeah, pretty good. I lost to Mikey last week in his home league, which I'm now a part of.
Yeah. Yeah, I'm 2-0 in some of them. I'm 1-1 in some. That's it. I'm not 0-2 in any of them. So yeah. I'm not anywhere near the Bears right now.
Yeah.
Who are 0-2.
Yes.
But it's fun.
Is it hard to manage though on a day-to-day basis? Like how? Because you're in so many different leagues. Don't they have like different rules and different players and?
Yeah.
Like,
So
it seems like a lot.
So it could be a lot. However, these platforms have upgraded their interfaces, and now you can just click one button and it starts all of the players that have the highest projections. So because I'm in 4 leagues and I do daily fantasy stuff, I don't even look at my roster. I just click the button and I just let the numbers do what they're going to do based on projected points. So
and Vanetta, when you're this committed, it's like trading too. Like I have 30, 40 positions on here. I could have 30 or 40 more. It's no problem. It's just part of the game, you know?
Sure.
It's the love of the game. It's the same thing. So, fantasy sports, more. Just bring more.
Indeed.
Is that what you guys are doing this weekend? You're just watching football? Or are you going to play some golf or what's going on for you?
Yeah, the girlfriends are seasonally single.
I'm going to Riot Fest this weekend.
You are going to Riot Fest.
Yeah.
Wow. Who are you most excited to see?
Probably Jack White.
Oh, okay. That's cool.
Mm-hmm. I will be seeing Weezer again, which will be fun.
I love it. That's amazing. They're still touring.
So another point on that, Weird Al Yankovic is going to be there too. That's going to be very.
That's my accordion. Those are my accordion hands.
Yeah. Give me some Amish paradise, baby.
Yeah.
It's going to be amazing. But yeah, fun weekend, and then we have Cowboys Bears on Sunday. So
yeah,
jam packed.
Take lots of Advil and bring some Pedialyte.
Indeed.
So the only way to get through it, the Pedialyte, the blue Pedialyte.
It's goating. The blue one.
Yeah, the blue one. The blue one's the one that'll really set you right.
Perfect.
Well, that sounds like fun. How about you, Nikki? What's on tap for you for the weekend?
No big plans. I mean, Batista Gardens did do their jarring yesterday, so that's ready to go. I do have some plans to play some golf on Saturday. Maybe deliver some of those jars. So,
Mikey, did you get a look at the operation? Have you seen the facility, the manufacturing facilities?
I have actually, and I've received my jar. I've received one, and I've tried it.
Wow! Well,
and I gotta say,
the ground level investor in Batista Gardens.
Well, I gotta say, it is very good. I'm very impressed by his workmanship. It is
so
very
it's
good.
Flavorful. It's balanced. It's spicy, but okay.
I will say, shout out to John, but John's is much spicier. Mine, it's kind of in the medium realm, which it's okay. It's fine. I wanted it to be a little bit more spicy, but my peppers weren't.
I mean, spice is hot, is hard. There's not like a universal, spice tolerance level, so it's hard to please everybody.
Yeah. So, but I think it's good. It'll be a perfect accoutrement to anything you would like to put it on. Burgers, hot dogs, sandwiches. It's going to be perfect. Very versatile.
Well, maybe if we're lucky enough, maybe we can give one jar away through some sort of promotion.
Ooh, we could. Yeah, we could try. Maybe I'll bring one to Dallas and give it away. If I would have to check the luggage though. That's the problem.
Wait, is Jardinera a liquid?
Well, there's olive oil in there, so
that's a hard one.
I don't know the protocol there.
It's more like gelatinous than
yes. So I don't know if that. I don't know. I'll have to look that up. I'll figure that out. But I can't be stopped at TSA and slow everybody down. I can't do that.
There you go. Yeah, that's a good move. And Katie will laugh at you.
For sure.
Instead of it being thrown out, you have to open it up and be like, just taste this. Just let me bring this through. And then they got to taste it.
Yeah.
That's too funny. Well, it seems like you guys already have a lot of plans going on for the weekend, but if you have some time on Sunday for the first time in, I think, 92 years, 500 swimmers are going to hit the Chicago River to raise money, I think, for ALS. I'm
Wow.
not sure, but would you swim in the Chicago River if given the opportunity?
Ooh,
They are testing the levels, so they will double check to make sure that it's okay, but.
they have been doing some cleaning on it over the last couple of years, haven't they? Like,
Yeah,
hasn't that been like a big project to make it like
yeah, same with the
not
Seine in
radioactive?
Paris. Like you can now swim in the Seine, in the river.
Okay.
But
Yeah,
yeah,
I would pass. I would still pass. I appreciate them doing this for such a great cause and raising money, but I myself would probably pass.
Mikey, you're a fitness guy. You want to take some laps in the Chicago River?
What? I'm not a fitness guy.
Sure.
You call me fat? What the hell was that?
Where's your fitness tracker? I got my Apple Watch on. He has his ring on. Where's
I don't.
yours?
I know. I gave up on it.
Okay, we'll see. Then there you go.
I have to cancel that subscription too. I'm just paying
yeah.
like $7 a month or whatever it is for it.
I could take a dip in the river as long as they prove to me that I'm not going to have an infection afterwards.
Yeah, you
from
can't
just
sue
touching
the
it.
city.
Well, then maybe I won't. If I can't sue the city, I mean, come on.
I'm just kidding. I don't know. But yeah, we are here. It is a millennial takeover. Tom and Bat are live from Webster Hall a little bit later this morning. Well, not live because we're not streaming it, but if you're there, then it's live. I'm going to start over. Tom and Bat are in New York City, which is why we're doing the millennial takeover. I have not had coffee yet, but you are stuck with us today. But it's going to be a great show today. Always a little fun when we, get like a little different vibe in here. One, we know how to read the YouTube chat, so that's fun. And two, Mike and Nick have more approachable account sizes, and they do different types of trades, so it's just a little bit more fun. Speaking of which, on the show today, you got the weekend stocks. Jamal's going to come in. We had the Fed rate cut. We had chip stocks going loco. He's going to talk about it all. And it says records are made to be broken. That's Jamal coming in at around 8:10 with his recap. And like I said, it's fast market. It's hashtag Friday. Woo woo. Mike and Nick are going to do viewer submitted trades. That's always a good time. That's around 8:40. And then 9 o'clock for the market measures today, demystifying denominators, how numbers mislead. Sorry, my bad.
There we go. Very nice.
How numbers mislead. Like when a dude says that he's 5'10".
Oh, wow. You know what?
No, it's when he says he's 6 foot, but he's really 5'10".
Yeah, coming from the shapeshifters.
Yeah.
Numbers
I get it.
mislead.
Yes.
I honestly don't care. Like I'm 5'2". Like what? I'm not gonna complain.
Yeah.
Anyway, and then we got talking with Mike and Nick. They're gonna take your calls. So if you have a question, Mike.
Actually, special guest Mike and Jamal. I will be off after 9.
Oh, that's right. You got to go to the dentist.
Yes. Yes.
I'm just gonna blow up your spot. Like you got to go to the dentist.
It's actually not a dentist. It's for my back.
Oh, that's right. Yeah.
Yeah. We've been waiting on this moment. I hope they tell me good things, which I don't think.
I want that for you. Like dealing with pain, it's not fun.
Yeah. I've been waiting for this appointment for a month and a half now, so I'm excited.
All right. I'm glad you're going to be back on the mend. Maybe they'll give you like one of those robot exoskeletons.
Oh, that would be fun. Yeah. Yeah, I would do that.
Well, so Mike and Jamal are going to take your calls, your questions. That's going to be at 9:30. And special programming, I think Liz and Jenny are back from Germany. It's going to be Jenny and TP on the show today.
Very nice.
Sweet.
Always
Sweet.
very nice. Hey, in the meantime, in between time, you guys want your daily dose?
Yeah.
Yeah, hit me with my theme music. Let's go.
Woo-hoo.
Our leading story. Breaking news. From the wire. Top story. Breaking news.
All right, everybody. Today is a fantastic Friday. It's September the 19th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Yeah, woo!
Oh, see, I love that. I love the enthusiasm. Thank you. The Russell 2000 scored a fresh record for the first time in 4 years. And this headline says why the small cap rally has room to run. Small cap stocks do remain cheap compared to their large cap peers. And the once forgotten and overshadowed index is now eager for attention. Well, tell me your Russell fantasies.
Oh,
Well, I
go
have
on.
a call diagonal spread in there. I've had that on for quite some time. So I'm looking forward to this continued rally if we can get it.
Okay.
Yeah, I mean, this has been obviously the rate cuts will help the smaller cap stuff, or should help them the most. So it has been a furious rally, but the Nasdaq has not performed as strong in the days since J Powell took the stand, but it's the Nasdaq is still strong.
Sure.
Not as strong, but yeah, I don't know how long this lasts.
Are you doing anything in IWM at all, Nick?
I do not. I do not have anything in there, but I've got some long delta in some of the Mag 7 stocks, so I'm playing the Nasdaq a little bit. But no, do not have anything on in the Russell right now.
This headline says one big takeaway from the Fed rate cuts is to bulk up on these two investments. But before I tell you what his two investments are, what are opportunities that you see post Fed rate cut? Like if we had to break it down by sectors or commodities or something that looks like an opportunity.
That's a great call, Mikey.
So this guy says it's gold and AI tech stocks. And I'm like, okay, that's not a real huge leap of faith, but pop off.
I think we've been long the US dollar. So I think
Okay.
that's an interesting one where you can we're basically at multi-year lows in some of the pairs. So we've been playing that. That's been really nice. As just a this has gone too far, it will eventually recover type thing.
Okay.
Yeah.
Golden AI, I think is right there, but yeah, I think looking at other sectors, because that feels too obvious.
Yeah.
Everybody's gonna invest in NVIDIA.
I think it's crypto. I think crypto's the mover.
Okay, that's interesting.
Easy-
How are you
easy-
doing that? Through IBIT or
IBIT, ETH,
okay?
both very high implied volatility, very liquid markets. I think that's when the money printer goes burr, you want the high beta stuff, and those are high beta products. I mean, yes, you can go into like IWM or the Russell futures there, but I think that's another spot where you can get some high velocity moves.
All right. Hey, speaking of some of these things, foreign holdings of U.S. Treasuries surged to an all-time high in July, although China's share of those holdings did sink. But data from the Treasury Department showed that foreign holdings of U.S. Treasuries hit record highs for a third straight month, led by gains in holdings from Japan and the United Kingdom. Let's talk bonds to finish the week.
Yeah, bonds have retreated back to kind of where they were prior to the announcement. We're at 116.14 right now, which is contrary to what kind of the public is thinking, is that we had the rate cuts and we have a lot of them projected into the middle of next year. So it'll be interesting to see if they come back down. That would kind of take off some of those projected rate cuts. But yeah, it's a little surprising to see bonds this week, given where the market is.
How about for you, Mikey? What are you doing in bonds?
So I actually had a TLT put diagonal or a put zebra on. Okay. So TLT is has such low implied volatility. You can get those zebras on for like $100, $200. So I had that on, and this move over the last 2 days definitely saved me. But yeah, I think this implied volatility of 13% you're seeing in October, I think you could see some movements, maybe some knee-jerk reactions that that could be larger than that at certain periods of time. So I've been playing it with zebras specifically.
And that's interesting when you're talking about like how much relative that type of trade costs compared to some others. So
Yep.
very cool. Hey, in other news, congratulations. Japan's Nikkei index hit a record for a second straight day as inflation cools. Japan's core inflation dipped to the lowest since November of 2024, and the rice price surge has eased. I thought you would be happy about this, Mike. Let's just talk the yen.
Mikey is a wholesale consumer of
Yeah.
Japanese rice.
Yeah. So yeah, that's great. Love that for Japan. But I actually am looking at the Japanese yen, and because I'm going back to Japan in 2 months. So
Are you really?
I am. Yes.
Oh, I'm so jealous. I got to get over there, man.
It really is an incredible spot.
I'm gonna send you a list of Hello Kitty stuff that I need. Okay.
I thought
Perfect.
what about the Labubus? You can get those there too, right?
I mean, you can get Labubus everywhere.
Can you? I thought there was like a Labubu shortage.
Not there. Not
No?
there. But
Not
yeah. Japan's magical. It's very cheap relative to anywhere you go in the US. You walk out the door in the US, you're spending $300. You walk out the door
Where
in
are you
Japan,
going?
you're spending $30. Just anywhere. If you get 2 beers at a bar, you're spending $50. It's insane.
I'm a lady. I do not pay for drinks.
Ah, yes.
There you go. But yeah, Japan, congrats to them. Love to see it.
Yes.
How about you, Nikki? What are you doing? Let's just talk currencies: yen, euro, pounds.
I actually just took off a short pound position. I've been trading a lot of the FX products. I was long the US dollar in various ways against the franc, against the Aussie dollar, against the euro, against the pound. I was long the New Zealand dollar, and all of those have kind of come in the last couple sessions here post FOMC. There was a little bit of volatility, a little bit of there's a little more. I think the consensus was that there would be some continued dollar weakness. And if you've seen the dollar over the last 3 days or so, it's bounced, pretty much back to where it was a couple weeks ago. So had a big move. The euro specifically has had a pretty nice downside move. It's now below the 118 handle. It was just above the 120 2 or 3 days ago. So, when a currency that's moving 2-3% in a couple sessions, that's big.
That is big.
Yes.
Big.
Yes.
Hey, shifting gears to the digital asset space, DBS Group has partnered with U.S. asset manager Franklin Templeton and blockchain firm Ripple to offer accredited and institutional investors trading and lending services using tokenized money market funds and Ripple's U.S. stablecoin. Do we need this?
Great question. I mean, stablecoin is going to be great into the future. I think they'll make it more accessible, and it will create instant transfers, specifically for brokerage firms. I think it's great, and international people.
Yeah.
So yeah, I think anything that gives us more stablecoin options, I'm all for it.
Okay.
Anything that speeds up transfer of capital is going to be a positive for all parties involved.
Okay.
And cryptocurrency and stablecoins specifically, they take out the wire, the ACH. I mean, why are we waiting? You can Venmo somebody a couple $100 and it's near instant.
Right. You shouldn't have to have T+2 or whatever.
Yeah, it's just, it should all be instant. I mean, why can't, with JP Morgan, why can't I get that in my trading account and in, within seconds?
Sure.
It's all digital. It's not like they're moving my cash from one place to the other. It's all just numbers changing.
Right.
It's like, come on.
Right. They're not putting it in a sack, in a canvas sack on a Wells Fargo stagecoach.
Yeah, and walking it over to the office. I mean, that takes an hour. That would be quicker than how it is right now, digitally. You put it on a courier,
Yeah. Hey, let's get to the earnings from last night. FedEx stock rises on better than expected earnings. FedEx reported fiscal first quarter earnings that beat on top and bottom lines. The company reported net income of 820 million compared with 790 million a year ago. Revenue came in at 22 billion dollars. Good lord.
Yeah, stock was up at like 240-ish in the overnight session, or after the close, I should say. It's now down to 228, so it's basically unchanged here. It's up about $1 or $2 from the earnings. So it sounds like good numbers, but market says not so fast.
I hate FedEx. I hate it.
Why?
So I ordered some sunscreen. I use Supergoop. Shout out to you, Supergoop sunscreen. And so I was home on Labor Day and they were having a sale and I ordered it so like September 1st. But also while I was home, I helped my mom renew her passport. When I tell you my mother got her US passport faster than I got my order of sunscreen that was shipped via FedEx from like Kansas, it took like 2.5 weeks, almost 3 weeks. And I'm like,
Wow.
FedEx, what are you doing? I live in Chicago.
Yeah. Yeah. Well, I have the other side of the coin. That's where I got my labels made for my Batista Gardens Jardinera.
So you're bullish on them. I am bearish.
Well, no, I got 200-ish labels printed. It cost me $4. I would have paid
Wow.
I would have paid 20.
Yeah, that's
You
pretty
know,
good.
it's like 20 cents a page, which is great because it's just a printer, and that's probably a good return in itself. But I think they got room.
What's your pitch on Supergoop? What's I've never heard of this.
Yeah,
Oh, Supergoop, it's good. It's just an unseen sunscreen because some sunscreens for me can leave a white cast,
Yeah.
which is not cute.
Yeah.
But it's for all skin types and tones, and I put it on before I put my makeup on. So it's also kind of like a makeup primer. Like it makes my makeup also look nice, and it doesn't smell. And skincare, you could put it on. I give it to my dad, and he puts it on before he plays golf. So he
Perfect.
forgets a lot. But I was like, Dad, put your sunscreen on.
Love it.
Very nice.
There you go. It's good stuff. Hey, it's been a lot of IPOs lately. We had StubHub earlier in the week, but also a company called Netscope. They had a little bit better time than StubHub did. They soared 18%. The cybersecurity firm reached $8.6 billion market cap. The ticker NTSK.
NTSK.
NTSK, yeah. They priced
Okay.
shares at $19.
Mm-hmm.
And so
that's
they
up a
debuted
couple.
at 23. The sale raised $908 million.
Who cares about that one? CrowdStrike was up $50 yesterday.
I got it. Yeah. That's bonkers. Hold on.
Yeah. Oh, is that part of the? Did I steal your story? I feel like I always steal your story.
I know. I was like, I'm getting there. Hold on. I'm trying. Yeah, I do have it. It's a couple more down. So,
Okay.
Well, the big news that broke during that you broke actually during the show yesterday was that Intel was getting a $5 billion cash infusion from Nvidia. So the stock surged 22%. It had its best day in the market in 38 years, longer than we've all been alive.
Why can't Jensen give me a $5 billion infusion?
Yeah, how do we get?
Right, but does this seem
$5
like
billion?
suspects for you? So, like, the U.S. government takes a 10% stake in Nvidia, and then they're also like, "Hey, Nvidia, you want to keep doing your thing?" And then they're like, "Yeah," and then Nvidia's like, "Okay, well, then invest in Intel," and the stock goes. Something is just like.
I saw the greatest meme. I don't know if it was actually it tweeted, but it was memed from Trump's Truth account, and it was him at the desk with like two computer screens, and it was one that just like had like buy Intel at 20, and then and then it just had a chart of Intel at 30, and it was just Trump sitting at his desk like trading.
It's a good trade.
Yeah.
Hey, could be real.
What are you guys doing in chip stocks?
The chippies?
I mean, they all went back to highs in one 24-hour session. So you missed the boat.
Yeah, I have have a call diagonal spread on Nvidia and AMAT.
Okay.
So
Well, speaking
That's
of
it.
Nvidia, they just spent over $900 million to hire the CEO of Infabrica and to license the startup's technology. I can't believe they paid almost $1 billion for this one dude. But they wanted to hire Rokan Sankar and other employees at the AI startup, as well as license the technology. Of course, Nvidia has the capital. 900 million to them is nothing, but they're making moves, so we'll see what happens. Well, something that is interesting, and I did see this headline, is AMD in trouble because Nvidia and Intel are besties now?
Ooh. But isn't Lisa Su a cousin of Jensen? Or-
They are, yeah, they're cousins.
Yeah, so
What a
they're not.
wild family reunion.
Yeah, so Jensen's not gonna, he's not gonna destroy her.
No,
I think he might.
I
no,
don't know.
I don't think so. I think it's just another one of those things where all these dogs have had their day. AMD will have its day. AMD is one of the ones that's not participating. So if you want to be long this space, maybe it's an AMD.
I mean, it reversed its entire move yesterday. It was down like $7 or $8 on the
Yeah.
news, on the Intel news, and then closed, up 2 or something like that, or basically unchanged. So,
Interesting.
yeah, so it reversed. There,
Yeah, they fell as much as 5.9% yesterday.
Yeah, and then so that got it down to the low was 149. It's now trading at 157, and it opened yesterday like around 150. So it was basically it reversed the entire move.
Here it is for you, Nikki. I have it. CrowdStrike popped 13% on upbeat long-term guidance during their investor day. The cybersecurity company also announced a partnership with Salesforce and an AI security acquisition earlier this week. They issued better than expected long-term guidance, and cybersecurity has been a hot area. CRWD, let's get rowdy.
Yeah, it's back to highs here. It's amazing how things how price adjustments happen so quickly now. There's no that you have to see the news, hit the wire, and immediately get on your phone and buy the dip. And if you don't, you miss the entire thing. So,
But I have a job.
I know, I get it. I'm in the same boat.
It's hard. How about you, Mikey? You doing anything in the cybersecurity space?
Not as of now, but I do find it amusing that all of these, every chart I pull up, it's just every stock's at all-time highs except for AMD.
What a time to be alive.
Yeah,
Yes.
we're at peak euphoria is what we've been saying. Where Nick's getting texts where his friends like, I don't even open my phone unless the stock's up 15% a day.
Yeah.
Is that like the supermodel? I don't get out of bed for less than $10,000 a day.
Yes.
Yeah. So
Indeed.
that was a real text from one of my very, very smart and successful friends. I was gloating about a stock that I've been telling him to buy for quite some time, and he did, and it was up significantly yesterday. And he told me it's a good day, but if it's not 15% a day, it doesn't really look that great. And
what? Is the friendship over?
like, come on, man.
This is just where we're at.
Yeah.
Microsoft yesterday said they plan to build a second massive AI data center in Wisconsin, bringing their spending in the state to more than $7 billion. I don't want to throw shade at Wisconsin, but that seems like an over purchase, but whatever.
Hey, not if they have a Spotted Cow tap room.
Yeah. Taxes, man.
So the $4 billion project joins a $3.3 billion data center in Mount Pleasant in the southeastern corner of the state. What are you doing in Mr. Softy, Microsoft?
I got a friend that moved his production plant to Wisconsin. They do skincare stuff.
Ooh.
and moved it to Wisconsin. And, overnight, it was a very, very big add to the bottom line, just from a tax and
Sure.
wage and everything
That makes
change. I mean, from being in the middle of or just outside Chicago to, Wisconsin. So
That makes sense.
it's only like, 50, 60, 70 miles. Like, it's not that far, it's an hour away
Sure.
from the suburbs. So big move.
Love it. Yeah, I think
Again,
Microsoft and AMD are on my radar for bullish positions today.
Okay. Well,
Yeah.
there you go. Hey, Google is adding Gemini to its Chrome browser after they avoided an antitrust breakup. They're like, you know what? We're going to monopoly even harder now.
Hell yeah. Fraud season, baby. We got a couple more years. Grab your
Now it's
bag.
just like, well, they can do whatever they want to do. They're not going to get there's no consequences. So Google's like, you know what? We don't care if you don't want Gemini. It's just going to get straight up added to your browser. And what are you going to do? Use Microsoft?
No.
Google will integrate Gemini into its Chrome browser for users in the U.S. starting this week. Again, that's just weeks after a federal judge spared the company from a forced breakup. What are you doing in the Goog?
The Googie.
I don't have anything on in Google. I have a call spread that'll expire 30 points in the money today.
Yes.
Like,
We had an Iron Condor from I think Fast Market or maybe the YouTube chat. But yeah, that was just a face ripper. Nothing to do there.
Yeah.
Here's something interesting. The Pew Research Center did their most comprehensive survey to date on how Americans view AI, and Americans are much more concerned than they are excited about the increased use of AI. Far few larger shares say AI will erode than improve people's ability to think creatively and form meaningful relationships. But at the same time, a majority of Americans is open to letting AI assist them with day-to-day tasks. They say, it's great for certain things, but there are larger concerns. 74% of respondents said AI should play a role in stuff like weather forecasting, but other things, then it gets like a slippery slope. 53% of Americans believe AI will erode people's creativity, and 50% say that AI hurts users' ability to form meaningful relationships. What side do you guys fall on, friend or foe?
Why can't you just have a relationship with the AI?
That's what I'm saying. Yeah.
You can, and people are doing that.
Yeah. Bump that 50% up to like more like 80%.
Yeah.
I mean, the brains were already shut off with the invasion of TikTok and other social media.
Yeah.
Now you have AI. It's like you don't have to really think unless you're in a human required role. But I will say there are some nice features. So like let's say we have a meeting and we're recording the meeting and we get the transcript. Like, I love that you can just take the transcript, dump it into AI, and get a summary of the meeting.
Yeah, that's true. That's true.
So like stuff like that, I think it makes a ton of sense.
I've gotten some like blood work, just from a routine physical.
Oh,
and
yeah.
You can just drop your results into Chat GPT, and you're like, "Am I dying?"
But yeah, it'll be interesting. I mean, we are in AI euphoria season for sure, but 5 years from now, it'll be very interesting to see how our day-to-day operations through these different apps that we use and devices, how it will change. So yeah.
What are your thoughts, Nikki?
I think it'll be the same as every other tech innovation. We'll adapt as time goes on. I think, but I do think the accumulation of the TikTok, the AI, all that stuff, it has certainly hurt anything interaction based.
Yeah.
I mean, like, I feel that.
Wild.
I feel that.
Yeah.
But we'll adapt. I mean, things will change, and we'll adapt.
You can get more insights at pewresearch.org if you want to see the methodology and more in-depth aspects of the survey. Hey, Uber is trying drone delivery again. Uber is going to test using drones for Uber Eats deliveries in some U.S. markets by the end of the year. They have a new partnership with a startup called Flytrex. Here in Chicago, we're just now getting those Coco, those robots that
Those
I'm in
things
love
creep
with
me
the
out.
Coco.
Those creep me out. I don't get it.
I love them. They're so good.
I
Have you-
get anxiety for them because the people on the scooters that are going so fast. I'm like, don't hurt Coco.
Have you ever ordered anything from Coco? I've never. I've never ordered or heard of anybody ordering or even
I
how
just thought
to
sometimes
order.
if you use DoorDash, then that's how I'm an Uber Eats girly, and so it's always just a person in a.
And then so does it like just come to the outside of your
I guess.
address? Like it. So then you got.
And then
okay.
you have like the access code maybe on your phone. I don't know, but I saw one by our office as I was leaving yesterday.
Yeah.
So
I love them. I
My
wave
thing-
to them when they drive by me. I'm
No,
all
I
about
don't.
it.
I don't like it. It's weird. It's creepy. I don't like them. I don't.
what are you guys doing in Uber, if anything?
Now with these Uber things, are they going to have cameras? Because I feel like this could become like target practice. These days. Like it could be kind of fun. I mean, like, and how are they going to find you?
Well, don't shoot my burrito.
I know, but that could be fun. Like that could be an interesting, little moving target kind of thing.
What's Uber doing this morning?
Uber's been
high.
stuck at like mid 90s, 90 to 95 ish. It got up to 100 a couple days ago, but it there's some room to run on the upside if you think everything's going to all-time highs. You got about $5 or $6 here.
I put this story in because I thought maybe you guys could help me out because Tom and Bat, they don't know anything about this. I don't know anything about this because true fact about me, I cannot watch horror movies. Like I'm just a big scaredy cat. Like, can I go camping in the woods alone and listen to a murder podcast? Yes. Can I watch a scary movie? No. Does it make sense? Absolutely not. But the house from The Conjuring, have you guys seen The Conjuring?
Yes.
Okay, you've seen it, Nikki. Okay, so
Yes.
the house in The Conjuring is gonna be sold at auction on Halloween. I guess it's in Rhode Island, and it's like eight acres. And then so the new buyers could open the house up to the public. I just was like, why would you buy a haunted piece of property?
Yeah,
Don't like it.
that's a
Don't
little
like one bit.
creepy.
I did, but there is something that intrigues me. So I heard there's a movie that's a horror movie that 90% of people can't finish, where they have to turn it off, which to me is like, okay, I also don't watch horror movies, but that is intriguing to me because it's like a
So you're
challenge.
taking that as a challenge.
Yeah. But it might ruin me mentally.
No,
So
no,
that's
thank
always
you.
a risk.
Yeah.
No, thank you. Well, if you're interested, JJ Manning of JJ Manning Auctioneers will sell the house at 11 a.m. on October 31st. So it's already drawn significant interest from horror fans as well as builders and developers. I hope it doesn't become a Starbucks. I don't know.
Oh, that house is incredibly haunted. That's my favorite thing. Speaking of Wisconsin, like when you drive through some of the cornfields and you see some of these houses and you're just like, that is unquestionably haunted. Like
It's just like straight up haunted. Once when I was in New Orleans, just like bebopping around, I saw some listings in the French Quarter and it had like the realtor's name and the cell phone. And, at the top, sometimes it'll say, new roof or new whatever, just at the top of the realtor sign. But this one in New Orleans, it said, not haunted. I was like, I love you, New Orleans, but okay.
how to tell me it's haunted without telling me it's haunted.
Yeah.
In a crazy story yesterday, but I guess it has a happy ending. Basketball star Kevin Durant has regained access to the Bitcoin held in his Coinbase account. I guess during a wider discussion of Durant's business interests, the player's agent, Rich Kleiman, was on CNBC, and he said that Kevin Durant lost the ability to log into his Coinbase account that he opened 10 years ago.
It's amazing.
He's probably having a good day today.
Yeah, that's forced buy and hold.
Yeah. Yeah, that's one of Mikey's favorite lines. It's just like, do a password reset and have somebody like change your password so that you can't even touch it.
Yeah. Hey, it could work. It can work for sure. Especially if it's a longer term trade that you're trying to do.
Well, shout out to you, Katie. Just be careful with what you do with your winnings, I guess.
Mm-hmm.
And finally, today, in a very heartwarming human interest story, a 58-year-old man is going viral for trying out for the Division III Lycoming College football team, and he made the team as a 58-year-old freshman defensive lineman. He's fulfilling his dream of being a college football player. He in the 80s he quit high school football to do drugs. And then he worked for a city's streets and parks department for 33 years. But now he's going back to college, and he's a D3 defensive back at 58 years old. That's awesome.
I mean, look at this guy. He's an absolute unit.
Right?
I give it one game. But shout out to him. That's
Nikki,
great.
you get your back fixed. You could be a D3 defensive back.
No, that's what I'm saying is, I at 35, thought I was invincible. And, those things, they come and they get you.
That's so funny. So finally today for my viral video, every Friday, you know you love it, I like to do a little segment I like to call Will Tom Eat It, where I scour the internet for food for fat traders. Well, because it's still summer here, still warm, it's going to be like 86 degrees today, I thought this would be perfect for your game day menu, jalapeno popper meatballs. Watch this. Ooh.
Jalapeno popper meatballs need to be on your menu for game day. Start by putting the meatball mixture together with ground beef, bacon, cheese, jalapeno, onion, breadcrumbs, eggs, bacon, sweet and spicy, which is a new name, but it has the same great flavor. Scoop out the meat mixture, then flatten it down, add cream cheese, and roll it up into the meatball. Season them up with your favorite barbecue rub. The great thing about these is you can cook them in the oven or on the smoker. I'm smoking them at 225 for about 1 hour. Blaze them with bachans the last 15 minutes. Allow that sauce to tack up, then it's time to serve them up and dive right in. These smoked jalapeno.
Look at that. What do you think?
Yeah, they have those sauces at Costco.
Yeah, they're good.
Yeah,
I approve of that, but I think I would add actual sliced jalapeno inside, Like instead of having it in the meat.
Gardens pepper mix in there.
Yes, exactly. But I do approve of that, no doubt. I would eat that
recipe.
I would eat a lot of that.
Yeah, that looks really good.
Let's take a quick break. What's coming up next?
We got Confirm and Send, where you, the viewer, sent in a bunch of questions for us. We're going to take a little break and get to those. And then we've got Jamal coming on for This Week in Stocks. We got the opening bell, and then we got Fast Market. So stay tuned. We're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Hi, I'm Tony Batista, and I've been trading for more than 30 years. I've picked up quite a few shortcuts along the way. I call them trade hacks. Traders for all eternity have been looking for the reason to make a trade. Whether they were looking at charts or they were looking at fundamentals, they just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Mikey, my friend, we are back. We've got a quick little market update here before we get into those confirm and send questions. E-minis up about 9 right now. The NASDAQ up 30, the Dow up 50, and the Russell up 5. So everything very muted here before the market opens. It looks like there are a couple movers. Apple up a couple dollars this morning. You got NVIDIA up $1 and change. It looks like it's a rotation from the secondary tech stocks that we had absolutely mooning yesterday to the Mag 7 today. The Mag 7 was basically flat yesterday. Now it looks like a little rotation back into some of those names, at least here in the pre-market.
Yeah, this is how we grind higher into perpetuity. The rotation and influx. It's been crazy, but we did find some opportunities. I think AMD is something I'm going to get long today on the open.
All right.
And then Microsoft as well.
Well, we got fast market for a bunch of trades too, so be ready for that. Let's get into those questions. We'll get into those quick, and then we'll bring on Jamal for this week in stocks.
Lovely.
So let's do it.
All right. When you're setting up a strangle or iron condor at the expected move, do you use the expected move dotted line on the platform, or do you use the deltas? If you use the dotted line, sometimes the deltas are not equal on the puts and calls because of skew. Does that matter to you, or do you not care about being totally delta neutral? Good question.
Yeah, it's a good question. The dotted lines assume a normal distribution. So as we know with markets, they're typically not normally distributed in terms of the skew, as Mikey mentioned. So a lot of stocks have upside skew, like a Tesla or an NVIDIA or some of these high-flying, INQ, BE, which is ripping my face off. So those will have upside skew, and then you typically see downside skew in something like, an ETF like SPY or the NASDAQ or something like that. So I go to Delta. The dotted lines are fun to look at. It's a nice visual, but at the end of the day, I'm looking at Delta.
Yeah. And you can, I usually keep mine symmetrical just to make sure my risk is equal on both sides and my buying power isn't increased. So I kind of mess around with it, but I'm shooting to get a credit between 1/3 the width and 50% of the width. So if I'm covering that, then I'm good to go.
Well said. Next one, please. So is it more important to monitor my extrinsic value premium in my portfolio or my theta?
They're both somewhat related, but I think theta is the least important Greek in terms of what you will see from a P&L standpoint day to day. Extrinsic value can ebb and flow, but I would say It depends on your strategy, but if you have short premium strategies where you have a defined profit potential and a defined or undefined risk potential, if you're getting closer and closer to 50%, 60%, 70% of your max profit, it's more important for me to see that and be able to take it off versus like look at a theta number or an extrinsic value number. So I think that is more important than monitoring extrinsic premium or theta.
Yeah.
But if I were to pick one, I would say extrinsic value relative to what you collected up front for a short premium trade, which is what I'm basically getting at. Theta isn't something I look at all, really.
Totally agree. Well said.
I live in a different country and US markets are open when I'm asleep. Do you think it's possible to be an active trader if I can only check my positions once a day?
Oh.
Certainly.
I mean, you're obviously going to have major hurdles to deal with. I mean, I think you have, and obviously it depends on how much capital you're dealing with here too. But, defining risk is probably a must just based on, the binary risk that you have, being that, your night is my day when markets are open. So, you're not going to be as in tune with the markets day to day and minute to minute. So I would say defining risk, keeping positions small, using stuff that like GTC orders and stop loss orders are probably a positive for you. But, I would be lying if I said it would be just as easy as what as active trading during my normal day. It's going to be a lot harder.
Yeah. It's definitely an adjustment, but I wouldn't say it's impossible, specifically because of the bracket order system we have. I just put a link in the YouTube chat to see more on that, but I would just be putting bracket orders on everything.
Yes.
Like literally every trade. And then that way you have a profit target set there, you have a stop loss set, and if you don't want the stop loss or you want to make the stop loss a little wider, you can adjust that in the bracket order entry. So bracket orders help you manage winners and losers while you are asleep. So I think that's important.
Yep.
Do you use zero-day trades on days like FOMC announcements? Yeah, we do.
Yeah, we had some good ones. I mean, these sort of binary events, they give you a little bit of a pop and vol. So, there's potentially more opportunity there into those events. So, yeah.
Mm-hmm. Yeah. I have one on. I did one on the downside, the 660, 655, which was working out initially. And then we got the face ripper recovery. But yeah, we do that because the implied volatility is there, especially in the 0-day or 1-day options. And then you can buy a 5-day option, like a Monday option, which is what I did. But yeah, you can totally do it if you believe that the market will be inside of the implied range for sure.
Yep. Next one, please. So where do you get the inputs informing your market opinion? It's a good question.
So for overall market opinion, I'm a millennial. So I believe that dips will be bought. The market will go up and to the right over time. But
I don't know why that's a millennial thing. If you look at any time frame, it generally goes up. Maybe not day to day, month to month, week to week, but generally we go higher.
Yeah. I think there's a difference in today's market than there was 10 years ago. 10 years ago, it was much more slow. There were more bearish periods. These days, everything is digested, it feels like pretty instantly. Yeah. And that's why we're getting these V-type moves. But from an individual stock basis, I like to look at where the stock has been, where it is now. I'm personally more comfortable taking bullish positions than bearish positions. If I'm doing bearish positions, it's usually a hedge against an overall portfolio. I look at implied volatility to help me drive my decision making for strategy. And the stock price or ETF price drives my intention to go undefined risk or defined risk. So those 3 or 4 things are really what I look at every single day. And those things help drive my decision making.
Yeah. I think to add, I would put volatility in there. I mean, looking at volatility in the products themselves as well as the market as a whole can kind of tell you just, what the market is seeing in terms of risk and where that risk is. I think also just like the day-to-day watching of futures and all of the futures as just context to what the market is doing helps build assumptions in the short term. I mean, the macro long-term ideas are just, opinions. And so I don't, I try to look at it day to day and just find opportunities, less so than, make these extravagant market opinions. Like I don't have an opinion on the market as a whole here. Like I look at individual stocks and I try to find stuff that's cheap, try to find stuff that looks expensive, try to find things that, have high implied volatility that maybe, look like they've kind of found where their price, their short-term price is at and play it neutral. I mean, I look at just individual names and try to find opportunities there and less attached to the, projections out in time.
Indeed.
Cool. One more, I think. Last one. So on Wednesday, the Fed cut rates and indicated that there are 2 more cuts likely to come. On Thursday, the bond market was down, pushing rates higher. Do you think that means anything, or was it just profit taking?
I don't think it, I mean, it certainly means something when you see a market move in a way that you may not expect. But at the same time, if you look at bonds previous to the announcement, they were ripping in line with what we were expecting. So I think it could be, you could say it was profit taking. You could say it was maybe the market was expecting a little more narrative-based sentiment that they didn't get, so you saw the small sell-off. But either way, bonds are significantly higher than where they were a month ago. So
yeah,
I think there's the announcement, there's the probability of the cut. We get the cut, but I think the market knew that we would get a cut, and it was more about the future-looking sentiment and the words that were said in the press conference. But everything feels like it was priced in pretty well. Like markets are at all-time highs, yada, yada, yada. Like that's what you would expect when you're in a rate cut season. So I think we'll get the chop and we'll get the surprises, but I feel like the market priced this in pretty well.
Agreed. Good stuff.
Lovely.
Perfect. Well, that's it for Confirm and Send. We're going to take a quick little 90-second break, come back with Jamal for This Week in Stocks, and then we got the opening bell and fast market, so you're not going to want to miss those. Stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis, and it's a position you can manage or push forward in time forever if your trade size is small enough.
Mikey, we are back, my friend. We've got E-minis up 13. They're at the high of the session here, but who cares about that because we have Jamal in the house with us today for This Week in Stocks. Good morning, Jamal.
Good morning, fellas. What's going on? You watched the game last night?
We did. It was a surprisingly good game.
Yeah, I didn't get a chance to see all of it. I saw some of it, but looked like I was a little annoyed because one of my fantasy leagues I got the Buffalo D, and I'm like, seriously, like these guys? But they were clearly fighting. Miami was fighting for their life to not go 0-3, and didn't work out so well.
Yeah, it was the typical Tua experience.
I mean, that pick at the end was just disgusting. But that guy cost him the game. The guy who roughed the kicker.
Oh, I didn't see it.
Like, come on. It was they punted it away. The game was basically tied. The game was tied, right? Yeah. And Buffalo punted away on 4th and 2, and a Miami guy just destroyed the kicker. 15-yard penalty, first down. They scored a touchdown. Game over.
Yeah.
I mean, isn't that what happens when you're just like that team? You're just like, there's something that happens where it goes wrong and everybody knows it's coming, and it does.
It's almost like the Chicago Bears.
Oh, jeez.
I mean, I don't know if it's worse, if the Dolphins are worse than the Bears. I mean,
they're way worse. Tua is done. He looked so bad.
Yeah, they got some. Yeah, it's bad. I don't know what happened. It's crazy how you can go from the hottest offense in the league to now. I mean, it's over. They're about to break that thing up.
Oh yeah, for sure.
I mean, Tua's arm. He was throwing these air balls that were the receivers were stopped for 3 seconds, and then defenders just swarmed them, and it was like a jump ball, as opposed to just rockets straight to your chest. You could tell his arm was not there anymore.
Yeah,
I mean, is it time to find somebody who owns Tyreek Hill in fantasy and trade for him?
Probably. I feel like he's got to be shipped out somewhere.
Yeah, he will be probably soon. I would imagine.
I would think so.
He's gonna make a lot of noise this week.
Yeah, I would see the Raiders could be interesting. They need a wide receiver. Even the Bills, but they're not gonna trade it. They're not gonna do it in division. And he's got to go somewhere warm. He's not going back to the cold.
Not yet.
After Miami, you got to
Tampa Bay.
Tampa Bay, yeah, you got the young rookie. You got Mike Evans, Godwin. Come on.
Well, you know what, though? I will say, if he wants to win, if he went to a cold weather spot, as I'm thinking about the different teams and quarterbacks, like that's how it happens, right? You may not want to go there, but if winning is done there, you should probably go there.
Green Bay?
I didn't want to say it out loud, but
if they did that, I think that would be. I mean, the Bears are already done. Like it's already over. I've buried them. I'm actually a Buffalo Bills fan now. I've given up my Bears fandom. We're now on the Bills Mafia. So send them. Send Tyreek to Green Bay. No problem.
No,
it's okay.
No. I hope you guys aren't listening to us, Green Bay. Let's pull up some slides. Let's talk about the week a little bit.
Awesome.
It's been an interesting set of weeks we've had here, and of course we broke more records over the last couple of days. Dow, Nasdaq, as all of them actually, I think, hit new highs. Even the Russell. So records are made to be broken.
Yes.
There should be an S on there. Don't worry about it. You don't see it. Let's move to the next slide.
Sorry, it's okay.
Fed was the big thing of the week. Of course, they delivered on their 25 basis point cut, and we're expecting a cut at each of the next couple of meetings for October and December. So look out, Fed cuts are coming. Tesla made a big move, started last Friday actually, carried on into Monday. There's talk of Elon coming back to the company with more of his time, and he bought $1 billion worth of shares. Stock absolutely took off, and it's back to positive year to date. ECB, Bank of England, Bank of Japan, Bank of Canada all had rate decisions this week. Bank of Canada was the only one to cut, though, 25 basis points. ECB, they got a lot going on. So does England in inflation. They have the same issues as us, and so they're kind of holding off. But they started cutting, obviously, if you remember, before we did. So they're kind of having to stay pat right now. NVIDIA, this was huge news, and it caused a lot of different stocks to move yesterday, but they bought a $5 billion stake in Intel. So if you're keeping track, that's 3 different people now with a stake in Intel. The U.S. government, SoftBank is another one of them, and then now Intel with about a 4% stake in, NVIDIA now with a 4% stake in Intel. And they're also going to jointly develop chips and AI data centers for data centers and PCs. And then VIX, it had somewhat of a complicated week. We saw some bumps in VIX throughout the week. Like early in the week, we saw a bump. Everybody was talking about VIX up, stock up. You could also say it was just kind of the weekend sort of coming back into volatility. And then a little bump into Wednesday as well. But it's still fairly low. And we still have contango. And VVIX is hanging around that, close to that 100 level, which means there's a lot of options activity going on in VIX.
Yeah, the VIX was interesting into the move. We had that 40 or 50 point down move into Jay Powell's speech, like the start of the speech, and volatility was contracting into that move. So that was kind of a, in hindsight, but also just intuitively, it kind of told you, all right, this is kind of a nothing move, despite the downside that we were seeing there. So that was interesting. But yeah, the Tesla move was another one that was like all of a sudden it's back at mid 400s. These things move so quick. It's again, we were talking about it earlier. You get 1 or 2 days to get on board before it's over.
Basically.
So crazy. 420 secured.
Yeah.
For the 3rd time.
420.
Yeah.
420.69 or something.
As prophesized, I think.
He will probably tweet that today.
He did. He tweeted it when we hit there the other day.
Perfect.
That's great. Let's move to the next slide. I got a good chart for you guys here. It looks a little busy, but I'll break it down. It's essentially just looking at the percentage of trading days with VIX above 20%, right? So going back to 1990, it's funny. I know the VIX people can't stand me to do stuff about VIX and percentage, but I don't really care. The interesting thing here is like looking at the average percentage, right? If you take an average of this over the last, since 1991, you could say an average is 37%, right? Certainly makes sense for the days where it was mostly above 20 for 90% of the year in 1999, 2001, 2009, and 2022. VIX was above 20 for more than 90% of those years. Right now, we're sitting at about 29% of the year. And again, we're only up to September, but 29% of the year so far has seen a VIX above 20. And that's not nothing. I mean, when you think about some of the more boring years, oh 04, oh 05, oh 06 were kind of quiet. 13, 14 were kind of quiet. So, those are the real quiet years. 29% means we've been moving around a lot. And you talk about like names. I mean, when I think about this year, there's been a lot of things moving despite low VIX. I mean, you just mentioned how the huge move in Tesla. We've seen huge moves in some of the Mag 7 names at times. We've seen these Oklos of the world. We've seen gold and silver moving. Like, there's a lot of different things happening. Even though it seems like it's a quiet year, it's not like 2017 where basically we had hardly any volatility.
That was one of the years I reference in terms of like I never want that to come back again. Where every day the market was open and it was a 5-point or 10-point intraday range. Nothing moved until the last 10 minutes in the day. I mean, we were celebrating 10, 20 tick moves in the VIX. Going from 14 or 12 to 12.20 was like a pop in volatility. I don't want that anymore.
Can't have it. But yeah, I think it speaks to the speed of the market recoveries that we've seen over the last couple of years, resulting in lower VIX averages. Even though we get the VIX pops, they don't last nearly as long as 10 years ago.
Yeah, it's true. 2017 is the first time I heard of an iron condor. Actually, I mean, I kind of knew about it from options theory, but you don't trade it every day. You don't hear about it. And you work at a firm, you don't trade iron condors. And then in 2017, I was hearing about how many big firms who didn't really trade a whole lot of options. Like when I talk firms, I mean almost fund managers, and they were doing a lot of iron condors in SPX because it just wasn't moving.
It was free money.
Yeah, it was free money. I mean, so they were doing it until 2018 came and it got a little volatile, and it was like, oh my God, we shouldn't do these anymore.
That's a perfect example of markets. Now everybody's like, oh, put spreads, short puts, free money every day. Yep.
Yep. Let's move to the next slide. Speaking of moving stocks, these quantum computing stocks have been on a move this year, but they have really ripped in the past week. You guys playing any of these?
I now have some short delta in INQ. Into this move, I had a call ratio that I thought was as wide as could ever be even come into play, and then the stock rips $15 in 3 sessions, and all of a sudden you're at the money. So these things, they got some skew to them and some vol for sure.
Yeah, we've traded IonQ, but I thankfully did not have a neutral or bearish position on. But maybe now's the time to throw that.
Now's the time. I was about to say, I just put on a strangle in IonQ yesterday.
Yeah, you got the 95 strike calls 30 days out or 28 days out are trading at $1.70. So it's $30 out of money. It's a 50% move. I mean, there's some premium here, no doubt.
It's jacked. Yeah, they're kind of jacked. So yeah, I just put on some short ball in there. We'll see how it goes. But yeah, they've been crazy. These things have been moving.
Yeah.
Jeez. Let's move to the next slide. So of course we had Fed meeting. Some weird stuff always happens after these Fed meetings. I know, like, I was gearing up for different trades ahead of it the day before, and I put on some short gold, and somebody's like, well, they're cutting rates. Gold's going to take off. Didn't happen, right? Like, we see some weird stuff. Same thing with treasury yields, right? Like, initially, a bunch of them dropped. And then yesterday, the further out of the curve, 10 and 30s, again, is not really affected by the cut, but it's just interesting to watch. These turned around yesterday, and these got a little bit bid looking at the 10 and 30-year yields. So, it's an interesting environment right now where you got the short term coming in, the long term's kind of getting bid. There's a lot going on in yields.
Yeah. No free money trade. Everybody was talking about the weakness in the dollar, and the dollar ripped faces. So it's always, there's always little surprises underneath the hood. So
absolutely. Let's move to the last slide. Oklo, another one of the stocks that have moved around quite a bit this week, following a string of positive news for the nuclear sector there. StubHub IPO, another IPO. We're at more all-time highs. More IPOs coming, man. StubHub had their IPO amidst the weak polarizing practice of ticket sales. Oracle, huge move more recently on earnings, and then it's still kind of been hanging around that 300 plus level. They supposedly might be the beneficiary of that deal between U.S. and China. Oracle Vol is remaining bid. I'm short Vol in there too, but I am a little bit nervous that they keep talking about this deal. I'm like, is this stock going to take off even more? Like, what's the deal? We'll see. Right? I mean, the ball's so big.
Yeah. Yeah.
And then Trump and Xi are speaking today on a wide range of issues. September quadruple expiration. I heard it's 3 times bigger than March and June. So it's supposed to be a big one. We'll see what the kind of market moves we get today. And then research, market measure, a smarter look at beta weighted delta. Check it out.
Beautiful. What you thinking for the rest of the day? You think it's a chop fest for most of the day going into expiration, Jamal?
I think it's a chop fest. What I would like to see is a drop of like 50 to 60 handles, but I don't know if that happens. I don't know.
Oh, God. Come on. Those don't exist anymore.
No.
Yeah.
No. Not for more than 2 minutes.
Hey, they tried on Wednesday, and then they're like, oh, let's not do this. How about we just don't do this?
Yeah. Amazing. Good stuff. Thank you, Jamal. We're going to take a quick little 90-second break and come back for the opening bell. But you're going to get more Jamal at 9 o'clock. So stay tuned for that. Jamal's going to come on and hang with Mikey for the calls and the market measure. We're going to take a quick little 90-second break. You're listening to Tasty Live. Opening bell is next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights. and some life taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Back, my friend, going into the opening bell here. Let's just jump into the platform right here because we got about a minute until the market opens. E-minis, 18 points to the upside, the high of the session here. We've had a very tight intraday range into the overnight session, 10 points up, 10 points down. We've now broken out of that at the high of the session, 67.09 right now. The NASDAQ up 74. You got the Dow up 111 and the Russell up 5, relatively inside move here to start the session. Oil down 50 cents, 62.76. Volatility futures down 10 ticks. Not much movement there. You got the bonds down 10 as well. 116.17 right now. Gold taking a little bit of a breather here. It's only up 9. Silver up 22 cents. Bitcoin moving a little bit as well, down 1,300 on the futures. Spot down 600 and change. You got ETH down $32. And there is the bell. What perfect timing. And we're off. E-mini's only up 11 now, selling off a tiny bit.
Interesting. A little less green. Is that a sell-off? Is that what we're calling a sell-off now?
It's I guess so. Is that the sentiment now? The 5 or 6 point dip in the market is now our buying opportunity.
I think it might be.
Sad state of affairs.
I would love to see a 30, 40 point sell-off for this XSP short-term trade I put on for the Fed meeting. I would also love to see gold down 100 points in the next week.
Yes. It took a little bit of a breather.
It did, but I need more.
You gotta be happy about that.
I am. But yeah, right now, biggest mover in this account on the open, CRM up 240. I have a leftover long call from earnings at 260 in October, so getting closer.
Yeah.
But yeah, give us something, market.
Yes. Well, we're going to have something because we have fast market after this. So we're going to have a lot of trades to put on. I know some people were trading at FedEx 230 and change right now, up $3, well inside the expected move. I think when we were looking at it, it was a $17, $18, $19 expected move, something like that. So well inside that move. It did market like 240 in the overnight session. So yeah, a little bit of a pullback there. E-minis 6,700. I think that's the pin for the day. I think you have some chop back and forth, but ultimately that's the number for the day.
That's fair.
That's what it feels like here. Looking at some other names here, just jumping into the platform, we can look at the S&P 100 here. Looks like it's a relatively green day. You got Tesla up $8 and change. Apple was one of the bigger movers of the morning session. It's up 4 and change here. You got Meta strong. Again, we're having that kind of reverse rotation. Yesterday, we had the rotation out of the Mag 7 and into the other stuff. Now we're going from other stuff back to Mag 7 here. On the downside, AVGO down 7 and change. You got your AMD down $1 and change here. Nike's on the list. It's a pretty mixed bag. Goldman Sachs down $2, but it's at 800 now. I mean, that thing's gone from 400 to 800. It seems like it's kind of a nothing market here. I won't say nothing burger. I don't want the people in the chat to start drinking this early. I know that was a on last call last week that we had some drinking when I said nothing burger.
Hey, it's fair. Something we had from the morning segment, I was talking about getting long AMD, getting long Google. So if we don't have those in trade ideas, I would like to place those trades.
Okay, I like that. Getting on Google as well. Did you just
sorry,
say
no, Microsoft.
AMD and Microsoft. Okay, so AMD right now down $1 and change. Microsoft up $2. So very much an inside session there.
Definitely. Yeah, Microsoft probably will be a calendar spread. AMD will probably be a diagonal spread based on their price points.
Is today an SPX 0-day trade? I have that. Oh, I do have one on. I put this on yesterday.
Feels like it.
I forgot about this. Let's see what this is marked at. So I put this on yesterday. Do I take this off or kind of recenter it? I have the 6670, 6680, the 6600, 6590. I did this at 310 yesterday. It's now marked at 230. So it's about an 80-cent winner. Do I keep it or let it ride?
You could. I just put one on.
Okay.
The 6625, 6665 shorts. Defined risk 5 points wide, so basically just the orange.
So you're
bar
inside.
Yeah,
I like that. All right.
I just got filled at 230, so I think it makes sense. I think we chop here, so I'm going to play for that.
Yes, there you go. Some of the other movers today, just looking at the high option volume list. On the downside, you have Lennar as well. That was an earnings report after the close. Micron down $5 and change. So some of the chip stocks kind of taking a breather here, it looks like. To the upside, you have Oklo up another $6. SMR, HIMS is moving. They're coming for the pigs today. They're definitely moving some of the piggy stocks.
Yeah, it is a sight to see. We are selling off though.
Shh.
We might go from green to red.
E-mini's only up 3 right here. We're below the 6,700 mark. A shocking development.
Indeed.
To see a 10-point sell-off.
Could we get a red day? Is it possible? After all the euphoria, could we get it?
Yeah, you got volatility basically unchanged here. It's hard. On such a big expiration, a quarterly expiration. I know Jamal mentioned it was one of, if not the biggest. They typically get bigger every quarter, so I don't take that. I take that stat as with a grain of salt, just because market gets bigger, so options expirations also get bigger. But triple witching, a lot of volume I expect today, a lot of rebalancing, all that stuff. So I don't expect there to be big moves in either direction here, but we'll see.
Yeah, I hear you. We'll see what happens, but yeah, we're playing for a chop fest. Maybe we'll be wrong, but I don't think we will be.
Yes, Russell actually going red here, down $4 and change. You got the Dow down 36 as well. I wonder if Nvidia is moving lower. Basically unchanged here. Bitcoin a little bit lower. It just feels more rotation-y.
Yeah.
My word for today.
Yeah.
Meta up a handful, Tesla up a handful, Apple up a handful. And then you got Microsoft basically unchanged. It's up $3 now. So we'll see. We'll see how this goes. I would love to see a little bit of a downside. A little bit downside. Tiny bit.
I mean, we gotta have some kind of two-sided action at some point, right?
Yeah, you got to get a chance to buy at lower prices someday.
Yeah.
I mean, Jesus.
It is wild.
So we'll see. E-mini's up 5 right now. You want to take a quick little 90-second break, come back for fast market? We got all these trade ideas. I need them.
Let's do it.
Awesome. We're going to take a quick little 90-second break, come back with fast market. Your trade ideas, we're going to be putting out a bunch of trades, so stay tuned for that. You're listening to Taste Live. We'll see you in a couple seconds here.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it, say it.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Mikey, we are back, my friend, for the most important segment of the day, Fast Market. Give me the music. Fast Market. Trade ideas from you, the viewer. Let's get into it. Give me some good stuff. Starbucks, S-Bucks, coming from Roberto in Chicago, Southside, local.
Hey, shout out Jackson Park, baby.
Yeah, our favorite spot.
Mm-hmm.
81, my low round.
Ooh.
I had an eagle there too. Come on, give me that.
Indeed.
Remember that when I drove the green?
Yeah.
I think that was 10.
It was.
Yeah.
Proud of you.
Thank you, sir. Thank you. Starbucks, S-Bucks. I hate both the stock and their products. Awesome. But I believe Tom is bullish on the coffee industry. He has to be by default because he owns a coffee shop. Thinking November call Broken Wing Butterfly, selling to open 2 of the 85s, buying the 90, buying the 75. So you're doing the 75 so this is kind of a skewed Broken Wing Butterfly. You're buying the 75, selling 2 of the 85s, and then buying 1 of the 90s. So this is tail bullish on Starbucks. This is kind of a funky setup for us here.
Yeah, it's kind of like a like a diagonal spread.
Yeah, or like a Jade Lizard. I mean, this is kind of Jade Lizard-y. It's neutral. Yeah. It's not really bullish. I'll take your bullish stance. I'm going to do a diagonal spread. I'm going to do the 85. Oh, there's no volume.
I mean, how low can the Starbuck go?
I'm going to do the
age-old question.
I'm going to do this like almost like a sort of calendar spread. I'm going to buy the 80 call, sell the 85 in October, the 80 in November. So I'm going to do this at $4.74. So I'm with you on direction. Going to change the strikes up a little bit here. Let's see if I can get filled here. 478. Come on. There we go. 478. So calendar / diagonal type setup in Starbucks. I'm with you, Roberto, from Chicago South Side. Shout out Chicago.
Indeed. Cool. Love it. What do we got next? Big boy iron fly instead of an iron condor in SPX. Neutral to $5 bullish, $20 wings, targeting 10% max profit from Brad in Flagstaff, Arizona. Okay.
You already kind of got this one, right?
Yeah, I did this in the 0 day.
Mm-hmm.
So I'm not sure if this was a 0 day or a longer duration trade, but yeah, I like it. I think if you're doing 0 day, I like it as a chop play. It feels right at the very least. But yeah, I'm in on this with a similar setup, a chicken iron condor, which will feel like an iron fly, where I'm going to have to wait until closer to expiration today to get a good chunk of this. But yeah, I'm in spirit, we'll say.
Very nice. I closed out of my SPX Iron Condor that I did yesterday on the close into today. I took about 100 and something out of it. So about 30% of the max profit. So I closed out of that, but I like the trade. If you don't have someone on, I'm with you here, but I'm going to pass on this as well.
Fair enough.
APP, you know me, the stock that never goes down. So this is Sarah and Snoqualmie.
It's sounds about right.
I'm gonna go with that. November expiration. We're going to the expected move on the call side. $10 wide. The markets here stink. I mean, there is some upside skew in this stock like I've never seen before. I mean, in November, don't even look right now. Stock's at 600. What do you think the 900 calls trade at? Don't look.
$2.
10.
Yeah.
They're at 10. That's a 50% move in 60 days after the stock's already been up 50%.
This is a stunk for sure. What is this? 14 straight days of green?
It's just up only here. So you want to go $10 wide. I'm going to go a little shorter term because I don't want to be holding this that long. I'm going to go to October. I'm going to go to around the expected move, 700. So we're going to go 700, 710. I'm going to try and get $2.50 out of this.
Okay.
I don't think I'm going to get it. I'm going to let that work. Market's stinking here. They're $2 wide. The stock moves $5 a clip. But it did get included in the S&P 500. So that has been some of the run up that you've seen. Maybe you get a little bit of a, it's finally done. All the buying is finally done. Maybe you get a little bit of a pullback, but who knows?
Yeah.
Pullback is a oxymoron in this market.
It is wild. I mean, this stock is absolutely bananas. Up 16 today. Just craziness.
Yeah. I mean, the stock was 100 a year ago.
But I like the idea. Considering the premium that's on the upside, you just got to find the market that's more narrow and more liquid, I think.
Yep. Cool.
I like it, though.
I'm going to try. If I get filled, you'll see it on the file page.
Cool. AMD should follow NVIDIA, and it's at a better price level. IVR is okay. Maybe a long performance covered call. Jan 150, sell the October 165 for a 1677 debit from Jake in Bozeman, Montana. Shout out Big Sky.
There you go.
Great airport also.
What makes it so great?
I mean, you look outside and you're just surrounded by mountains. It's like one of those 007 airports where you're flying into a valley and the landing strip is extremely narrow and short. And then and you don't go to a gate. You actually walk outside and you're on the pavement. So it's one of those places. Feels great. But yes, I will definitely do this. So, the Jan 150 long term. So I'm just going to go to November. So the implied volatility boosts in November. That's where the implied earnings date will be. Somewhere in the November monthly cycle will encompass the earnings announcement. So I'm just going to go to the 160 in November. And then I'm going to sell the 170 against it.
Okay.
For $9. Actually, I'm going to do the 175. I'm going to give up some premium and get wider. So I'm going to do the 160, 175, 15 points wide for a $10 debit. Let's see if I can get filled here.
There you go. I did the...
Bada bing.
I did the 60-75. So I went to November, bought the 60, sold the 75 against it, 10.21.
Cool. I'm in.
All right. So we're in, Jake. We're in with you.
Love it.
Very nice. Next one, please. Coin looking for a gap fill around 370 before October 1st. Debbie in Derby, Alabama, but you almost had the 3Ds in there. Okay, coin. It's had a really nice move here. You're looking for October 1st. That's 14 days from now. Here's what I'm going to do. I'm going to play for this, but I'm going to do this a little differently. You think we get 370. I'm going to try and do a broken wing butterfly. I'm going to do the 355, 360 for my long spread. And then I'm going to sell the 370, 380 against it. It's marked at like a small credit. The markets are a little bit wide. So let's see if I can even get filled here. I'm probably going to have to take this down. I'm going to do this for a small credit. I'm going to do it in the October 3rd weekly for your October 1st price target. Oh, there we go. All right. So I got filled at an 11-cent credit. So I'm long the 355, 360 call spread, short the 370, 380 call spread against it in the October 3rd expiration for a small credit. I am with you. E-minis up 16 high of the session. The dip has been bought.
The dip that was still green.
Yes. But that is a dip. That's as much as you can get, Mike.
Yeah. I'm aware. I'm aware. Cool. Good stuff. What else we got here? Delta Airlines, huh? Decent IVR. Looking at a neutral strangle in November. 52.5 put, 70 call from Ryan in Bend, Oregon.
Okay.
Great Pinot Noir in Oregon.
Look at you.
Well, there's a fun fact. So Oregon and Washington, they're harsh climates, and a Pinot Noir grape has thin skin. So only the strongest survive, and you get a great Pinot Noir from those regions. So if you're at a grocery store and you're in a pinch, getting a Pinot Noir from the Pacific Northwest is an easy way to impress your
What a cultured young man you are. Wow.
Hey, I've had some wine in my day.
Yeah.
No.
There you go. Okay.
Let's take a look at this here. So November, 52.5, 70. So I like the idea. They do have earnings coming up in 2 weeks. So I think, and it's in the middle of its range, kind of on the upper end of its range. I think what I'll do is I'll come back to this for earnings, just because earnings, strangle with earnings looming will prevent the premium from coming out of it the same way, or to not the same degree as if it didn't have earnings. You would expect to get more premium out of it if this product did not have earnings. So I'm going to wait until earnings, but I'll come back to this and place a trade for earnings.
Very nice. I already have a strangle on in Delta in the October expiration. I'm short the 52 and a half, 67 and a half. I did it at 208. It's marked at like 175. So I'm with you, but already have a position on.
Cool.
Next one, please. CoreWeave. Okay, by the time you're reading this, CoreWeave is on its way to and through 125 onto 147 really fast. They're guaranteeing NVIDIA purchases through the new deal. Okay, 147 comes in a few days, followed by all-time highs. Richard in Chicago, we got all the Chicago boys coming out today. CoreWeave is at 126, as foretold by Richard. Your crystal ball, please share with the rest of the team here, or at least you are here. 147, okay, let's do it. So we're gonna do a November, October call diagonal spread. We're gonna buy the 145 in November. We're gonna sell the 155 in October at 895. On our way, there we go, and it's in. On our way to 147 would be a fantastic trade.
I'm in too. I like the narrative.
I mean, he got the move correct. The first part correct. So why fade him now?
Yeah.
So
I mean, it's a narrative clean as the air.
Yes.
Love it. Thank you, Richard. Cool. What else we got here? Intel. Slightly bullish on Intel because I think its run up just started. This is just the beginning. Thinking of selling a 30-35 strangle in November to take advantage of today's IV spike from Brad in Flagstaff, Arizona. Okay. 30-35 strangle.
So leaning bullish, a bullish skewed strangle here.
Let's see.
Oof.
Let's take a little look here.
And there's some skew here too.
What if we do a stupid on this?
Oh.
I love a good stupid. And this is a cheap stock.
Yeah.
So
I have a butterfly that's right at the money in October. So I'm kind of neutral. I don't know if I want to put a bullish trade on, but I'm going to add another call ratio spread here on top of my butterfly.
I'm definitely gonna do the stupid here. So okay. I am going to sell the 30 strike short put in November, right at the money.
Okay.
And I'm going to buy the 30-35 call spread in October for $1.75 credit.
Okay.
There you go, filled.
I like it.
So instead of having risk to the upside, I'm just going to sell a longer term short put to finance the entire cost and more of the call debit spread, the 30-35 to the upside in October.
Beautiful.
Filled at $1.74, we're in. Small product, and I don't mind rolling this if it doesn't work out.
Very nice. All right, next one, CELH. I have not traded this stock in quite some time. Up, shockingly, it's a double and a half from where it was a couple months ago. So November monthly, the 50-45 put spread for credit just shy of 1/3 the width of strikes. Maybe put it in for a little better credit and hope for another story of alcohol accidentally ending up in their drinks. Dave in Chicago, more Chicago boys.
Love it.
I love it.
I can only hope that our boy James held on to his position in Celsius.
Yeah, that's right.
Because I remember he was in it, feeling the pain in the 30 to 25 range. And now, if he's still there, that pain has quickly shifted to euphoria, like the rest of the market.
Yeah. I'm going to do the 50-60 strangle.
Okay.
$5 on either side. Neutral. It's got an IV rank at 20. I did it in October. So I'm not playing for more upside here. I'm playing for a little bit of chop. Short premium.
Fair.
Last one here. Let's do it.
The last dance. Tesla. Bearish. November. Sell Tesla November expected move call spread $10 wide from Sarah in North Bend, Washington. Pinot Noir, I'm telling you. I can get behind this. November. So we are in the earnings cycle if we sell something in November, but it's only risk on one side, so it's less important. It matters less because you can get paid on delta versus a vol crush. So expected move $10 wide call spread. So is that like the 500, 510 for $2? Something like that.
I'm going to do. Oh, we're slinging them. I'll play. I don't know if I want to be long or short here, so I'm going with a broken wing butterfly. I'm doing kind of similar to what I did in Intel and Coinbase here. I'm long the 460, 470 call spread in the October. Oh, shoot, I used the wrong expiration. Well, I'm in the October 10th right now. I'm going to roll this to the October 17th. And then I sold a 20-point wide call spread against it. I did the whole package at 22 cents. I'm going to try and fix this one because this is no bueno. And by fix it, I mean I'm going to close this for a small loss and then start a new one.
There you go.
In the right expiration. Fat fingered it.
Hey, it happens to the best of us.
Yeah.
Cool. So yeah, we got a bunch of stuff in.
Yes.
I'm in on the AMD call diagonal, long the 160 in November, short the 175 October. CoreWeave, long the 145 in November, short the 155 in October. Call diagonal spread, and then Intel, the stupid, sold the 30 put in November, bought the 30-35 call spread in October for $1.74 credit. Ding, ding, ding.
Very nice. Very nice. Good stuff. All right, we're going to take a quick little 90-second break and come back. Jamal's going to take my spot for the market measure and the phone calls later today. Hit up those phone lines, talk to the boys there. We're going to take a quick little 90-second break. You're listening to Tasty Live Market Measure coming up next.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options.
you'd use up much more buying power and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada
face,
yada
big
yada
bang,
yada
blah,
yada
blah,
yada.
blah.
Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jermal, and boy, do we have a market measures for you. Quick market update. E-minis unchanged basically from the open, up 14 points, Nasdaq up 100, Bitcoin down 1,000. That 0-day iron condor replaced like 20 minutes ago, already up 70 cents. Getting a vol smash here. Expected move for the rest of the day. When we opened, the expected move was 30 points. Now it's 16 points. So they are just destroying any hope of any kind of fun for the day. I think the narrative of the 6,700 pin in the E-mini futures is alive and well. What do you think, Jamal?
It looks like it could be a real thing. This market is unstoppable, man. I mean, there's limited pullbacks. It's nothing but up more recently. We're at all-time highs. This is about as good as it gets, folks. You might as well, at least take a look around. Even if you're scared, if you're one of those who doesn't want to put any money in because it's at all-time highs, what could you gain from there? You can gain a lot of market intelligence right now, just watching a lot of the things that are moving around. That's for sure.
Yeah. And by moving around, you mean going straight to the moon. That's that's what you mean, right?
Yeah. Oklo is pretty insane. Yeah, you're pulling up some of the greatest hits right now.
It's crazy. It's actually wild. But we did play some good trades from Fast Market just a few minutes ago. Those are posted to the Taste Trade follow page. So check those out. But
2%. Wow. I sold a strangle in here yesterday. I'm not touching anything. I was short the 140.75, I think, strangle.
Okay.
This sucks right now, but I'm not moving a thing. It's in November too, so I'm not moving a thing. I expected this.
I mean, 140 is like up here where my mouse is, right? So
yeah, I think so.
It can't go above this chart, right?
I hope that's still 140 within the next couple of days. I hope 140 is still looking like that.
Hey, my favorite trick is just click this and drag it, and now it doesn't look as crazy. You know? That's the old trick. But yeah, let us know if you got any more trade ideas in the YouTube chat. We're going to be taking calls in 15-20 minutes here as well. So yeah, we got an action-packed hour for you. But let's pop over to the slides and let's see what the research team has done for us today. Demystifying denominators, how numbers mislead. I do have some things I want to say at the end of this segment, and I agree with this sentiment here, but some cool visuals, some cool data. Let's dive into it.
Brought to us by our friends at the SIBO. I heard Liz and Jenny did an awesome job this week at the RMC conference. Lots of good feedback from that.
Yeah, I honestly love that they started doing that. I think it's a great addition to the show for sure. All right. Introduction. Ratios and percentages drive most decisions in our trading and everyday lives, but they're only as honest as the denominators behind them. When looking at numbers, it is important to understand the true context behind them, or they can lead to some misleading results. So when we're looking at fractions, the numerator condition is the top number that shows how many parts of a whole you have. So this beautiful pizza, which we destroyed yesterday during lunch, 8 slices out of 8 slices, that's a whole pizza, it equals 1. The denominator population is the bottom number that shows how many equal parts the whole is divided into. So yeah, first thoughts here. Numbers are numbers, but you always have to weigh it against the denominator to get, the true scope of things, which I think we'll see in the coming slides.
My first thought is it's hilarious that the research team is mansplaining fractions.
And with visuals of pizza.
Yeah,
they just can't get away from it. This is definitely a Lou Malnati's. It looks like it.
It looks like a Lou's pie, yes.
Yeah. Let's pop over to the next slide. Dive a little deeper into this. So common headlines you've probably seen. Crime has doubled in city X, Y, and Z. How about crime has doubled in Chicago? I hear that all the time. We go on the road and people are like, how are you still alive? Aren't there shootings? Right? No, there's not. There are, but they're, in other areas. It's not everywhere. 40 more COVID cases reported. The Dow Jones is down 1,000 points. What does that really mean? Why they differ in usefulness? Crime doubled. Somewhat useful. Gives a relative percentage change, though still not perfect. Doesn't really matter what city. And also, going back to the denominator topic we had just a slide ago, if you had 1 crime reported and then you went to 2, crime doubling doesn't really mean anything. Of course, if the crime is way worse, that's another thing. But numbers, you need to weigh them against what you're talking about as a whole. I think that's what we're getting here from these slides. 40 COVID cases, misleading without context. 40 cases in a country like New Zealand was taken very seriously because they were pretty COVID-free during that period of time. While 40 cases in the US, that was a drop in the bucket.
Yeah, context matters. I mean, that's the most important thing here. And as somebody who did science for years, I mean, that's exactly it. The job is to always put the numbers into context so that they make sense to people.
Exactly. And make them actionable too. I think that's another important point that we'll hit on here. Next slide, please. Ooh, the 1987 crash. I was just a thought at this point in time. As for the stock market, think about headlines you saw during the 1987 crash compared to now. In 1987, 500 points was a big deal in the Dow. Now the Dow can move up or down more than that in just a couple of hours, and it's considered relatively normal. Not seeing it now, but yeah, we have a very flat market, and the Dow is up 60 points. So all things considered, market moves now are not the same as market moves almost 40 years ago.
Yeah. These were dark times, Mikey. I mean, the year before we had the Challenger crash. I mean, the teachers rolled out the TV in the class and showed it to us, and then it happened, and you're like, what did I just see? And then 87 was the crash, and it was talked about a lot. I don't remember any details per se. Wasn't paying attention to the market like that. I just remember, you just hear about things on the news, and it was obviously crazy times.
Yeah, for sure. And when you look at it in today's world, 22% drop, what would that mean in the Dow? 22% would be almost a 9,000 point move in the Dow. So think about the difference there. 20% move in the E-minis would be a 1,200 point move.
My God.
Imagine that. Imagine if we had a limit down situation, down 1,200 points. It would be absolutely insane. But again, we're equating the actual number with the denominator, which is the current value of these products. So percentage-based explanations are always going to be paramount when it comes to putting context around what we're talking about.
Single day, I'm going to say that's impossible to even happen now. There's too many measures in place to prevent such types of moves.
Yeah. We've got the limit downs. We've got the buy the dippers. But I mean, we saw it. Like this year has been. We joke about it. We're like, okay, we only go up, but we have seen some violent moves to the downside. It's just that they were gobbled up pretty quickly thereafter. So it will be interesting to see what is happening in the world to where we are, if and when we go back to those 200, 300 point sell-off days that are consecutive. Like what is the thing in the world that's going to create that scenario? Scary thought.
Yeah, exactly. I mean, even though we had tariffs on the horizon going back to last year, but we had no idea that they were going to move us down 20% effectively is what happened over about a 6-week period. So we had no idea, and we'll see what the next thing is.
Yeah, I'll never forget. I was on air with Ilya and Chris on Overtime when that was happening. And initially it was like, oh, 10% across the board, and the market was ripping higher. And then he brought out the poster board. And the poster board was like, no, 10% minimum, but 50, 60, 100 here or there. That's when the market just completely reversed and dropped out. But it's recovered since. It's been a wild ride.
Yeah, sure has.
Next slide, please. Largest changes in the SPX. So this is interesting. So again, putting context around these numbers. What do these net changes relate to when it comes to a percentage? Take the 5 largest net daily gains and losses in the SPX, where you might think the biggest moves happened more recently. For some cases, like the largest drops, that is true, with 2020 being greater than 2008 percentage-wise. For other cases, like the largest gains, this is false, with 2020 being less than 2008 percentage-wise. And of course, you see this with the ranks. None of the recent ones were the number one percentage moves. That honor still belongs to 1987. So like Jamal said, we have things in place to kind of prevent these insane moves where once you reach a certain point, it's no longer the market, it's the human reaction, the fear reaction. And of course, these things were put in place to kind of prevent that and create more stability in these markets. But like we're saying here, what is a 10% move in a couple of days in the E-minis now? It's 600 points, 670 points. It's a huge move that I can't even imagine seeing a day where we're down 200 again, and then down 200 again. But it's certainly possible. We just, we're in this low VIX environment where the market's not telling us that we should expect it too much.
Yeah, and with these dates here, I mean, when I see these, it just tells you how prominent 2008 and 2020 were in the markets, and the fact that they're going to stay around for a long time when you look at lists like this is fascinating.
Absolutely. Moving along to the next
It's
slide.
interesting that one of the days from this year though is in there. It's fast. That's so not nothing.
Yeah, totally. Account sizes. So bringing this together from a different lens. Larger accounts naturally allow access to wider ranges of strategies because the same percentage risk represents a greater dollar amount. The difference opens up opportunities in strategies like naked options, undefined risk, or larger products that may not be feasible in smaller accounts. As always, be careful when hearing claims like I doubled my account or I made $500 today. Doubling is far easier in a small account than a larger account, and a $500 gain is much more attainable with a large account than a small one. Without context, those numbers can be misleading and don't reflect the true risk or effort behind them. And I think one of the things that we say all the time is it's easier to trade in a larger account, and that's simply because if you're just doing one contract across the board, you can get super small if you're selling undefined risk. And more importantly, if you're selling undefined risk in a $100,000 or $250,000 account with one contract, you can absorb so much volatility and it doesn't even scratch your account. Where if you have a $5,000 or $10,000 account and you're undefined risk, a move like in Tesla or Okla or these crazy moves we've seen, they make a much bigger dent. And it's just naturally harder to get to a smaller percentage of risk from a net lick perspective where your account value is when you're dealing with smaller accounts. And that's even if you're doing defined risk spreads. Like if you have a $5,000 or $10,000 account, if you're doing 3 to 5 point wide spreads, that's still a large chunk of your account size. Where if you're doing that in a $100,000 account, it's not even going to move the needle, even if it's a max loss.
Yeah, and I think it's always good to think about things in terms of exactly like this slide says, what you're risking per trade, percentage wise to your account. I think is always nice. I mean, it's in my head all the time. I'm always talking about it when I'm on air of the different trades that I may have on and how much percent it is of my portfolio. And as soon as something is somewhere between 5 and 10%, that's when I'm sort of, and I'm not talking short really. Honestly, like a lot of times if it's long, because again, there's going to be a little bit more on a margin account, just going to take a little bit more value there. But something that's long specifically, if it's XYZ% amount in your portfolio, usually in my case 10, like I'm like, okay, this is kind of big. And I had a gold trade that was like that for a while. I was like, okay, I'm making money on this. It's time to shut it down because it's a little big and I don't want it to control my portfolio.
Yeah, and that's especially true if you have, let's say you put on a debit trade where it starts as $1,000 and it grows to $1,500, $2,000. Now that total value is growing as a relative percentage of your account size too. So another thing to keep in mind is, you don't want to have a massive winner on the table without hedges where it's grown to a great degree that still represents a big chunk of your account, because now from a piece of the pie standpoint, you go from 1 slice to 2 slices to 3 slices with an unrealized gain there. So it's another way to think about it as well.
Yeah. If you have those on and these names that are moving, you're lucky enough to catch a move. I think a lot of times it's hard for people to be like, oh, I don't want to take this off. But when you realize like, okay, it's not only is it 100%, sure, it could, if you're long it can go to 200%, but guess what? You're already at a almost 10% size of the position of your portfolio. That's probably kind of your cue to like, okay, this is a little too big.
Exactly. Next slide, please. Comparing strategies and underlyings. So looking at denominators when comparing strategies, take this chart as an example. Take it from one of our segments comparing the largest intraday ranges for the mini and micro futures over the past year. We always use percentages or per capita data points because that normalizes different strategies or underlyings of different sizes. So again, going back to the, I made $500, I doubled my account. Like, what does that actually mean from a percentage standpoint? So when we look at the average percentage range versus the average points, these things can be very different, and they should be, with different denominators for all these products. All these products are different sizes. All these products have different notional values, tick sizes. So bringing it down to a percentage basis helps us put context around the implied volatility and realized volatility of the products we're trading, and can give us a better idea of what we could expect given implied and historical moves.
Yeah, for sure. And I would also say these things can tend to grow once volatility gets a little bit wider and crazier. These average ranges get bigger.
Absolutely. Final slide before we get to some takeaways. Selection bias. So finally, make sure you're not committing to selection bias, and take all the information you have before putting on a trade. All of these IVRs, IV ranks, are above 40, meaning they all look juicy from premium selling strategies. However, take a look at another metric such as the IV 5-day change. Some volatilities are trending upwards while some have already started to trend down. This can mean different things for the overall strategy you want to use on that underlying. Similar strategies might not behave the same. So my big thing here, and the biggest thing that I harp on all the time, is yes, IV rank helps us put our eyes on a product that has elevated implied volatility. But what does that elevated implied volatility mean? Like in TLT, we're talking about bonds and we're talking about trading them. Like, I don't care what the IV rank is in TLT, because I know that with an IV rank of 100, the actual implied volatility of TLT is probably only like 16, 17, 18%. Like, what if the IV rank range goes from a 0 of 15% to a 100 of 17%, the difference in implied volatility, which is what the option premium is representing, is not that great. Where if you're looking at an Oklo or a Tesla IV rank of 0 might be 50% implied volatility, where a Tesla IV rank of 100 might be 90% implied volatility. That's a drastic range, and you can play for that volatility contraction and expansion because the range is wider in that particular product. So IV rank, IV percentile, whatever you like to use for context, I always am looking at the implied volatility along the right-hand side of the platform as well, because that is what the representation is of the actual premium that you're trading in that product.
You hit the nail on the head for sure. I mean, like when we talk about gold being in a 70 or 80 IVR, to your point, similar to TLT, gold is not only currency, but it's also commodity. But the currency part shows the IVR, the flat vol, as we'd like to say, which is usually, even if it's a high IVR, that flat vol is probably maybe 19, maybe 20, but most likely it's in the teens. And so if you're selling it, the base flat vol is probably like 14. You're looking for 5 ticks if you're lucky in that situation. Whereas, like you said, like the Teslas of the world, the Oklos of the world, I mean, they're in the hundreds, and the IVR is probably 30. But when they come in, they could drop like 40 to points, right, in flat vol.
Exactly. And I think utilizing, if you want to get a better idea of how these things move, you could always just type in your ticker symbol. So like oklo.ivr or tesla.ivr, and you can see a chart of implied volatility rank and how it's changing. And that can give you a better idea of the ebbs and flows of that particular product.
And I will say you and I are seasoned in that way. We look for those higher vol, juicier type of IVR names to sell. Some people are more comfortable with the TLTs of the world when they're in a 70 IVR and they might be up to 19 and it might be on its way back down to 15. They only want that. That's cool. Just as long as you understand.
Yep. Totally. Couple of takeaways for y'all. When working with numbers, ask yourself, what question is this number actually answering? Is this the right number to use for that question? Always match the numerator to the denominator and use percentages, per share, or per capita data for fair comparisons. Be cautious of numbers that mislead by showing the wrong scale, whether they are underestimated or exaggerated. This principle is especially important to grasp in trading, where misreading ratios or implied volatility rank, percentile, what have you, can lead to costly mistakes. So yeah, totally agree with this. And I think it's super important to always put a percentage on things. Like, what is the percentage move? That's the easiest way to put context around product moves and things that are happening in the market for sure.
Beautiful. That was a good one.
It was fun. And now I want pizza after the first visual. Thanks for tuning in. We'll be back in just a short while here. We're going to take your calls. 855-BE-TASTY. If you don't want to call in, you can always find us in the YouTube chat as well. Head over to Tasty Live. We've got the YouTube chat open. Throw in your questions there. But we got answers for you, hopefully. We'll be back in 90 seconds. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sosnoff bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batista, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing is moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Damn.
Wow. Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
What's up, Tasty Live? We are back. It is Talking with Jamal and Mike. 855-238-2789. Call us, beep us if you want to reach us. Or you can ask your question semi-anonymously on the YouTube chat. Tasty Live YouTube channel, we're streaming live there. Just pop it in the chat on the right-hand side. While we were away, Jamal and I were just watching this chart of Oklo, which is absolutely moon. It is the stock to behold of the day. 18 million shares traded today. That is more than the SPY. Insane.
This stock is absolutely insane. It's continuing to just moon for sure. Yeah, I mean, again, I'm so I will say I've got I got a short strangle in the follow trader account, getting beat up on that right now, but it's pretty wide. I mean, at least it felt pretty wide until a little while ago. It's about $20 away from the upside now, but I'm not touching anything as of now. It's clearly going a little ape, and hopefully it just kind of calms down. I mean, not every situation turns into a GME situation. Hopefully it's just a little movement, and then cooler heads prevail.
Yeah, I mean, the crazy thing about this is, of course, the move. I mean, these options are just mooning like crazy. This option was $3 yesterday. It's $13 today. These out of the money options mooning. But if you do get a calming or a sell off, you're going to get a big crush in implied volatility. So yeah, I think it'll be manageable over time for sure. And it's $100 stock. So
I do have to know where it is on the trending options volume. I look at this every single day on the OIC website. It is number 19 right now as far as options volume. 159,000 contracts. Feels like all of those contracts are to the upside.
Yeah, absolutely nuts. But yeah, we need to see some kind of movement here. We're actually seeing a little bit of a sell-off here with the E-minis selling off as well. We were talking about the SPX Iron Condor I placed, the 0-day. Somehow it's already at 50%, but I mean, they've just crushed implied volatility for the rest of the day. The market's been open for an hour, and the implied volatility for the rest of the day has been cut in half. We started at 32 plus or minus. We're at 14 plus or minus, which is not great for entertainment purposes, but we'll take it if we're going to get filled. We're basically there. I would not be surprised if we're filled in the next 20 minutes here.
Nice. We do have two questions in the chat. One specifically for me, and then one for both of us. But somebody is asking me, what's my plan for managing the Oklo trade? And again, I have it's November, and I have the 75-140 strangle. So while it's $16 closer to the upside than it was the day before, or I should say $19 closer. Now I am $16 away from my upside call. It's November. I'm not overreacting to it. Yeah, I have a loss on it right now, but I'm just going to wait this out and see how it goes. If this were probably 2 days ago and this were happening, I'd probably, if I were really nervous, I'd look for some upside calls to buy, but I'm not buying the 130 calls or the 135 calls today just to sort of offset any nervousness I have. It's November, and I'm not even adjusting as of right now. I could adjust my downside, but into a huge move like this, I just don't love adjusting my downside. I'm just going to leave it for now. And again, it's November, so I'm not really freaking out.
Yeah, I hear you there. And the nice thing about, I mean, this is a crazy move, but the nice thing about this move is that it's creating such implied volatility that you can do whatever you want in here. Like if you, and I've done this in IBIT. So IBIT, when it was rallying, my whole thesis on IBIT, there you go, SPX, 50% profit.
Nice.
I'll post that to the follow page. But with products like these, like you don't have to necessarily do the traditional management of like, okay, the stock's ripping higher, let's roll the put up to 100. If you wanted to, you could shift this whole thing. Like if you wanted to shift your risk to the downside and give yourself way more room to the upside, just look at your premium here. This strangle is trading for $2,200. If you buy this back and you go to like the 100 short put and you sell the 165 short call, you're picking up $250 and you're completely changing your risk profile to be much more neutral. And actually you're closer on the downside than you are the upside. So these are the things that are possible if you want to make these adjustments. But if you want to lean a little neutral to short into this move, totally get it. But it's just something that I want to bring up because we do talk about like, if you see a big rally, rolling up just the put and leaving the short call, but you can manipulate your risk profile however you see fit. And I did that in IBIT. When it was rallying, I just moved, when it touched my short call, I just moved the whole thing up and I changed my upside being tested to my downside being tested. And I've done that a couple of times. And it's kind of opened my eyes to, if you have like a larger account, let's say you have a strangle on an SPX, and you do something like that where you don't ever want to have short delta, you want to have that short call on though because it's a nice juicy premium, you could do that. Like when you're tested, just shift the whole thing up and you shift the whole thing up and then you're managing your delta in a kind of different, unique way. But again, because implied volatility is so high here, you can really do whatever you want. It's more about just replacing your debit cost and selling something that's a little bit more.
Actually, you know what? That's a good point. And I might actually do that. I could adjust my risk and I could collect a little bit more. I mean, I really hadn't, I was really kind of just letting it go, but I could actually do that. That's a really good point. And I just might.
There you go. Let's see here. There's another question. Weekly.
Yep.
Yeah, weekly. What are the advantages of trading monthly expirations compared to weeklies? So I have two things I would say. So if you're just trading like, if you're trading non-earnings trades, you're almost always going to see better markets in the monthly cycles. So let's move to like Tesla. So looking at the October monthly, Tesla, 28 days, just looking at the prices and bid-ask spreads around the expected move, let's call it 15 cents, 10 cents. That's basically what I'm seeing, between 10 and 15 cents. If I go to an expiration just before that, now all of a sudden you see a little bit wider. These ones are actually still pretty liquid. Let's see, maybe Oklo is a better example. Yeah, so these spreads, 21 days in a weekly cycle, not nearly as liquid. You've got about $1 between these bid-ask spreads. You can see volume, open interest. Not many people are trading these, which is going to contribute to the more wide bid-ask spreads. But when you go to the monthly cycle, you see a lot more activity from a volume standpoint, which brings in these bid-ask spreads to 20 cents, 30 cents wide. So generally speaking, monthly cycles are what are primarily used by the majority of traders. But if you have an earnings announcement coming up, the weekly cycle we're going to be okay with because there's going to be a lot more people trading those weekly options. So that's kind of the long-winded way of just saying most people are trading the monthlies. You can go to the weeklies. It's not going to be really any difference at all if you're trading something like Apple, where all of these markets are 2 cents, 3 cents wide, or SPY. All of these markets are 2, 3 cents wide, penny wide. Doesn't matter what expiration you're choosing. But the less liquid names, the more important it is to consider going to the monthly cycle to get yourself that liquidity.
Agree. Well said.
Lovely. Sold a put spread in TTD a week ago. What would you recommend managing since TTD has dropped to the 43.45 range? Would it be better to buy it back for $200 or just wait? Good question. The trade desk. Wow. Big gaps.
Yeah, it's been a rough year for TTD.
Yeah. I guess it depends on your expiration, but generally speaking, with spreads, with credit spreads, you don't have that much flexibility, especially when you have a trade that's completely in the money. So for me, if I'm in October, I'm just holding on to this. You have 50 cents left to lose. You can make back $200. So the risk reward is certainly in your favor, especially with 28 days to go. In the future, though, if you're trying to defend a credit spread, what you can do is just roll it out in time before it moves in the money. So if you were at like 40, 42 and a half instead, you could buy this back and roll it out to November, and you would pick up a small credit. You'd double your time in the trade. Unfortunately, doing that now, if you have the 50, 47 and a half, you're trying to move out to November, and you are buying it back in October, you're going to be paying a debit because there's more extrinsic value in the long option that you're buying in November than there is extrinsic value in your short option you're selling. So general rule of thumb, roll it out before it goes in the money if you're trying to defend a credit spread. Otherwise, if you're comfortable just holding it and seeing what happens, totally possible as well. October, luckily, you're kind of right there. So not out of the realm of possibility to see a rally there. But risk reward perspective, risking 50 cents to make back 200, 28 days to go, a lot of things can happen there.
Yeah, I mean, essentially, you are a upside call spread holder at this point, right? Synthetically. So, and not a whole lot of risk left. More than likely, what eventually happens is you're going to get assigned on the 50 put. And look, if you've never had that happen before, it seems scary at first. You open up your account, you see that that put is gone, and you're just still long the one, and you're long shares. And but all you got to do is just close it out by selling that stock and buying that put back, and you'll be fine. And if you get assigned on, it's actually a good thing for you.
Absolutely. Rancher, going to go ahead and sell a covered call contract on these ACHR shares I have now. I think I'm going to go way out in time and collect some big dollar.
Okay. Dollar holla.
Yeah. I mean, this is another one. Going back to the segment. If we said you got a 5-point rally in ACHR, you might not think anything of it. But if you say this stock has gone up 100% from the April low, ultimately, way different sentence there. So putting context around this move, totally a massive move. Yeah, I think if you are going out to like October, November, there's not much premium there. So I do think if you're trying to hedge and just get some more premium, you could go a little further out to something like Jan or further, pick up $1 at these higher strike calls. And if you're doing this, I think it's more of like, where am I comfortable selling this regardless of where it goes? So yeah, totally possible to do it. You're still picking up 10% of the notional value of the stock, selling this 13 strike call into this rally. So I like it.
I personally want like $1 at least when I sell something. It's just kind of how I am. It's just kind of my brain. So that's typically what I'll try to find. A little hard sometimes though, in a name under $10. But if you can, it's usually nice. It's out of the money too, of course, obviously.
Definitely.
Nvidia. Somebody's like Nvidia, low IVR and IV may be worth buying a call vertical. I haven't traded Nvidia much in a while outside of earnings.
Yeah, I mean this thing has just doubled in price from the April lows. Crazy move. I actually do have a diagonal spread on here. I've got the 190 October, and I'm short the 195. It's worthless. But problem is, the 190 in October is only trading for $2. So there's nothing I can really sell against it in these 7-day, 14-day, 21-day expirations that make sense. Like, I would rather not calendarize it. I'd rather just leave it as a long option, because my cost basis here is $4. So another way to look at it is, where on the October strike plane are the options trading for $4? And you're looking at the 185 trading for 360, the 180 trading for 560. So if I were to guess, if we get a 7.5 point move, I'm going to be at a small profit or a scratch. So 7.5 point move, well inside the expected range of plus minus 11 here. So I think this is one where I'm just going to leave it as a long call option, just because there's nothing to really sell against it. But yeah, I think if you're placing a new trade, this premium isn't that expensive. IV rank of 3, 42% implied volatility, and with a debit trade like a diagonal spread or a call vertical, you can get into this trade in a more cheap way than if IV rank was significantly higher. That's for sure.
Yeah, I am never going to talk somebody out of getting long Nvidia. I mean, it's hard to, given the stock's track record. I mean, one thing to think about is, yeah, look, to put on my technical analysis hat real quick, just looking at that chart, it looks like it could make a big move one way or the other, somewhere or another. I don't know if it's going up, but if I'm playing it for the upside, that was what I would do. I will say we are at all-time highs, and all-time highs doesn't mean it's a reason for us to go down, right? Like, we could still have some upside to it. But personally, I like the idea of getting long call spread. My personal thought would be, I would see if the market pulls back some, and if so, that would be the name that I would attack on another bounce again.
Yeah, I mean, it's just one of those names. Like, it's one of those products like Microsoft, Apple, Amazon. Like, people want to buy it, especially when it goes down 10%, 20%, 30%. You saw that here into the April lows, going below 100. Like, from a psychology standpoint, if you have Nvidia going below 100 and you want to be long Nvidia, I think a lot of people felt that way, which is clearly why it's moved higher. But yeah, I think if you're trying to pick a single name that's super liquid, has a large market cap, Nvidia is certainly one of them. I did get long AMD into for a fast market. I did want to get long Microsoft. I did not put a position on yet, but I think with Microsoft being a $500 stock, this is one of them that's near highs, but it's 10% off of its high here that we saw. So if you're trying to find products that maybe you see a rotation into, maybe Microsoft is one of them, maybe AMD is one of them. Unfortunately, Microsoft's a $500 stock though. So
yeah,
I think if I'm going to do something like this, I think what I would do is go to like the 530 or 535 and just do a calendar spread. The 530 calendar trading for just under $10. The nice thing about this is you're kind of straddling the earnings report. So if you're long November, you're long the implied earnings announcement, which is why you see this kind of boost in implied volatility going from 20, 21% up to 26%, 25. So the market is pricing in earnings to be in this 42-day cycle, and surely in the 63-day cycle. So you're buying this implied volatility and premium that should hang on until the earnings announcement, and you're selling a rapidly decaying option against it that is outside of the earnings announcement. So it's also another way to say, I could buy this now. If it works out, this trade could be a $300-400 winner. We can look at it on the analysis tab here. If we throw on the Theo, you can see like right now, if we got this move, this could be a $200 winner. If I were to pass time, you're going to see that thing get greater and greater to the upside. But if it doesn't work out, because I know that earnings are going to be in this cycle most likely, I could buy this back if it's worthless and roll into the earnings cycle, pick up more premium, maybe turn into a diagonal spread. So I like this trade. I'm going to throw this on.
I love the idea. I actually have a couple of these right now, calendar calls in JP Morgan. I put them on about close to 2 weeks ago, knowing that the rate cut was imminent and figuring that's going to be good for banks. And so I decided I wanted to get long, and I'm long the earnings month, a lot like Mikey's talking about, and I'm short stuff in front of it that does not get earnings. And to his point, like the area where you're long that has earnings should stay bid at least for a little while until earnings is upon us.
Yep. Absolutely. And these bank stocks, another great example of just really low implied volatility relative to the price of the stock and relative to the realized moves that we've seen in some of these. So we saw a 20-point move from low to high over the last week and a half, we'll say. 20-point move is projected over the next 63 days. So recently, you've been seeing realized volatility exceed implied volatility. And that's, of course, going to be good if it's in the direction of your calendar spread or diagonal spread.
Yeah. Somebody asked about SPX iron condors. What account size would you need to trade 20 delta iron condors with 20 wide wings on SPX 0 DTE? And I think this is a good question to incorporate our market measure from today, percentages. I mean, personally, some of those can get big. And if you're doing 20, first of all, units, that's a lot of units. But in order for you to do that, I mean, let's just say one of those costs you, I don't know, $1,000. So, I mean, that could be upwards somewhere between, let's call it 15 and 20 grand. If I'm going to do that, 15 to 20 grand better be less than, I would say 2% of my account. If you're talking about 0 day, to have 15 to 20 grand at play, that's a lot of money, I would say.
Yeah. And I think you have to exactly to your point, if I'm doing 45-day iron condors with SPX for 2 grand at risk, 20-point wide wings on an iron condor, the account size can be significantly smaller. The fact that you're doing 20-point wide wings every single day, and the fact that you could have a run of 10 losers in a row, to Jamal's point, that is where it adds up very quickly. So I would say if you have a $100,000 account, 20-point wide wings is way too big for 0 day iron condors. I think you got to be closer to 10-point wide or 5-point wide. If you have longer duration where you can get wider and accept more volatility, 20-point wide with a 100K account is well within the 5% or under 5% of net lick. So specifically, I think the 0 day angle, you got to go way smaller because you're putting them on every day.
Simple one. So you were always talking about what expected move was. How do you calculate it, and what it was the day before the current day? Well, that part's hard, but you can show them how we look at it a couple of ways.
Yeah. So expected move for the day. So I'm just looking at this number here. So SPX, whatever you're looking at, you can look at the 0 day, the 3 day, 4 day. It can help you determine like, wow, maybe there's a binary event here where I see this go from 14 to 30 to 40, and then it jumps to 60. Like maybe there's something here that I can look at, but you'll definitely see that for earnings announcements and implied binary events. But this number plus minus is really a representation of the extrinsic value of like the at the money straddle. So plus minus 15, if I just throw on a straddle at 66.35, look at the extrinsic value, it's ultimately the expected range based on extrinsic value or pretty close to it. So if you don't have a Tasty account where this is laying this out for you, you could do something like this, just look at the straddle. For previous days implied volatility, FedEx had earnings. So FedEx is up $6. What you can do is look at, so the same exercise, just look at the straddle price of the previous close. So if we look at FedEx, we're up $6 today. It's at $232. So this closed at $226 yesterday. So if we go to the 225 straddle and we look at the net change here, which you can toggle on for your platform here, this option, the call lost $2 and the put lost $8. So let's call this a 10-point expected range. So this was, the change here is representative of what this was trading for at the money straddle previous to the close yesterday. So the market was expecting a 10-point range or around there, and we're seeing a 6-point range today. So this move, $6, was inside the expected move. So to put it simply, just look at the previous day's close and look at the straddle price change of the previous day, and that is what the previous day's expected move was.
Yeah. Yeah. Oh, and I did make a mistake. Thanks, Frankie, for that. It wasn't 20 units. It was 20 Delta iron condors.
Oh, yeah.
I did make a mistake on that.
All good.
Somebody did wonder about a short put in Rivian. They said, what about a short put in Rivian? I haven't looked at Rivian in quite some time.
Short put in Rivian, huh?
Yeah.
I could get down with this.
38 IDR.
Yeah, 38 IVR, 70% implied volatility though, so decent.
Yeah, it is.
Decent. Let's see what the buying power effect is. Okay, so it's not too crazy. My only concern was if this was like a cash secured product, I wouldn't do something like this, but selling premium under $1, not for me necessarily, but I have no problem going slightly in the money and creating more of a covered call feel. So if you're selling a slightly in the money put that still has extrinsic value, it's ultimately a covered call. It's the same as if you were to buy 100 shares and sell the 15 strike call. So utilizing a little bit less buying power with the in the money short put than if you were to buy 100 shares and sell the call. But yeah, I think this is totally fine. $1.40, one contract max risk is like $1,300 if it goes to zero, which I don't project to happen here. But yeah, I'll throw this on. Why not? There you go. 9:59 on the dot. It's been a whirlwind of a morning. Nobody called in, unfortunately, but I get it. It's Friday. You're lounging on the couch. You're watching us on the TV, eating breakfast. I get it. But we got to pass the torch along to the next crew. So thank you, Jamal, for joining me. It's been fun.
Great to be here.
Absolutely. Thanks, everyone, for watching. We'll be back for last call at 2:30. We got plenty more content coming your way the rest of the day, though. The YouTube chat is popping off, so join us there. Throw in your trade ideas, questions along the right-hand side chat. Just head over to Tasty Live. But yeah, enjoy the rest of the trading day. We'll see you for the last 30 minutes of trading at 2:30 Central. Peace.
Later.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
My name is Tom Preston, and I am the Chief Market Strategist here at tastylive. So every day I write the cherry bomb that goes out to our tastylive customers. And usually it talks about some potential trade idea that people might want to consider, with a little bit of context about why a person might be interested in doing it. But the main reason that I push these things out is to get people to think in terms of volatility, liquidity, and probability in their financial decisions. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Benber, Nanky. Cry your eyes out, Pastor Hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Benber, Nanky. Benber, Nanky, hardly knew ya. Benber, Nanky, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Benber, Nanky. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome back to the Liz and Jenny show. Today it is the TP and J show. TP, I thank you for joining me. You're bringing the fire. We missed Tasty. We were gone. We're back. It feels like we were gone a long time.
You guys were gone forever. You guys were gone forever. People were crying out for Liz and Jenny, crying out. But I had to come here for Flame Shirt Friday.
Oh my gosh, I wish I got.
We had to pull it together for Flame Shirt Friday. I'm Tom Preston. She's Jenny Andrews. Liz Dierking is. Do you want to fill people in, Jen?
Well, she's visiting her son. Everyone knows this is her firstborn, went off to college. He's in Kentucky, and she's visiting her son for the weekend. She's on an airplane right now. We got back from Germany last night, and I woke up and I thought to myself, if I had to drive back to O'Hare and get back on a plane, I think I'd die. So she's on her way to visit him for the weekend. Just wanted to check in. She's been missing him. It's hard when your firstborn goes.
I guess so. Hey, you know what? I hope she has a safe flight. How was your trip to Germany?
Okay, TP. It was very, very interesting. So we were at we were there for the SIBO's risk management conference.
Mm-hmm.
And I didn't know what to expect. It was not a retail event. It was a professional event. So you had people, SPY and you had like all these huge businesses in our industry. I feel like some of the smartest people in our industry at this event, they actually at this event is where the VIX was created. However many years ago. So it was like so many smart people from the industry all in one place. So then just talking to people was really cool. I know on the road we've got amazing viewers, and Liz and I will sometimes love to like sit down with Tony from Mexico and talk strategy and try to come up with new ideas. And that's how what I found really cool, talking to some of these people about strategies and the strategies they're doing at a professional level, we can all do and teach and bring to our viewers, and they could do the same strategies at a retail level.
Well, like what?
Well, there was a lot of like buffer type trades or variations of protecting portfolios, people who are managing these very big portfolios. It was the risk management conference. So like, people who are managing huge portfolios and then trying to protect these big portfolios. So it was just kind of, instead of doing collars, coming up with more creative ways, instead of buying puts, coming up with more creative strategies instead of you just like throwing that money away buying puts to protect a bullish portfolio or a large portfolio. So it was interesting, TP. It was I feel like right up your alley since you're the master of volatility. You're like the risk master. And it was pretty cool to just talk different strategies. And honestly, I walked away with, oh, you know what? Instead of doing this, I might do that. And the awesome thing, these people are managing huge funds, but we can teach this to our retailers, and you can just, bring it down to a small scale and do it yourself.
Yeah. I mean, I don't know anybody who was at that conference, but I do know some money managers. And it's important, I think, for your viewers to know that they're very constrained about what they can do relatively. In other words, they have charters for their funds, the companies that they run money for. They don't have the flexibility that we do. Right. And so they're forced sometimes to be a little bit more, like you're saying, Jim, a little more creative with how they approach things, because they can't, I'm going to hedge my Microsoft with some NVIDIA. They can't do that. Right. They can't layer things on. They don't have the flexibility. I keep going. And I think this point has to be made. Hey, if you can become a money manager like that and get, a nice salary and go to these fancy, risk conference things in Germany, it's a great job if you can get it. But you have, and I'm talking to our listeners right now, you have such an advantage over those people. There's not a whole lot that you don't understand that they do. Okay. The gap between, especially, let's say, just intellect and cognitive abilities, it's very small, if any, right? It's just they're in a different world a little bit. You have so much more flexibility. You can put up your hand and say, I don't want to trade today. They can't do that. Okay.
Well, and we can do everything. They can't do everything we can do. Now, there were people from the US there. I know we were in Germany. There were people from all over Europe. I mean, it was crazy. I talked to a money manager from Athens, and he was doing something different than the guy I talked to from Israel. And then people from the US, like there were people from all over the world, and they all had different constraints. And I feel like us in the US, we have access to everything. We have, no handcuffs, where a lot of these countries have different handcuffs.
Yeah, we are so fortunate, and yay, America. Okay. If you have any questions about America's dominance in anything, the financial markets, we are so far up ahead and above of everybody else. Okay. And I'm not saying that because, for whatever, I'm not putting I don't want to put anybody down, but the American financial markets, as far as depth and liquidity, the ability to get stuff done, nobody can touch us. Nobody. Okay. So we are very fortunate to be trading in US markets. Just like, okay, you're in Germany. They have the best beer, okay? Right? It's like you want beer, you go to Germany. You want to trade, you come to the U.S., okay?
And I did. After speaking to so many people, I felt very, very fortunate that we live where we live. We have these, this amazing platform. I heard so many people, even though they're all over the world, say tastytrade has the best technology. Many people told me that tastytrade has the best technology, even if. Right. So that was cool. That was cool to hear. Very cool to hear. And we know our platform is amazing. We know it's quick. We get fills like that. We get price improved. But to have people from other areas say we have the best technology was really nice.
The thing is, when you're working at those big banks and funds, they have legacy systems. And when I say legacy, they have platforms that might be 25, 30 years old that somebody built and they're still using it. Would they like to change? Of course they'd like to change, but the risk of changing, there would be that one weekend. They have to turn the thing off on Friday night, turn the new thing off, turn the new thing on, and hope it works on Monday. And like you said, Jen, they're managing tens of billions of dollars. They can't afford to do that. It's too scary for them. Okay, so they're stuck. Okay, can you still deal with this old system? Yeah, it sucks, but I'll use it anyway. That's a lot of what it is at those places.
So everyone trading here and having the ability to trade on Tasty Trade, be grateful, and you don't realize how lucky we are to have access to so much.
Yeah, be grateful for what we give you.
Anyway, TP, I posted this video just for you. I thought you would like it, since we're at the risk management conference and we're talking about risk. I think we had one of the riskiest. Liz and I were at one of the riskiest tables at this evening event at this amazing barn. Do you see this guy?
Oh, in the lederhosen.
And he's whipping a whip. He's standing on our table. So I'm sitting there. We've got some of our friends sitting there, and he is just going around whipping this whip. It's snapping and whipping right over our head. I thought this might be something you might like to try at a party in Texas.
Yeah, at the Preston Ranch. Yeah, I could get a little whip. That doesn't look like a Texas-sized whip, though. That looks like a little European whip. I don't know.
Like your whips at the ranch are bigger than that.
So anyway, how was the food?
Oh,
what did you guys eat? Did you eat like some schnitzel and stuff, or?
Oh yeah, I ate more pretzels in a week than I've eaten in a lifetime. Well, I love the dumplings, the German potato salad.
Oh yeah.
Lots of meat, lots of pork.
Oh yeah.
It's heavy food. There's a lot of food. It's heavy food, but it was delicious. It was delicious.
Well, I'm glad you came home safely, Jenny.
Me too.
We missed you.
Just so viewers know, we're back. We've been gone. If you have any questions or comments, you can send us a tweet and include this hashtag LIZJNY. I will be keeping up with Twitter. Also, TP jumping in the platform. So at the conference, so Liz and I spoke about which strategies perform best in different periods of volatility. So what performs better in high vol versus what strategies perform better in low vol. And our research team was amazing. And we put together, I think, the research team put together a really great piece of kind of showing historically what strategies are best in what VIX environments. And we used SPX. And I'll say that, in low vol, what can I ask you? Can you guess, like, out of an iron condor, a strangle, and a jade lizard, what do you think is best in low vol, meaning VIX under 18?
Strangle.
Well, it was in low vol, like low VIX, it was actually the iron condor, probably because if
your wings are cheaper.
Maybe your wings are cheaper. So they back tested 12, 13 years and looked at, and I'll show you, I'll pull up and show you some of the strategies we tested and talk about some of the results, because it was interesting. So we stuck to our very simple tasty mechanics. And even though we're at this professional convention, they were very, very interested in seeing what the retail side was doing.
Yeah.
And SPX, and I don't know if you've heard this, like now SPX is trading more retail than professional.
I'm not surprised. Well, we have a lot to do with that. Okay. The whole zero DTE, which we pioneered years and years ago. Okay. It was our idea. And the zero DTE SPX options are so appealing to retail traders. Okay. That's where a lot of this volume is coming from. And it's the strategies that you and Liz teach every day. Okay. There's no mystery to them. There's nothing. They're just a great way to trade. I trade them every day.
Okay.
I've got mine on this morning. I mean, even in Germany, we were putting on our 0 DTE. So we put it on in Germany.
It's a machine. It's a machine. And you know what, Jen? I don't want to derail the conversation, but I will kick this out. I think a lot of what those money managers were thinking is, if I quit my job and I want to become just my own trader, what would I actually do?
I think so. I think a lot of them were thinking like, oh, if I became my own retail trader, what would I do? And they were very interested in what our retail traders are doing. And they also were very interested in knowing, and I don't even know the answer to this. I don't know if you know the exact answer to this. Like, is there a way to track like how much of these SPX 0 DTE the tasty traders are doing? Or is there a way to track how much of
sure. Yeah. I mean, if you can go, I don't know that. I know that Tasty's 0 DTE business is big. As far as the percentage goes, yeah, that's all tracked between the broker dealer, Tasty, the clearing firm, and the exchange. And all the participants, all retail traders have that same relationship. Broker dealer, clearing firm, exchange. It's all tracked. Okay. For security reasons, if nothing else, and then make sure nobody's committing any crimes or whatever. That's why it's all tracked. But then you can draw out of that who's doing the volume, and I'm sure we're right up there.
Right. So, I mean, Liz and I didn't know those numbers, but that was something we were asked repeatedly about, what kind of numbers are going through these SPX from our retail traders, and I didn't know. But we talked about our traditional, and let's talk about the change here, because our traditional like 45 DTE takeoff at 21 DTE, that still holds, but you say like so much of the SPX trading is the 0 DTE. And so what we talked about and what we covered and what we back tested were our traditional, put on at 45 days, take off at 21 days. But I think maybe, the next study could be more on the 0 DTE, since that seems to be what's hot now. I wonder if that will like die out, or if that's just going to remain the hot item.
I think it's going to remain the hot item for a couple of reasons. People like to get paid. Okay. Traders, I like to see results. Why have I been trading for the past 30 years? Okay, because I like to see the numbers go up and down. I like to see the results of my work immediately. All right. So like these long sort of businesses where, well, you might see the results in, Q4 2026. What? No, I want to see something happening right now. So 0 DTE options, especially because, as we know, you can define your risk with these iron condors and iron flies. That we do, that our viewers do,
and the wings are cheap.
Jack Tucker, all those guys are doing the same thing. You can define your risk, but you can actually make a couple bucks doing it, because the SPX is a $6,600 product. And because the index is so expensive, the options are rich. The options are big. So I can take $800 worth of risk and make $200 or $150 in one day, Jen.
Right.
That's not going anywhere.
People like that instant gratification. Sometimes, and this happened to me this morning. Sometimes when you have an option that's like so deep in the money and you're trying to roll it out, because I mean, I love the short term. I love the short term, and they expire and I get paid and it's over. And I had an option that was so deep in the money today. I had to roll out to December just to like have a decent roll, if that makes any sense.
Yeah, and just to make sure that I'm as transparent as possible, I have just a couple trades in those 0 DTE options. Most of my positions are going out between 30 and 60 days to expiration. Okay, if you went down my list of my quote unquote portfolio, the dozens of symbols that I have on, most of those options aren't 0 DTEs. It's the SPX, the NDX, things like that. But generally speaking, most of my stuff is out of ways.
So I'll show you our strategies that we covered and compared. So go like back to our original mechanics of choose close to 45 days. And I'll just go to this 49-day trade here, 49 days here. And we compared apples to apples using the same delta in every strategy. So when we looked at the Iron Condor, we used the 20 delta put and we made them $50 wide. So short 20 delta put and made it $50 wide, short 20 delta call and made this $50 wide. And this is about like, when we pulled one up a couple weeks ago to bring on in our piece, this is about what we saw, about a $1,500 collection on a $50 wide, and back tested from 2013 to 2025, putting this trade on at 45 days till expiration, taking it off at 21 days till expiration was one of, I think, the best trade of the three in low VIX.
All right. And then for the strangles, they use the same short options. In this case, what, the 6330s?
Yes. So 60. And when I say best trade, the Jade Lizard actually outperformed it a little in profit. So the Jade Lizard slightly outperformed the Iron Condor slightly in profit. They both outperformed the Strangle by quite a bit in low VIX.
So I was wrong. I was exactly wrong, Jen.
Well, I mean, I wasn't trying to put you on the spot, TP.
So Jenny, I get it. You can't go too deep into the weeds, especially with a bunch of risk managers. Okay. Here's what we can do that they can't, right? And you and Liz only have so much time to go over the slides, yada, yada, yada. I wouldn't do the same short strikes. Right? To get a $15 credit, I can go further out and get a larger credit. And see, we have so much more flexibility. And I think that's the point.
Yeah. So like if you use these same short strikes on the Strangle, you're getting $7,000. You're getting $6,000 or $7,000 instead of $1,500. So to your point, if you want $1,500, you can go to a 3 delta call and put, and you're getting $1,500. So there's not just this is the one strategy to look at, and I like that you bring that up, and nobody really brought that up. But you're right. If you're just looking for $1,500, the Strangle looked appealing because you're collecting so much. And I'll take these wings off so we can compare it. But I think in the low IV, you've got a lot less risk. So you've got just $3,400 in defined risk. You take these wings off. It's same short strikes. Now you're collecting because Val's a little higher now than it was before we left. And this is 49 days. I guess this is 49 days. So you've instead of 45 days, you're collecting over $8,000, which is a huge difference, but you're using $100,000 instead of 30.
Yeah, that's a big trade. Okay, that's a big trade. And there are a couple of points I'd want to make. First of all, a bunch of money managers aren't going to be picking a fight with you and Liz. Okay, they're not going to say, "Oh, excuse me." No, they're probably all terrified of you. Okay. The second point is that I would hold my option understanding to anybody, okay? And I think you would too, Jen, is we can pull apart a study like that and say, well, if you did this little bit different and here's why those numbers are the way they are. I understand what's going on. You understand what's going on. And I think our viewers can do the same thing. A bunch of money managers, that's not their business. Okay. They don't get paid to understand at this level. And that's okay. They have very comfortable lives. They're very happy with what they do. I'm sure their children love them. But the point is, we understand options to a different level.
So I think some of the people there, they weren't all money managers. There were big companies there. And and they all want to understand the retail market. They all want to understand. They say they see this boom in retail. They see this boom in retail, and they're thinking, what's happened to this world of trading? Like retail is booming. Especially these people in Europe, were looking at like, how do we maybe get into this world of retail because it's booming now.
They will try, they'll spend a lot of money trying to figure it out and trying to do it, and they will offer a crappy platform, poor customer service. No, I have seen this play out 7 times in my career. And I'm not just talking in Europe. I'm just talking just people who think they can figure this out. Oh, well, Preston did it. I can do it too. Okay, no, I'm sorry, you can't. It's hard. It's hard. And what the big tell for me is they're interested after they've seen the business, right? In other words, they see the retail trading, Jen. Oh, it's interesting, right? They don't understand that we built this retail business because we understand the importance of the individual customer, the individual retail trader. Most people don't. Most big CEO types, most banks, investment companies, they don't. They don't see it. They think they know everything. They think they can manage retail accounts like a bunch of sheep. That's not the way it works. Not the way it works.
I think that's a good point. That's a good point. And how available we are to our customers and how we communicate with them. And anyone can email us at any time, and they can they can tweet us, they can email us, they can contact us, and we have a network of retailers all trading together, talking to each other, sharing ideas.
You cannot do that with any other retail product. Okay, you have a problem with your dishwasher. Are you calling the CEO of KitchenAid or Whirlpool, whoever it is? No, you can't even find out who that person is. Okay, you have a problem with you didn't like the movie you just saw. You thought you paid too much money for it. You thought the movie stunk. You can't call the CEO of Sony you can't do that. You have a problem with a McDonald's hamburger. You can't call the CEO of McDonald's. No, you would get bounced back so fast. That's what makes us different. And when I say we created the retail market for options, that's why.
I like it, TP. I'm glad you came on. I'm glad you came on right after my return because I think it's a nice perspective to hear.
Thank you, Jenny. Jenny, and I love doing the show with you. It's fun. It's
But so like back to this strangle. To your point, if I wanted, collecting $8,200 in the next 40 something days using 100,000, yeah, it's a good return on capital, and closing this at 50%, it's still a good return on capital. But if you're doing a naked strangle, your point was you might use different strikes. You might, instead of this 20 delta, go down to the 10 delta.
Right.
And same thing with the top. Instead of selling this 20 delta call, maybe go to the 10 delta call or even the 5 delta call. And you're still getting $3,000.
And so if you are now, this is a big trade. Okay. It's a $100,000 buying power requirement simply because the SPX is a $6,600 index. Okay, because the buying power requirement, and it would be big even if you had this in a portfolio management account. They're expensive trades. Okay,
so, I mean the notional value is like $660,000.
It's huge. Okay,
now you can scale it down with SPY or XSP, or you could scale it down.
Or you could go into ES. There's different ways of doing this, but to what where most retail traders live, even if you had $1 million, I wouldn't necessarily put 10% of my money into a short strangle. Okay. Yeah, the return is okay. It's not awesome. It's okay. I think what I would do is, in a low vol environment, yeah, I would look to debit spreads if I were going to speculate. The other point is, too, if it's a low vol environment, Jen, I'm not looking at SPX.
Well,
I'm not trading
what?
SPX.
TP, so after going, we put a ton of time and research into our little stage show we had going on over there, and I went back and looked at study after study after study after study, and I found a very interesting study which said when vol is low, use the ETFs. When vol is high, use individual products. And that to me, okay, so we've been doing this for a long time, right? I started trading in the 90s. You've been trading since, I don't know, the 80s. So we've been doing this a long time. And when I read that study, I was like, that was kind of an aha moment for me, because I wouldn't have really thought that.
Well, and it depends. And, full disclosure here, it's that is true in a lot of cases. It's not true in every case. What I do in a low vol environment is, I'll tell you exactly what I do. I go to the watch list. I go to over into that little thing on the left-hand side there. Go to the watch list. It's right there. I go into S&P 500 or anything. You can go into anything, Jen. Liquidity. Just go into liquidity. High options volume. Good enough. Start there. And I click on IV rank and I sort by, you already have it there, that IVR number right in the middle. Bloom Energy. I have no idea what Bloom Energy is or does. All right, it's probably whatever, it's an energy company. Bloom Energy has an 89% IV rank. Pepsi has an 87. Quantum, Rich Tech, New Forest, Warner Brothers, 68%. Wolfspeed, whatever the hell these things are, Baidu, and 58%. If I am mostly, my main thing is product indifference. I don't care. Okay. I have lost money in everything. Okay, people say, I make all this money. No, I'll be the first person to say, you want to talk about real estate? I've lost more money in real estate than most people make in salaries in their lives. I suck at real estate. You want to talk about real estate investing? Talk to me, okay? I can tell you exactly how real estate works and doesn't work.
Oh, do you still have your Florida place, TP?
No, that my wife, they liquidated it. But we have my wife has her things, so that's her bit, okay? So but my thing anyway. So my point is, I look at other products. Do I know what's going on in Baidu? No. Do I know that it has unsystematic risk? Of course I do. Do I know it's undiversified? Of course I know Baidu is not diversified. Okay. Do I care? No. Nike, 52%. There's opportunity out here. This is what retail traders do that a risk manager or somebody at a big company cannot do. Here's why. When you are an employee of those places, you don't want to lose your job. It is completely defensive. The way you lose your job is by losing money when nobody else did. Okay. So if you can say, well, all the other risk managers lost money, well, okay, that's okay. But if I do a trade in Baidu, okay, everybody else is trading SPX Iron Condors and I do a trade in Baidu and I lose money, I lose my job. Okay. If I make money, nobody cares. If I lose money, I lose my job. So the risk reward for one of these corporate types of people is completely different than a trader. Okay. And so this is why I'm saying I don't let low IV in SPX stop me. Okay, it's low. Okay.
Well, and to your point, it's low. You can find products where it's high. You can find products where it's high. Right. And we were looking at different strategies in SPX, best strategy in low vol, best strategy, best performer in high vol.
And and without, I don't want to be a snot about this, but you have to keep it at the audience's level. Okay, risk managers, they don't dip into this stuff every day like we do. You have to meet them where they are, and they understand indexes and relatively straightforward option strategies.
And when you
Okay.
have a very large account, it's easier to have something that is 660,000 notional value than something like Bloom Energy that's $8,000 notional value for 100 shares.
Right.
You're like loading up on the
Right. You can actually offset your risk in the SPX or in the S&P futures, right? You can't do that in Bloom Energy.
right.
All right. But that's what I mean. But I will also say, because we can trade things like Bloom Energy, PepsiCo, Baidu, Oracle, blah, 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 right? All this stuff. We have so much more experience trading and understanding all the nuances of strategies and options and theory and all this stuff. If you're just trading one thing every day, or one little constellation of products, okay, that's what you're good at. Good for you. The world is moving way beyond you.
So just jumping out, this kind of jumped out at me, Rocket, because it's something we used to trade and haven't in a while. It's on the list here. I just I wanted to look and see, okay, Rocket's trading 2050. And I look at the chart because I like to, but it's up, but up
Why
from
not?
the teens. I wouldn't mind putting a trade on while I have you on. Ooh, look at that, cash secured. Don't like to see that.
Yeah, I don't. How's the liquidity? The liquidity there, it's pretty good actually. Just looking at the bid-ask spreads,
So
that's
we could do just a
fairly
little put
tight.
spread here.
Yeah, you could do that. So here's what I look at. Jen, you get a 79% probability of making half of the profit, which is about $35-36. That's not bad. And you are making $1.50, $1.45 a day on $233 of capital. That's very high. Okay.
Right. Yeah, the risk is very low in this. And honestly, like
I may join you on that.
maybe even add in a call spread just to get a little more credit.
Or how about a jade lizard? Oh no, because you get the cash secured put. It sucks up too much money.
But this is kind of like a jade lizard. So here I put on a dollar wide call spread and left that same put spread, and here I'm collecting almost $1. So essentially I have very little risk to just a couple pennies in risk to the upside, and my risk is to the downside, but it's only $200.
Could you pull that call spread in one strike and get a bigger credit than $1? Like that. I mean,
What that did is that changes the pop. That changes the pop because now we have risked only one side, so the pop went up to 71%, and the P50 is 60%.
It's a subtle change. It's a subtle change, but that's what it is. That's probably the trade I would do if I were going to do that kind of spread stuff.
Jade lizard.
Yeah, or it's
a skewed iron condor.
Jenny, it's a tailless lizard.
Right, it has.
You don't have a bunch of tail risk as you do with the jade lizard.
I like it, tailless. We used to call it like jade lizard with jade lizard with a tail or something. But here, yeah, it's a tailless lizard because we don't have that tail risk.
Yeah. And no, it was funny today. My wife and I were sitting out on our patio. The dogs were going bananas and screaming. And so what the heck's going on? They were looking at the roof, right? So I said, I bet it's vultures up there. Sure enough, there were two vultures perched on my tower. Okay.
What were they looking for? What was in your yard?
They were probably just warming up. It's a nice tower. They probably waiting for me to collapse, and they were black vultures. I know the difference between the turkey vultures or the buzzards and the black vultures. These were black vultures. Very cool. I just think the animals are cool. I like animals.
I don't know what's scarier, TP, the man with the whip or the vultures on your roof. Oh my goodness.
We're gonna get a whip.
Here, I just want to get to a couple of tweets coming in. Let me shrink this so everyone can see it. So here we have Ketan coming in. Quick $85 in the SPX 0DTE. So just what you're talking about, TP. Here are our viewers.
Yeah.
Quick $85 0DTE.
D10 is actually doing what most of those risk managers wish they could do. In other words, instead of going and talking to a bunch of meatballs at their companies every day, how can I just sit in front of my computer and pull out $85?
So nice work, Ketan. And Jack Tucker, 3 tranches of 0DT SPX Iron Condors and 1 Iron Fly. Collected, I mean, look at Jack Tucker, TP. He's so big. Collected $33,400 in premium.
Yeah. No,
And
that's
GPC to pick up 25%.
that is the I remember when I was in business school and the second year getting your MBA and stuff at Chicago, we had interviews, and one of the interviews was with a bank, and I didn't get the job. But I said, yeah, and I was already clerking, right, at the Board of Trade. I'm talking about, the guy was working for. The guy said, if I were you, if I could be you, I would stick with what you're doing. I would, he didn't say quite, he was hinting that I would quit my job at this bank and do what you're doing.
Well, I mean, we've talked about this before. Like, we do the show because we love doing the show. If we weren't doing the show, we would just be trading all day at home.
Yeah. I mean, and trading is an aspirational business. It's people on the outside wonder, how do they do that? What is it? It's not like watching a basketball, an NBA game. Well, these people can, they have 30-inch vertical lifts. Okay, I get that. I don't have that. But how do these traders make money day in, day out, year in, year out? What you and Liz do every day is basically teach people how to throw the ball. Okay, how to do it. How do you get these returns? Jack Tucker, all these people on here pulling out. They're not saying I make $1 million a day or $1 million a year. That's not the point. It's not showing off. It's saying, here's how I pull a couple of bucks out of the market. And if you have a big account like Jack Tucker, or smaller account, it's basically the same thing. What Jack Tucker's doing is just size. That's it.
Right.
The strategy is the same.
Right. And here comes Jackie. He has, this is what I did today too. He did a put credit spread. Jackie, put credit spread victorious, 1 minute trade, small profit. So I did mine too. And maybe I was a little too aggressive because I sold my SPX put spread around 9. And I think SPOOs were up 13. And I was looking for 30%. And right now SPOOs are unchanged. So I'm not out yet. I'm not out yet, Jackie, but Jackie is. So I'm happy for Jackie. TP, we only have 10 minutes and I needed your help today. So I'm going to ask for your help.
Yes, ma'am.
I need you to talk me off a ledge. So I have, and everyone knows this, like my brother's in the nuclear industry. I bought Oklo long ago. It went long ago. Like when everyone was first, starting to talk about nuclear. I have stock that I don't want to get rid of because I said like, I'll always have this. Think of my brother. I don't want to get rid of it. I was leaving for Germany and said, I don't want to worry about this while I'm in Germany. I'm going to throw a quick collar over it. So look at what happened while I was in Germany. This happened.
Yep. You can't do that, Jen. There's no walking away from trading.
So So here's my issue now. Here's my issue now. I have short calls against all my stock so I'm going to show you. And now I don't want to get rid of my stock. So I have short calls against all my stock. It's the 100s in October.
Yep. And it doesn't really matter what you sold them for. And what are they, 28 days?
Mm-hmm.
I mean, you could go out to like the 150s in D's. You got to go pretty far out.
Wait, you think I could go to the 150s and pay?
Well, you collect $20.
Right. I see. Like I'm
I
paying.
mean, what I'm trying to do is get you a little bit of it, or a smaller debit.
And I was trying to see like to not pay, I'd have to go to like the 120s.
No, that's why I hate. That's why I hate selling calls. If you want to keep the simple answer is just to buy them back. The simple answer is to take the loss on the calls and move on.
But it's such a loss on the calls. I mean,
Yeah, well, you're giving up, $25 of profit. That's what it is.
so it's like while I was gone, this turned into a meme stock.
Yeah. Yeah. I mean, it's what I would go out. I mean, it all depends on the credit, right? So you could go out to 63 days. You could
Or do you
double.
go far? Or do I go far? Do I go further? Do I go to
No, I would go to 63 days. I would open up the 63-day ones. You got to, and you're not going to make it back all at once. You're going to chip away at it.
Mm-hmm.
And I would so let's say you're short 4 calls. Let's say you have $400 worth, 400 shares of stock. I don't care how many you had. Let's say at 400 and you're short 4. What you could do is sell 2 of the no 150s or something like that.
Okay, so let's say I'm buying back 4 of these, and then
buy back 4 of them and sell 2. So you're under hedge. I hate hedging. Okay.
And sell 2 where?
So like the 150s. Go out to 140s or the 150s and chip away at the loss. Chip away at the loss. So you have, let's say you sold those 100 calls for 0. Let's just say you did, Jen. To make the math easy, you gave up $25 of profit on your stock. Okay. I would suggest going a trade small, trade often. Don't make it back all at once. Go in, chip away with 2 short calls in the no expiration, going out to 150. You take a little bit of
like
profit.
$4,500 twice.
Yeah, but you're going to continue to do this.
Mm-hmm, mm-hmm.
You're gonna go out to the D's, then you're gonna go out to the Jan, and you're gonna chip away, chip away, chip away.
I mean, you should have seen Liz and I. Like Liz and I in Germany, we were like, "What in the?" Because she has this too. She covered hers. She covered like all of hers, but 100 shares, right? And I had covered all of mine. So like, I don't know what went on when we were gone. So this blew through, and thank God. One day she woke up and she's like, "Did you look at Intel?" And Intel's another one that we keep carrying along stock, and then sometimes we'll before the trip maybe sell some calls against it or do something. And a lot of people they will like sell some calls and buy put spreads as some protection. So they won't buy. That's one thing that seemed very popular there. Like if you have stock or stock position, sell calls and use some of that credit to buy some put spreads to give yourself a little protection, which is very similar to the buffer trade.
I guess. I don't love that stuff.
But this happened while we were gone too.
Yeah, well, that's NVIDIA. I sold the 25 half put in there. I just think there's too many things going Intel's way right now. Especially, I don't care what the company does as a business. Just having NVIDIA on your side,
right?
So I sold a put in there, like the cherry bomb I wrote last night. That's all it is. And the skew is pointed to the north. Skew is pointed to the upside in there. So it still sees upside risk. Yeah. So, but that's how I go back to this. I have given up so much return selling calls against positions. And I don't necessarily have stock. I have short puts and things like that. Hedging killed. That's why I say hedge is a 4-letter word. Hedging has never worked. Hedging has never worked out for me.
From now on, I'm selling call spreads instead of calls. Because if I had a call spread, big deal. There are some positions where I'll sell call spreads instead of calls because I think, oh, this really has some room to run. I did not think at this level Oklo had so much room to run overnight. While I'm in Europe, it's like while you were sleeping, Oklo decided to have this like rip your face off rally. If I would have sold call spreads, I wouldn't have even cared.
Well, you would have given up maybe $1 of that $25 move. Okay, or maybe $2.
Yeah.
You'd have still captured most of that rally in the stock. And yeah, you wouldn't have made as much money selling the call spread, but it would have been a little money.
Yeah.
You know, and this is what I get to is same thing with rolling the short 100 calls. I would not try to make the loss back all at once.
Okay.
I would chip away, chip away, chip away. That's what I do. What did I do, Jenny? I did 17 trades yesterday. What was I doing? I was going through my year-to-date P&L, sorting by the losses, and I was going through my losing trades and saying, how by the end of the year can I get these symbols to be profitable?
Uh-huh.
In other words, can I get these losses positive? And if I had a $700 loss in Goldman Sachs, can I make $100 in the next week? That's what I was trying to do. I'm not trying to make $700. I'm trying to make $100. And if I can continue to do that, especially with what you guys say, trade small, trade often, just keep trading.
And you're right, chip away, because I was looking at everything this morning, like if I roll out to Jan or if I roll to all the way out to next year, and I'm in my mind have like death by debit. I don't want to pay a debit, but to your point, maybe I have to pay a debit this month, but then next month I will collect more. I get it.
And so there's no one answer. There's no best. Okay. There are only choices, and you have to pick the choice that's right for you. As the trader, I pick the choice that's right for me. You and I can think exactly the same thing is going to happen to the stock, but approach it with different trades, and we can both be right. We can both be profitable. And that's why options are so cool.
And I agree. And it's interesting because at the end of Liz and I sit together on the train and on the show and in the office, and we're always looking at each other's positions in each other's accounts. I don't have the same positions that she has. She has different things going on than I have, but somehow we're both making money, and we don't have exactly the same things going on. You don't have it.
Yeah, and so I think it's valuable. I think those people over at the Risk Management Conference probably had their eyes opened. I think you were probably eye-opening for them. I think they probably learned a lot of stuff from you, heard a lot of stuff that they wouldn't have heard elsewhere. Okay, and it's a completely different perspective. And I think it's huge that you went over there. Good for you guys. I know it's a lot of work. I know it's exhausting. I get it, but I think it's great.
They treated us like it was like we were at the Academy Awards. All the gifts we were given.
And why not?
Yes.
Why not?
It was wonderful. All right, everyone. Thanks for tuning in. TP, thanks for joining me. Everybody out there, have a wonderful weekend. Go try to find your own red flame shirt to wear.
That's right. Flame shirt Friday.
And remember to trade small, trade often, laugh with us, learn with us, and watch the TP&J show. Liz will be back with me on Monday.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler and, of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. Get spend it with my buddies, Mike and Thomas. Thomas, good morning. How are you, sir?
I'm good. Nothing too new to report for me. I mean,
fresh haircut.
Fresh fade.
Yeah. Fresh
Come on.
haircut. Fresh
Come
haircut.
Looks good.
Thanks. I appreciate that.
Mm-hmm.
Yeah, it always feels nice to get a fresh haircut.
Yeah. Did you trim the beard too a little bit?
I did the beard myself because
Okay.
my barber, they do like $20 to add on the beard trim, and I'm like,
And they got the razor. It's like,
yeah.
I need to take that risk.
I like the single blade shave is quite nice.
Yeah.
You know, I always find it weird how when you're at the barber, it's a person you kind of don't know, and you let them just put a razor
right there.
your neck, and it's pretty trusting when you think about
Yeah.
it. You know?
Could go wrong, but glad to see that you do it yourself. You remove your. That's the trader's mentality. The risk is not worth the reward.
Right.
So you do it yourself.
Yeah.
Yeah.
I think a haircut's in my future soon.
I could fade you up too. I mean,
Can you?
Yeah. In Afghanistan, I used to be the guy that faded my squad. So I got pretty good at it.
That was probably like a coveted, like that puts you in good graces, was there any like would you get like rations for it or something? Like was there any or were there multiple jobs like everybody had, like you were like the haircut guy?
No, I was just a nice guy.
Oh, okay.
Yeah.
All right.
Yeah.
All right. That's fair.
Yeah, just a nice guy.
Yeah. All right. I like that.
That's good stuff.
Yeah.
He's taking out a page out of your book. He's making some jardiniere.
Yeah, with my peppers.
Nice.
I should have. This could have been a joint operation.
Yeah.
Batista Gardens and the Westwater Farms. Collab. Limited edition drop. Yeah.
You could. You still could. You do it in the future.
Yeah.
In the
I
fall,
could
make
next
some
year.
sauce. Like you provide the peppers for his tomatoes to make the sauce.
Yeah.
And then
But he does peppers too.
Yeah.
That's what I was saying. We could do the jardiniere.
Well, you could make like a spicy pasta sauce.
Yeah.
You know?
That next year. I don't have as much land, so I can't contribute as much.
True.
You
actually have zero land.
I have zero land, but I have a metal balcony.
All you need is some sun and some dirt.
Yes. Yeah.
Yeah.
No, I got over the summer about 2 full gallon Ziploc bags full of peppers. I cut them up too, so a lot of volume. Not as much as I needed for my operation. I had to get don't tell anybody, but had to buy some extra peppers to get all So my label, which I have, says 98% homegrown.
98%.
It's probably like 70, 60%.
You gotta get John too. You can have the tasty trifecta with the jardiniere.
John's is good. I
pasta.
tried his last year. Really good.
That's got some kick to it.
Oh yeah.
Hey, the world is your oyster here.
Yeah.
So
So
you can do it.
next year we'll collab, a limited edition drop.
There you go.
That'll be hot.
Put it in the tasty store.
Yeah, $20 a jar.
Yeah. Just jack that up.
Yeah,
Actually,
organic.
by next year, it'll be $30 a jar.
Yeah, $30 a jar.
Inflation.
Organic, homegrown, local.
Mm-hmm.
Come on, it's easy.
Yeah.
Beautiful.
So what's going on here? I've
6666.
Literally, exactly right now.
Minutes.
6666.
Yes. Ominous.
Definitely
Scary.
ominous. We've got Fed tomorrow.
Yes.
So there you go.
Yeah, we got a lot of events this week. You have Fed tomorrow. I think you have some jobless numbers coming Thursday. Friday is triple witching, which is the expiration for stock, ETF/index, and futures, all expiring on the same day. Happens quarterly. It's nothing out of the ordinary, but it's a quarterly expiration. And then forgetting one other thing that we have. Vixpiration too. VIX futures expire as well on Wednesday, tomorrow.
Yeah, that about covers it.
Yeah, but that's a pretty action-packed week. No big earnings, but that's a lot. That's a lot coming. It's, I think is the FOMC announcement all but baked in, or no? I know this is like a, Dylan actually, our Super Bowl, our resident Super Bowl, aka the Supernova, as he has penned this market and its continuation to the upside into infinity, the Supernova, says that it's a dip. FOMC is a dip. It's a dip opportunity, but you buy them with both hands. So he says.
I kind of agree with that. I mean,
is it too easy though? Is that too easy?
Yeah, it's like, I think it could be a sell the news thing where we dip for a day or two, but I don't think it's going to derail the broader rally, So
yeah,
I don't know.
The until proven otherwise. Trade.
I mean, if there's a dip, it's gonna get smashed.
You could go
It'll be like
both hands. So both hands and feet.
We
just
joke
a full.
Yeah. Grab onto the wheel and we joke that these dips last like 2 days. But I think if there's a dip, especially if a sizable one, like 150 points, 100 points, could be like a 1 day thing.
How long?
1 day flash sale.
Okay.
And then we ride off into Santa Claus Rally sunset.
Yeah, 7,000 easily.
Yeah.
I mean, that's within stone's throw. True. What's the okay, I'm spooked situation? Like, how long is that dip? A week? 2 weeks?
I would be more spooked by volatility. So if there's a dip paired with a big volatility spike,
and vol stays high.
And vol stays high. But if there's a dip of 100 points, 150 points, and the VIX doesn't move that much, then that's what we're talking about here, where you might get a little dippy do, and then you see a dip buying situation here. But
150 points, about a 2 standard deviation.
Yeah,
I have about a 71 point expected move. So just to put that into context, which is shocking.
Yeah. Well, there's
how low vol is.
Oh, it's ridiculous. There's a 10-point expected move for the rest of the day today, which is extremely low.
Tells you nothing about to happen, or at least the market says nothing happens.
Yeah. And then you have almost a 50-point, 44-point expected move for tomorrow. So that's something. And then there's a little extra for Friday. So, Thursday. So 60 points through Thursday. And then it dies off, again, 70 points through Friday. So you're seeing a big chunk of the implied volatility for the rest of the week in SPX priced into tomorrow and the following day for maybe a follow-up reaction move. So we shall see.
You do have relatively high volume, especially for halfway or less into the session here. 890,000 contracts of the E-minis have traded so far, probably kind of tightening up, buttoning up into tomorrow's festivities. Is that at like middle of the day?
It's 1 o'clock.
1 o'clock?
1 o'clock, yeah.
All right, so we got middle of the day tomorrow, so I'm sure volumes will stay relatively high into that, just as people place their bets. The red or black.
Yeah. I think
green.
You'll see a vol pop. You'll see an extrinsic value pop leading up to the announcement. And
then just
it'd be good.
Got volatility a little bit today.
But yeah, I'm leaning towards. I think it seems a little too easy for it to just be like, okay, 25 basis point cut, and then the market rips higher. I think you get a little head fake.
See, I think everybody's in the dip and then buy it. Can't. Like that's what I feel like is like.
So what's going to happen then? If that's consensus, it can't happen. So
then you either got to play for the face ripper or the big dip. So you got to play for vol.
Yeah.
I think you got to play for volatility in either direction.
Yeah.
Because there's no vol right now.
I mean, we've silently climbed to 6,700
without a downtick.
Without even
I think we had like 5 or 6 straight up days.
Yeah.
And then one day that was like down like 3 points.
Yeah, like today.
Yeah.
Down 12 points.
Nothing. Nothing. Just shuffling of cards.
But yeah, it'll be interesting to see what happens. Of course, we will be streaming live right before it.
Well, Tom will be true. It'll be truth or skepticism. So maybe you'll see Tom like squirm a little bit, depending on what way the market goes.
Yeah. And then we've got another event this weekend.
Yes.
So sign up for that. if you haven't already.
New York.
New York.
Mike and I will be hosting on Friday. My dad and I on Thursday.
Yeah, September 19th.
Interesting day.
It's going to be glorious.
Ooh.
Get your bagels.
That's another angle I didn't think about. Tom
Gone.
And Tom gone is usually volatility.
Yeah. It's just the way of the world.
End of the week,
Yeah.
too.
If anyone on this network is gone, there's something that's happening.
Yes.
So we'll see. I'm hoping we get a little dip because I want to buy it with both hands.
Yes. Okay. There you go. Well, to that idea, to pump the cherry picks, which is coming out later today, if not soon. Dr. Data in the lab right now working on that one. We're taking a look at rate cuts and rate hikes, just like rate decisions, because there really haven't been that many over the last 20 years prior to COVID. COVID's been like, kind of the big, and then you had like the crash in 08. Those have kind of been like the big rate decisions. So we're looking at just like kind of indicating those on a long-term chart and showing, price movements around rate cuts and increases. So should be some good data for you to look at there.
Yes, I've got the link to the Cherry Picks newsletter pinned at the top of the YouTube chat.
Yes.
If you want to click on that, get it for free, definitely do so. We're also streaming live on YouTube. Just head over to the Tasty Live channel. You'll see this video front and center. Throw in your trade ideas, questions along the right-hand side chat.
Yes. Quick little market update.
Yeah.
Just to point out.
Please.
6666. We were there for quite some time. We are now a point higher. We're down 12 on the day on the E-minis. As I said earlier, we've got about 900,000 contracts traded. A relatively high amount of volume for the middle of the day, likely leading into tomorrow's events. People kind of buttoning up the, closing the hatches on the submarine doors. NASDAQ down 31. You got the Dow down 145 and the Russell, the weakest of the group, down 13. A little bit of a surprise with the way bonds have been moving. Oil catching a little bit of a bid, /CL up $1.09, 64.11. Volatility futures, as we were alluding to, a little bit bid today, up 12 ticks, but certainly near the lows here. Bonds 117 and change, almost 118. I think we had a 118 handle. We did. 118.01 was the high of the session here, so rates continuing to come down or at least stay down here. Gold up $5. It has gone parabolic. Silver actually down 14 cents here after its move higher. And Bitcoin going from red to green, finally kind of moving into the risk-on sentiment here. The money printer go burr sentiment. The rate cut sentiment here. Up $500 on the futures. Spot up 400 and change. Ethereum as well higher, or it's lower, higher from the open. Down $54 at $44.65.
Lovely.
U.S. dollar getting smoked, too. Another thing to add. Yeah, don't look at those Tasty FX positions. Not looking good. We were due. The gambler's fallacy.
Yeah.
We were due for some pain.
Well, technically.
About $300.
Well, the beautiful thing about these contracts is that.
Gave up half my profits.
Technically, you don't have to close them. I've only closed winners on this little platform here.
Yeah.
On Tasty FX.
Mainly
because they're so small that I totally forgot that I have 4 positions on it.
Yeah.
But my total P&L is like $20.
Yeah,
so,
I have a sizable short, a long U.S. dollar, short basically everything else.
Yeah.
Position. Which is not good right now.
I'm short the Aussie dollar, short the New Zealand dollar, short the Aussie CAD, short the New Zealand CAD. So I'm going to close the New Zealand CAD that's up $8. Just take some risk off there.
There you go.
But yeah, need some movement in these U.S. dollar pairs.
Yes.
But yeah, we trade such small lots that it's not an issue either way.
Becoming a thorn in the side. a little bit of an
annoyance.
Yeah. Yeah.
A little splinter.
Yeah. I can feel the knife to my throat like a haircut.
Yeah.
I'm a little scared right now.
It's okay.
I'm trusting the process.
Yeah, I mean, DXY having its worst day since August 22nd.
There you go.
This is basically the lows. I mean, we're right
Back in
there.
July.
So the 3-day rule. It's been about a week since we put these on. So if you've been waiting to get your better entry, it's now.
33 cents off the July low.
Beautiful.
Yeah.
I closed a Walmart call that I had left over. I had it for like a month, and it finally recovered from earnings.
Nice.
I initially had a call diagonal spread for earnings. It was the 100-105, long October, short the August 22nd, 2-day for earnings. Walmart sold off, held on to the long call forever, and almost a month later, back in the green, 80-cent winner. And then Adobe, same story. I had that short put spread, 5 points wide, that I had on for a while actually, but it basically naturally turned into an earnings trade just because I had it on for earnings. Got the rally there, closed that for $145. So two winners to offset my implied losses here in gold that refuses to go down.
Yeah, I got some tough positions there.
Potentially TLT, but someone in the YouTube chat asking about my TLT position. I've got the 90.89 put zebra. 3 days left. So this encompasses the rate decision, and I assume we're going to see TLT move based on what is set. So I'm not doing anything there. It's trading for 50 cents. It's down $100, but if we get a swift sell-off in TLT, that could come back very quickly because it was right there. It's a 90.89, so it's literally just out of the money.
Very nice, very nice.
That's about it.
Quick little shout out if you like the platform and you want to see the trades as well. Open a Tasty Trade account, tastytrade.com. Give us some love. Keep the doors open.
Yeah. Got some cool stuff on the platform. Active Trader tab.
Yep.
V2.
Yes.
Tasty FX. I mean, you can literally do everything on this thing now.
Yes.
Magical.
We got it all.
But yeah, let's pop over to the slides and talk about the wheat, which I've been long for 53 days.
I closed my put spread today into this up move, but I had 10 days left, so maybe this is my trigger to get a new position on.
Yeah. I mean, I got in a new position today. I did the 66-day out. I sold the 520, bought the 510 put, so short put spread, hoping it stays above that. We're at 532.50 right now. Today's a big day up. A lot of export pressure is building. It's after this extended downtrend. You know, we've had a nice little move up already, and we're still getting some strong buying. So
you haven't really talked to like ags or wheat in quite some time.
Yeah, I had to throw it on. You know, I'm long wheat, I'm long soybeans, I'm long corn, so I'm long the triplex of products there.
Okay. Corn man is officially back.
Yeah.
I like it.
Yeah, I think we got something here. So we'll go to the slides. Go to the first slide. And these are just some headlines from Reuters. So Asia importers increasing their purchases. Indonesia, 500,000 tons recently. Bangladesh, 250. Sri Lanka, 100,000. Indonesia Wheat Flour Mills Association signed a memorandum of understanding to buy at least 1 million tons per year through 2030, and that's starting next year. So this new crop that's being marketed, that comes into play. So a lot of exporters are now deciding to buy U.S. wheat, and one reason they're doing it is because the prices have come down so much. So that's made it more attractive. Another thing really helping wheat and all the commodities today is that weak dollar. So a weaker dollar, makes it less expensive for foreigners to purchase. Since you're buying in U.S. dollars.
Okay.
And last week, we had the WASD report. They increased their wheat export outlook by 1 million, so to 24.5 million tons from 23.5 million. So the forecasters and the actual purchases, it's all looking pretty good. We'll go to the next slide. And this shows the actual amount of accumulated exports for the world from the U.S. So that red line is this current year, and just in the past 3 weeks, we've moved back above the previous year. We were trending right at it, just slightly above. We started the year, the first half of this marketing year, so June, July, a little up, but pretty much in line. And now we're starting to pull ahead. So we want to keep seeing those numbers, that red line go up. And I'm assuming it will with all these new purchase orders and news of purchasing coming online. They'll show in through that data in the next month, 2 months, and so on. So exports are looking good. That's really important to the wheat complex for the prices, everything like that. And we'll go to the next slide. And this just shows the shorts versus the longs. So the shorts is the red line, the longs is the blue line. Longs really haven't done too much, through the past, 2 years. Shorts have built considerable positions a few times, especially earlier this summer in May, started to dip through June, and then July trading. Shorts rebuilt that position. And per the Friday's COT report that goes back to Tuesday, they built a little bit again. But that was before, today's move is a pretty big move. It is the biggest move since August 18th, so in about a month. So, I think with all this news coming online, the big move today, we're challenging the swing high from August. I think the shorts are going to concede pretty soon.
Okay.
Especially if we break that August level, which is right at 534 and 6.
Okay.
So we're right there. Today's move, it could actually be this could be forcing shorts out, some of the price action you're seeing.
Okay.
It's hard to know until that COT report comes out, but on Friday we'll get the data. They'll be up until the end of today's closing trade.
Okay.
So we'll see Friday if shorts are starting to get out of the market. I'd assume they would.
Yeah.
Shorts have plenty of more room to run to the downside. And we saw it back in June. We saw that spike. We saw shorts come out really quick. So perhaps they're on the edge.
That's a natural buyer.
Yeah.
So,
Squeezy.
Yeah, and there's good volatility in the product. I mean, the IVR is around 55.4.
Yeah.
Kind of in all the things. Corn, pretty good there. Soybeans, not as much, but still you got some volatility in there.
Do you think you see kind of across the board upside in all of them, like in corn as well?
I do, yeah. Yeah, I'm long corn and soybeans as well. Corn having a really nice strong move. We are at the highest levels since early July. We're trading above, all the relevant EMAs, stuff like that, above the 50-day SMA, et cetera. And then for soybeans, it's kind of the same story. Not quite as strong of a move as corn. But the China story is still holding soybeans back to a certain extent. The USDA, there's an announcement that they might step in and do this subsidy program for U.S. farmers because these soybean farmers are, they're getting hurt a little bit by the trade wars and China not buying. Brazil has displaced a lot of that U.S. product on the world market, especially for China. So, that might be a story that doesn't change anytime soon. It seems like China is pretty done with U.S. soybeans. So it would have to be, a specifically carved out deal within the trade agreement to come back into the U.S. soybean market. But U.S. soybeans still can't compete with the prices that Brazil is giving. Whereas wheat, we've become competitive again with those Black Sea exports, with Australia, with India. So that's part of the reason why these importers are taking in U.S. product again.
Is the U.S. dollar story a potential headwind here if the dollar goes higher, which we are obviously positioned for? Would that kind of, in the short term, it probably doesn't stop?
Yeah, in the short term, it doesn't.
Yeah.
I mean, it's really on market conditions more than the dollar, but the dollar is something that's like I see as a secondary factor. You know,
Yeah.
when you get big moves in the dollar down, you usually see commodities get a lift.
Mm-hmm.
You get, big moves up, commodities usually take a leg down, and that's because all these commodities are priced in U.S. dollar, oil,
Yeah.
wheat, soybeans, gold, everything. So,
Okay. So you probably attribute the dollar move to what's happening in oil.
yeah, definitely.
I know there was some Middle East stuff today. There were like some missiles from Houthis somewhere, Yemen, something like that. I know that
Yeah.
that stuff is still brewing, but you think that move today is just kind of dollar weakness?
Some of it. I mean, there was a Ukrainian drone strike on
Saw
a
that.
Russia oil refinery a couple days ago, and that looks like it actually inflicted some considerable damage. So Russia's exports are looking to fall a little bit. So I mean, the geopolitical premium is still there.
Yeah.
Especially when you look at U.S. and global inventories have been building, and OPEC's expected to gradually continue their production increases.
Uh-huh.
So, I mean, I'm still in the iron condor for oil, and it's been working out really well. I'm probably going to take it off soon, but I got it between 60 and 67.5.
Nice.
And, we just been slinging around 64, 65, 63, so.
Love to see it. Yeah, it's been pretty range bound, even though we've had bouts of realized volatility for sure. But that 60 floor has been a pretty nice stable floor that hasn't been penetrated for a while, since June really.
Yeah.
But yeah, I like the dollar weakness, maybe funneling into this wheat rally, especially with your first slide showing all the orders and commitments coming in.
Could call it a hedge for your long dollar.
Certainly could. But yeah, I've been long wheat for 53 days, which is.
And you're getting bailed out today, kind of.
Yeah.
I mean, you're getting some money back.
Bailed out.
Yeah.
Ooh.
There we go. Money.
Yeah, I actually did make an adjustment. I had the 595 short call against my long option. So I own the 560 November call, 66 days out. I had the 595 short 10 days out that was worthless. So I rolled into the 580. So I moved it down and out to the 38 day and picked up $125. So my basis on this is like $800. But yeah, if it rallies, we'll be just fine. But just wanted to do something into this little rally here.
Mm-hmm.
I'm not sure if this is a sign of farmers being in distress right now, but the farmer in back of me, he baled like all of his grass to turn into hay, and he set up like this huge tent. I'm like, what is this guy doing? Okay. And Saturday, there was music playing, like really loud music. I'm like, what's that music? And then it's like 11 o'clock, it's still going. 12 o'clock, it's still going. 1 o'clock, it's still going. And I like walk down the street a little bit, and I see like there's a wedding going on there. This tent is still up today. So I'm like, is this farmer now hosting wedding events in his field?
Oh, maybe that's a sign that the yield isn't good, or
Gotta offset.
prices are too low.
Do weddings on a farm field.
Wow.
For pennies on the dollar.
Yeah.
Could be a family thing.
Yeah, it could be. I'm not sure if it was a one-off, but I'm
Yeah.
like, is he now hosting?
Yeah.
weddings?
Okay.
That'd be wild.
Yeah.
That would be something. But was the music good at least?
I heard some Blink 182.
Oh.
Okay. So it wasn't a live band.
At first, I'm like, oh, teenagers are having a house party somewhere. And then I
Nice.
heard Blink 182. I'm like, teenagers don't listen to
No.
Blink.
They don't even know who Blink 182 is.
No.
That's the crazy thing.
Right.
They'll be at Riot Fest.
Yeah. Yeah.
It's wild.
Riot Fest this weekend. Gonna be fun.
Riot Fest is definitely like a millennial thing.
Oh,
It's
yeah.
the Unk. It's the Unk show.
Fest.
It's the Unk Fest.
Yeah.
Unk and Auntie Fest.
I mean, they've got Weird Al Yankovic there.
That's
when you know.
That's when you know.
Yeah.
Oh,
great.
Amish Paradise.
Yeah.
Good one.
Classic.
Great.
Classic.
Absolute classic.
Yeah. Weezer.
Yeah, Weezer.
We saw Weezer in London.
Seeing him again.
Yeah, that was fun.
Jack White.
Jack White. Yeah.
Beautiful.
Yes.
So are you? Did you get in?
I did. I sold a put spread in wheat, and I went a little shorter dated. I went in the 30 day.
Yeah.
38 day. 520, 510.
Perfect. So yeah, that's $170 almost, risking 330.
Yes.
I'm in the longer term diagonal spread, long the 560, short the 580.
Okay.
So looking for a bigger move there, but still plenty of time. I remember placing that trade and I was like, this long option has like 100 days on it. So
just let it marinate in your portfolio.
Exactly. So yeah, we'll see what happens, but definitely looking for a rally. And I agree with everything Thomas said here. I think if you get a move above this resistance point, maybe you see a gap higher, some shorts covering, which adds to the pressure of the upside. That would be great for all of us.
Yes. We had somebody ask about lean hogs as well. Or was it live cattle? LE.
Yeah, I mean, the hogs have been doing good. Live cattle had a dip and then it got bought up, but we're still not back at the highs. That screw worm thing, it's still going on from what I've seen.
Okay.
So USDA doing a lot of stuff with Mexico to try to get this under control. But, you know, a lot of it, I think, has been priced in. And I think this recent dip that you've seen is all of those longs, you know, all the way back from the whole year, essentially.
Yeah.
Taking some profit. But we're rebuilding and, you know, we're holding some key levels. So I'm going to look for like something back above 240 before getting back into live cattle, because I've had a few trades. They've all been good on it this year. And here we're kind of in the middle of this recent high-low range that we've carved out. So I want to see it reestablish the trend before I get long again.
Okay.
Hogs, I have not looked at much hog stuff lately. I mean, I'm assuming the supply is you know, helping that move here, but really strong and seasonally not the time you usually see it at.
Yeah, it's turkey time coming up. I mean, like, you know, we're going birds.
Right.
No hogs.
Yeah, I mean, I wish there was turkey futures.
Yeah, that would be interesting.
I mean, you do have your holiday ham.
That's true.
I would say that's getting more popular than the traditional turkey.
I don't know, turkey.
You know, we still do a whole chicken in my house because I'm not a fan of turkey. It's too easy to dry out.
It's just like,
it's hard to make a good turkey.
It is.
It's much easier to make a good chicken. A little beer can chicken, just toss a little beer in there, let that thing just evaporate.
We usually do a turkey breast so that everybody can have like one little piece, you know, like so you do the holiday thing, you know.
Yeah. And ham's easy too. You just get a pineapple, just throw that pineapple on there.
Well, we go.
Wait, 7-Up, right, or something like that.
Something, yeah.
7-Up.
We do a like lasagna too, sausage and peppers. Make it a little Italian. Have the little tiny little bite of turkey.
As one must.
Yes.
So yeah, turkey. Who needs turkey futures?
No.
Beautiful.
Yes.
Yeah.
Good stuff.
Love to see it. Would love to see wheat rip higher. And we will be strapped in for it. All right, jumping over to the YouTube chat now. Again, if you want to join us there, we are streaming live on the Tasty Live channel. James Bond, happy pre-hump day.
Woo!
Quite literally. Great haircut, Thomas.
Yes.
What are your thoughts on MCL? Are we just looking at a range? If we want to trade crude oil and not the futures, what else would you trade? XLE? Certainly could. USO isn't something we normally trade.
I haven't really looked at XLE in quite some time.
You could trade some of the majors too, like Exxon or BP.
Yeah, Chevron. I mean, there's a bunch of them that have pretty good liquidity. There's XOP too if you want to do more of the explorers.
Producers, yeah. What expiration are you in for your CL Iron Condor? Are you to the 30-day or
30 days out right now. So, I'm going to take that off soon or maybe roll it.
Yeah, I mean, vol isn't like super high there.
Yeah, it's come down a bit from the 20s. I think we're high teens.
Yeah, if you're doing defined risk, CL, larger contract, you could go to MCL if you're looking for undefined risk. $700 in buying power for a strangle. Just threw on like the 60, 70 strangle, collecting $1.20 over 30 days. Not too crazy, but I've just been buying the micro crude contract on dips closer to 60.
Yeah.
But yeah, if you want to trade this range, it's certainly been range bound. But I like Thomas's strikes. The 60, 67.5 covers the recent range.
There we go.
You just do the...
I did a 60, 69, and then I went 1 point wide. So small little... I did a 30-cent credit, so it's $300, $700 risk.
Yeah.
But I did it, my risk is below 60 and above, 70, 69, 30.
Yeah.
So
Which is the recent range for the last 2 months.
Yeah. Oil's been a great trade.
Yeah.
Pretty much, I mean, we've had some short-term volatility, but we've stayed, 60 to 70 basically, for the last year or so.
Yeah. So looking back at this TLT Zebra, I'm actually going to buy back this short put for 9 cents, just in case.
Yeah, you were going no cuts.
Yeah.
I
was going TLT sell-off, and it has mooned. But I placed it when it was up here at 90, because my strikes are at 90, 89. I just bought back the 89 short put for 9 cents. So I now just have 2 of the 90 puts on, 40 cents out of the money. If you see a adverse reaction tomorrow, if you get a drop down to 89 or below, this trade will be just fine. So that's what I'm playing for. Risking 60 cents to potentially make back 200 on a 1 point sell-off.
I know that 25 basis points is basically baked in right now. The probability of a 50 basis point has come down significantly. It's only at about a 3%, 4%-ish shot at that, which, is obviously a very low chance of that. You think anything moved? I think the narrative in the news cycle has kind of talked about the change in projections going out to 2026 being kind of the market mover event. We've already priced the 25 basis points in, or at least we can say we all know that it's coming. You think Powell does anything that changes any of that projection? Like, you think it seems like it's very the market's very gung-ho.
Yeah.
It seems like. You think he does something to kind of tamper down the expectations, or he just does data-dependent status quo again?
I mean, I think the risk is going to be from the press conference and not the move itself, unless, of course, we get no cut or 50.
Yes.
Which would be way outside. Powell will come out, justify why. Keep saying we're data dependent. We've seen some underlying weakness in the labor market. Inflation has, been tame.
Yeah.
They've moved past the tariff-induced, one-time bump that they've been saying was going to happen.
Mm-hmm.
I don't know. I think if he comes out with a slightly less dovish commentary the markets are expecting, so I think this one we also get an SEP, a summary of economic projections. So you're going to be looking at the dot plot. You're going to be looking at, GDP expectations, inflation. So there's going to be some things to dig into.
Yeah.
I think this is going to be one where you see the initial move reverses, maybe.
Okay.
Or an initial reaction doesn't get follow through. So maybe something like that. I'm not really exposed much to the equity market going into it.
Yeah.
So, I'm going to base my trades on what is said, in which direction we end up by the end of the day, not the initial reaction.
Okay. I feel that. I figure we got to get some tweets, too. We're going to have some Trump tweets.
Yeah.
I don't know if 25 is enough to silence him.
Not enough for them.
Yeah, I don't think so. So I'm sure we're going to get some commentary there. Maybe that's another market moving event. I should have added that to my list of things this week.
Yeah.
The anticipation
of some tweets.
Of some truths.
Yeah.
Some truths.
Yeah, I agree. I think we get 25, and then if there's a move that implies more cuts sooner in a reactionary way, like an emergency type way, I think that's where you get the sell-off.
Mm-hmm.
But yeah, I don't think they're going to do 50. I mean, they're not. They can't do 50. They would shock the market if they did 50, which they're not.
Yeah.
It's not their objective.
Yeah.
So yeah, I think you get 25, and then maybe the narrative is digested in a 50 basis point way, even though they're getting 25.
Yeah.
Natty gas. Got any interest in that? Have you been looking at it? It's having a move today, a little bit of a wide range there. I know we've been dead wrong, horrible in our trades.
It's the worst thing I've ever. I might as well turn my off.
Going into the winter.
Yeah.
When seasonality, is there anything to it here?
Yeah, I mean, I've held through. I've been in this position for like a month. It's a short put spread with the short at 3.
Okay.
So we're 9 cents above it about now.
Go.
It's. I'm only 9 days to expiration on it, so I'm hoping there's a move higher in the next day or two, and I can get out.
Yeah.
With a decent profit before going down to the wire on it.
Mm-hmm.
The weather forecasting through the end of the month is actually pretty supportive for bulls right now, and I think that's why we've come back above 3.
We got 70s and 80s all week today, or this week.
Yeah.
Yeah.
I mean, today's like 70 something.
It's like the corn sweat's back.
Yeah.
Yeah, so I mean, right now the weather's working out for it, but it's still, inventories have built higher than average, through that end to August, the past few weeks. That's put some pressure on prices. Europe is going to have to start getting a lot more gas in the next couple months. Okay. So we're going to have to see this. I'm going to be watching the spread between the Dutch futures and the U.S. price.
Okay.
And that still hasn't, come up much. It's still trading only about $8 a premium in the European price versus the U.S. price. That's down from where we were in August, around, a good 70, 80 cents higher.
Mm-hmm.
The U.S. premium versus the Asian market is getting a little bit more of a lift, but not enough to really, ramp up exports to 100% and where you're expecting it to stay there.
So weak dollar isn't really at play here.
I mean,
as much.
Not as much, I don't think. But my view is that we stay above 3. That's the way I'm trading it.
Mm-hmm.
We've moved a lot higher off these August levels. We were trading as low as 2.6. So I mean, we're 40, 50 cents above that right now.
Yeah.
So we got to take out the high from early September, right around 320. And if we could get back above that, I think then we start eating into some of these levels that we traded in early July. And I think the winter, moving into the winter now in a couple months can help us do that. So, I mean, if I had to pick a direction, I was putting on a new trade right now, I'd be long more than short.
Okay. Okay.
Fair.
But expect that volatility. Today's a pretty wide range.
Oh, yeah.
Yeah, it's a huge day.
Yeah.
I don't know if there was something that happened today, like a report or something like that, because this is
a big range, the biggest range I can see visually since July.
And it just moved at right 30 minutes before we came on the show or so. Got up to 3-1, 3-1-2. Chi-Town.
Yeah,
it's our
crazy
area
range there.
code.
Huh?
That's our area code.
No, I know.
312.
I know.
Chi-Town.
I know what you're doing there. 312. It's also a beer.
Yes, it is. Quite delightful beer.
Lovely beer.
Lovely beer.
Shout out Goose Island. Ooh. few of us are still managing Oracle after earnings. I have a 300 straddle. It's right there in the center. If vol expands due to the VIX or from that move, does it make sense to just keep managing the trade indefinitely or cut losses at 3,500?
Do we know the expiration? Are they? 'Cause if you got September, you got an absolute bailout here.
Yeah. I assume they're in October. But, I mean, the premium is still there. 55% is nothing to scoff at. If you're rolling from September to October, you're picking up $2,000 per contract. If you're rolling from October to November, you're picking up $1,100 per contract if you just kept the same thing. So it's, it's a tough question, but if you have a larger account size and you want to stay in this thing, then you totally could. But there's also nothing wrong with exiting on this perfect move for that position, at least right now, and going somewhere else.
Yeah. You could, I mean, if you have the straddle and it's a little bit too hefty of a position or a little too much risk, maybe you take it and roll it to an out of the money strangle, or do that in combination with rolling out to November if you're in October and you want to give yourself more time. That'll move where your risk is a little bit further out on the curve. So that's another option. But yeah, I mean, this was 40, 50 points higher. So if you've held through this, you got back a couple G's, comma, as the kids would say.
It's a good move down for sure. Long dollar, how would you trade that with futures, or do you only trade it with Forex? So you can look at currency pairs against the US dollar, but the Tasty FX embedded platform is certainly the easiest way to get super small and have a continuous position that you don't have to manage.
The euro is one of the bigger movers of the group. It also has relatively high implied volatility. I've been trading it kind of range bound between this 119, 115-ish range. So I've had some iron condors here. If you want to just lean directionally, you could look at a call spread here. I already have a position on here in the 52-day. So I am, I have some short delta here as well, along with just the currency pairs themselves. But yeah, this is a move. I haven't looked at any of the other ones really. Like the pound is moving higher as well. I mean, the dollar is weak. Everything else is strong. So pick your poison. But I think, from a liquidity standpoint, options specifically, I would look at the euro, 6E.
Yeah. Some people in the chat talking about UUP as well. UUP has super low implied volatility, but UUP.
It's like the Invesco.
The dollar. Yeah.
So yeah, I mean, there's nothing really spread off here. I don't think I would sell an option against it. If you want to just buy a call, fine.
Yeah.
But it's not projected to move all that much.
Let's see what this basket is.
This chart looks like it's moving, but it's only.
Is this an
80
actual
cents.
ETF, or is it a VIX type, it runs off of DXY or something like that? Let me see. UUP. So it has government agency portfolio. I don't even know what that means. I know that it does track the dollar. I don't know if it's actually, I see they have 16% in T-bills. Let's see the CLTL.
Yeah. I mean,
I think if you're looking to do something, either use the FX products directly, because that's pretty clean exposure, or you go and do something in the euro or British pound.
Yeah.
Too.
Any plays in live cattle? We talked about it briefly, but
yeah, I'm waiting. If we go back above 240, I'll get long. Maybe if we drop below this recent swing low, 228, maybe I'll get short.
Love it. What stock or ETF is liquid for commodities? FCX, MOS, DBA.
Are we talking like gold and silver?
Are we talking stocks? Because like for gold, it would be GLD for gold.
Yeah.
SLV for silver.
Yeah.
Yeah, for the ETFs, yeah.
NEM is one of the miners. GDX, if you want like a GDX and GDXJ are the two minor ETFs. Gold miners, not minor.
Yeah. I mean, they're definitely products. There's just not much volume there. Like DBA,
GLD is
GLD is fine. SLV is fine, but like DBA, only 75K contracts, stock contracts.
Yeah.
FCX is better, 4 million. Freeport.
Yeah.
And then MOS, 1 million stock. So.
I mean, the problem with the ETFs that aggregate commodities is there's already so many good products. You know, for oil, there's USO. For gold, there's GLD. There's already so many good things where you don't have to be in a basket of them, maybe. So.
Yeah. Or you just use the futures. I mean, the futures are liquid. You can make them small, sell spread.
Mm-hmm. Micron, 170, 175 call ratio.
This stock, I don't think I've traded it a ton. I don't know if my win percentage is exceptionally low to either direction.
I mean,
what are they thinking? What are they putting me in?
Look at that thing.
I know, it's straight up.
Call ratio 170, 175 in October. I would rather give up some of that credit and move it to a 170, 180.
Yeah.
Make it wider, especially if you're bullish. The 5-point wide for higher credit is more bearish. It's kind of just like selling the short put or the short call. With a 10-point wide where you're picking up $2, or even a 15-point wide where you're picking up 50 cents, that's much more bullish of a setup because you get your profit from the spread moving in the money.
Yeah. 10-point wide strikes above 190. I was looking to just cut some buying power and buy a wing, but you got to kind of move the ratio a little bit closer if you're going to do that, just because the 10, going from 200 to 210, you basically use the same amount as a naked position.
Yeah.
I don't know if I want to step in front of that train right now.
Moderna, what's going on with that? mRNA, big rally today.
That's a unlovable chart right there.
Agreed.
No more jabs.
No more jabs.
As they
Jab
say.
free. Jab free since 2023. Let's see. What do we got?
I mean, you could sell some puts there. $1.40, 24 strike, $800 in buying power. It's not top of my list.
What do you think of BLSH? Bullish? I don't even know. I've never heard of this thing.
Isn't this another broker?
I don't know.
Yeah.
They have earnings tomorrow after the close. Hard to borrow.
Cash secured.
Don't like any of this.
Yeah, I don't want any of that.
Don't like it. But yeah, it's tough because it's not that liquid in the options market. And there's not much going on here.
No, you can't do that.
Baidu, Iron Condor.
China stocks are flying.
Yeah, I was in an Iron Condor on Baba. Trying to get out of that.
Yeah, that's some pain there. These things have just gone nuts.
Yeah. Baba, or Baidu. Iron Condor October, 115, 110 put spread, 130, 135 call spread.
October.
Mm-hmm.
So you're right you know, you're right inside the expected move, basically a 50-50 shot, a little bit less.
Yeah. Certainly a chicken iron condor.
Yeah.
By definition, collecting about half the width of the spread, a little more, which is why the pop is under 50% because you're within the expected move.
Yeah.
But I don't hate it if you think, if you plan on holding this for a couple weeks and you get a range-bound move.
Tons of call skew.
Yeah.
Yeah, I don't know. I don't know if I want to step in front of that train. Maybe I'm doing a lot of broken wing butterflies here. Let's see if we can do something like 130, 135, 140, 150, 5 by 10 for a small credit.
Certainly could.
Let's see if I can get like a small. This is my little engagement trade.
There you go. A little 5-cent credit.
Yeah.
Wow.
I don't think I'm going to get. I think it's going to be a debit, but.
Yeah.
Let's see if I can do a penny.
Give it to him for a penny. Come on.
Oh, it's going to be a debit.
Come
It's
on.
gonna be like a 2-cent debit. Nope.
Last one here. What are we doing with this target call diagonal? So I have the November 95.
Can't even do a 3-cent debit.
I have the 95-105 call diagonal spread, long November, short October. October is basically worthless. There's not much to do because like rolling down 5 points for 20 cents, I'd rather just not have the 20 cents. So this one is a wait and see. Down about 50%, a couple $100, but we're not that far away from the long strike. If you get a move back to 95, this option goes from $4 to $8. So wait and see. A lot of time. That's it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We are all deeply long wheat. And you've got
small long wheat. It's not deeply long. We're not. It's a
He's
little.
got the Ags Fecta, wheat, corn, soybeans. Couple of oil trades there as well. But yeah, we'll post all these trades to the Tasty Trade follow page. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Click the link at the top of the YouTube chat. Get your cherry picks today for free. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies.
So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation.
If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, so you've got a couple spread trades under your belt,
and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to today's assignment. It is a Friday, end of the week. So, my brother, how we doing?
Doing good, man. Hanging in. Yeah, end of the week. You got the wrong show on the intro there, but it's all right. We're Errol wears a lot of hats. Sometimes
What
these
did
things.
I say?
You said today's assignment.
Oh my goodness. It's Friday. Obviously. How we doing?
I confused the man enough by making a segment called Risk of the Week within the show called Risk and Reward, and then he's got to go guest on these other shows too. It's you're getting too famous for me, man. You're about to switch up on your day ones here.
Never that, brother. But it is Friday. How we keeping up? I miss you right now, bro. I'm in the flesh, but we're still close.
Yeah, of course. Sorry you got to wear the earpiece all day. I know it's not the most comfortable arrangement, but I am graciously giving you my desk. I'm sure you're sitting on my side right now. It looks like vibes. Yeah. So it works out for everybody. Yeah. Having a solid end of the week here. Everything that looked like it was going to cruise in for max profit at the beginning of the week is
definitely
doing that.
Exactly.
So can't be too displeased. IBIT looks like it might give me a little bit of a problem, but looks like we're gonna settle in nicely here for max profit. So as far as expiration day is concerned, I'm doing well on that front. And yeah, no big weekend plans for me. I'm excited to be lazy, I must tell you.
I was gonna say before we even get into all the market talk, and we got a nice long hour. We all gotta chop it up some markets, which we're gonna do that. What's new? What's new pertaining to the markets? What are you up to this weekend? I know you're not gonna be doing too much, but what's been up with Gus lately?
And I don't like when I wind up with two super loaded weekends back to back, because then all of a sudden it's like, you can't go so hard on the weekend that you need a rest from a recovery period from your weekend. So that's kind of what I did last week. Had me dragging a little bit on Monday, so I'm excited to just put my feet up and watch some football this weekend. Last weekend I was in South Bend, Indiana at Notre Dame to watch Texas A&M win there, which was a great experience for me as an Aggie fan. It was not for the majority of people in the building. But yeah, great time. First time ever as a visitor in really any capacity, I think. I guess I've gone to Astros games where they were playing the Reds as an opposing fan before, but first time it was ever an event that passionate where I was rooting for the other side. They were very gracious hosts. Beautiful.
I was going to say, how did that feel? How was the energy? I mean, especially being on the opposing side that time. Did you feel any negative energy? Anyone want to take off your head, or you think it was pretty warm?
I have lost audio for you.
Cool.
Production team, please save us. There we go. You're back. Go ahead.
There we go. No, I was just mentioning. How was it like when you're good energy? Again, you're on the opponent's side, so energy's still good. Good.
Yeah, certainly. I mean, there was a lot of A&M people there. We were probably, I would say, like 25-30% of the stadium. It was very very full. We travel well, but yeah, Notre Dame fans were all super cordial. Lots of good games and handshakes with the people around me after the game. Some funny banter back and forth. At some point in the fourth quarter, a very drunk girl who knew very little about football, but was very passionate about Notre Dame, came and behind us and started getting rowdy and kind of talking smack directly to us. So she was the only one that I turned around and had to flex on a little bit after we had the walk-off touchdown. But everybody else, I just expressed my gratitude for being so nice to us all game and very accommodating. It was also the first time ever we were at the first game ever where Notre Dame sold alcohol in their stadium. So that was that's a fun little piece of history to be a part of.
Okay, it's not a dry campus anymore, but no, you just got to flex those real delts for a quick second,
yeah, exactly.
No, but I mean, getting into that, I'm excited for the Vikings game this week, and I forget who they're playing, but it must be a must win. So
they're playing the Bengals, actually my team. So I'm hoping it is not a win for the. Oh, that's what you're saying. I see. I was like, why is this man talking about the Broncos? I'm just gonna roll with it because I'm a professional. But I see you're talking shit. Yeah, I think that Carson Wentz is going to be a better quarterback for them than JJ McCarthy. To be quite honest, I am concerned as a Bengals fan, especially with Burrow missing. I would be concerned in the first place, but I think Wentz
this is where opportunities arise. This is where people come and fill in us. And right, Joe Burrow's not there. When do you get the opportunity for Joe Burrow to not be there? So maybe he balls out.
We've had Jake Browning for some years now, and Burrow's always had injury problems. And I like Browning. I mean, I think Browning's a top 5 backup in the NFL. And he's mighty serviceable. He's 5-3 in his tenure as a starter with the Bengals, and we got the weapons to support him. So we'll see. Hopefully, against this banged up Vikings team, we can keep limping along here. We've won. We shouldn't have won either of our games, and somehow we are 2-0. So I will take it.
Hey, a win is a win. With that being said, let's go jump into the market, check out what's been going on, show you some of these positions, and kind of just the game plan getting into next week. It's kind of nice that the week is over. I believe today we have quad witching.
This is a funny week to me because at the beginning of the week we really thought that there would be perhaps a lot of cause for turbulence or volatility events or whatever it may be, and we basically just had the same freaking week we've had for 3 or 4 weeks in a row now, where the market just doesn't care. This market just keeps insisting that it does not care.
No, it doesn't care. But I mean, even if we look prior to 2020, I know we really we started really raising interest rates around March of 2020 to bail a lot of people out, save the market a little bit. But I was just looking prior to that too. I'm like, market is always drifting higher, but the volatility, just a visual increase in volatility, like those dips, we've always had that prior to 2020, but they were a lot less mild. Now they're a little bit more aggressive now, but they still get bought back up just like they've always been. But all-time highs kind of feels like different day, same story.
Yeah, and it feels like the aggression is there on both sides. And I mean, even dating back to April and the way that we rallied out of that downturn from Liberation Day and everything, it's like, yeah, I mean, the sell-offs have been a bit more pronounced, but I feel like the dip buyers have also been a bit more exaggerated on their end as well.
Yeah, no, completely agree. I mean, it was really aggressive. I mean, the move after FOMC was, not even just seeing, it's the fashion in which the market is getting to these levels. Not that they're there, it's the fashion in which they're arriving there, which is impressive.
Well, yeah, and it was really interesting after FOMC because, we did have a baby dip in the hour following that announcement that immediately got snatched back up. We went down like 0.5%. But what that says to me is that we are living in a world where people are saying, oh man, 650 is a steal. and that's pretty crazy to me, in the context of SPY, 6,500 if you want to talk SPX, whatever it may be. But that's crazy to me that is, as low as we were able to push after this insane run that we've been on, coming off of all-time highs, that it only takes 0.5% down move for the efficient market to say, holy crap, what a deal, and start snatching up shares. So it's insane.
No, I mean, it is. And it happens quick. It happens quick, fast, and in a hurry. If you miss one of again, like jokes aside, if we go back, just look at April, that was the one dip to be able to get more longs on our long delta. And it's like, if you don't take advantage of that very small window, it's gone. in that cost basis.
And I will say too, I mean, it's easy to look back with the benefit of hindsight now, but at the time you had to have some stones to be taking advantage of that dip. I mean, the dip was happening, and then boom, it wasn't anymore. And you had to be getting in there, while the majority of the market was still bearish and fearful and uncertain, to really take full advantage of what happened, because we came out of it. I mean, we had one of the biggest days, I think 6th biggest day in S&P 500 history, that first day recovering out of it, and then like less than a week later we're just right back at all-time highs.
It'll be exciting. We might be heading into a new market environment. So
I saw Polymarket has a very interesting market posted that they posted before this most recent, I should say, rate cut, which is cuts for the rest of 2025, and cut scenario is by far the outright favorite in that betting market, which I think is very interesting.
Heading into the end of 2025, was that?
Yeah, including the one that we just got. So cut 1 is confirmed. All of the remaining choices start with cut, but it's cut, pause, cut, pause, cut. Cut, pause.
What was that? What was that first? What was that
outcome.
first pattern, including the one we just had? Did you say cut, hold, or pause?
No, just of the 3, including the one that we just had. There's 2 more, October and then December.
What's it pricing on Polymarket right now?
We are looking at it was north of 70% when I was looking yesterday. Let's see if I can find it here.
Just curious, because I think Jerome Powell gave a little bit of guidance.
Yeah, we have cut 72%, and then cut pause is the second most likely at 13.7.
Okay, that's interesting.
So
Polymarket again might be a new metric to just start eyeing here and there.
Yeah, I think that's a really interesting way to try to. I'm not a Polymarket user myself, but I think that's a really interesting angle to try to attack this market with, because you could in theory take cut and cut pause. And I don't really see cut, pause, cut as a very likely situation. I think that if anything, we would do 25-50 pause, or we would do 25-25-25. But you could really hedge yourself out and essentially guarantee yourself a profit there, just taking out the scenario where we cut, pause, cut. And Powell said with a fair degree of certainty that we should be expecting 2 more cuts before the end of the year.
Yeah. And that's why I was also curious, because he did say that. I was like, well, if those are the words that came out of his mouth, how is that lining up with how people actually perceive what he literally said? So it's always interesting to see how the market lines up. Yeah, you're talking
I should get on this market because I'm just going to be so frustrated. I just did this same thing with Oracle, where Oracle is sitting at 70% on Polymarket to be the buyer of TikTok. They announced that Oracle is going to buy TikTok, and the market doesn't move, and it scared me away. And then the next day, it's up to 87%, and I'm like kicking myself for not getting involved there.
Yeah.
One of these days, I'm going to create a Polymarket account, man. It's I want it. I want it too bad.
No, I mean, with Oracle, after that gap up, we really haven't gone anywhere since. If Oracle dips, you finding that as attractive? You like that?
I don't know. Oracle, it's a weird spot for me because, I mean, the question just becomes, is this fully pricing in the TikTok acquisition or not? Or is this just a move to where we are speculating that the TikTok acquisition may come? If you're in the boat that you think that this move is the full pricing in of a potential TikTok sale to Oracle, then I would say, yeah, I think it's a good spot to get short. I personally find myself in the boat, though, that I think if this sale goes through, which looks increasingly likely with each passing day, that it is going to go higher. I mean, you're talking about the biggest social media platform in the world. Additionally, I know part of the terms of that deal, which is going to be interesting on the user side, is that they're actually going to have to release a new app. That's what I was just reading. Mm-hmm. So it will be just pretty much exactly TikTok, but under a different name. That's part of the terms of ByteDance having to divest it. So you're talking about Oracle getting the largest social media platform in the world, at least command over the U.S. operations, and at the same time, it would be repurposed. And I think that could actually, I shouldn't say repurposed, rebranded. And I think that can actually be a huge pro for Oracle as well, as that it makes it seem a little more, especially 2 years down the road, like it's their own proprietary thing, which is kind of an odd way to think about it in the market context. But I do think that could come into play for real.
All right. Oracle. We'll take it. We'll take it. I know I was just looking at some of the straddles on Oracle. I think it was David. I think David's in the community sometimes. He'll pop in, and he had made a comment to me the other day. I was like, there's this price point, he's like, oh, why don't you just sell a straddle? And I'm like, you know what? We can start selling straddles when we're expecting something. whether that's going to be the upside or downside. So I'm going to keep that in mind, and I'm going to be eyeing
Yeah,
Oracle.
trading just for pure non-directional volatility is not something that I typically do, but I think that Oracle right now is potentially one of the best spots you will ever see to do that.
Right.
Because it's just,
I think it's worth considering.
We know that something's going to happen, whether this sale goes through and it goes higher, whether it stops and it goes lower. It does not feel like this is the level that Oracle can hold for longer than the 30 to 45 day window we're talking about for this deal to close.
No, we got some tricks on our bag. We'll use up a few of these strategies. So we'll circle back around to it next week. I'm not opposed to doing something in Oracle, but we'll be back next week. And once this quad witching is over, once this week has digested all of the new information that has come out, maybe we circle back around Oracle, see what's popping over here, if it's still relevant. But with that being said, excuse me. With that being said, markets rallying all the way to the highs, still killing volatility. VIX has been a lonely road. It's been quiet out here. Not much going on. Again, last time we seen the pop in VIX was early April. And it's just interesting to see just in early April how much fear, right, that you just touched on, but how much fear was legitimately in the market early April to be able to buy those type of dips. I mean, you can see the reaction just from VIX here spiking all the way to a high of, just shy of 60. And then it's been quiet since then. So with some of the positions, we got Google. This expires in 28 days. Both are in the money. So by next Friday, we'll come back, manage this 235 on Google. So if we zoom out a little bit, 235 is all the way down here. So, I mean, for something like Google to turn around, really one of the index is going to have to, help put in some work, drag some of those things down a little bit. Or if it comes down to 21 days by next week, we're going to hold past 21 days. But we got Google, we got QQQ, RKT is finally expiring today. There was legitimately there was no volume trying to get out of this contract, Gus, on RKT. You remember when we put that on, right?
I do.
There was no volume, like literally no volume to get out. Well, obviously, who's gonna wanna be on the other end of that? But then we got SPY, and then we have UNH. UNH is the one in the portfolio working out pretty well right now. Brother, UNH not doing too much today, but it's pulling its weight relative to the rest of the underlyings. But other than that, I had cleaned up a little bit of the portfolio the last couple days. I took off quite a bit of long delta. I took off quite a bit of short delta. And I remember with the sell-off yesterday, I was kicking myself a little bit like, of course, I'm taking off the short delta here, but I know I needed to manage it a little bit. And then now we're ripping to all-time highs again, or we touched all-time highs again. So sometimes you look back at managing some of those positions, even if it's not a profitable position, you just manage it as you should a little bit early. And you recognize the wisdom in doing that in hindsight sometimes, because ripping to all-time highs was sitting with too much short delta just would have been annoying, right? So other than that, that's what's going on over here. UNH has really been the one I've been keeping an eye on. I'm hoping for some type of secondary reaction from UNH. I'm hoping it's not completely dead yet.
No, UNH, I think this thing keeps climbing. I feel like the very bottom, I mean, obviously we can look at the chart and see when the very bottom is, but metaphorically speaking, I feel like we're kind of right at the very bottom around the time that Buffett bought this, and that we are now out of the valley and are working on climbing the mountain back up here. Because, I mean, when you think about a 50% sell-off in a $600 stock, I mean, that's fairly aggressive. If the market wanted to move it down more, they would have done it around the time that there's lawsuits pouring in and their CEO gets shot.
Right.
Now isn't the time. I think it would be very, very hard for anything to happen to get worse with this company. So yeah, I think it's all uphill ahead for UNH. It just all becomes a time frame question.
UNH.
But yeah, that one's doing well in the portfolio for me today. Paramount having another great day. My goat. I'm just coming to love this stock more and more, man. Peace Sky.
I was gonna say, was that the Peace Sky?
Yeah, Peace Sky. It's just so good. They just keep making the greatest moves ever, and it just keeps on chugging. And I'm happy I kept holding, because this is a naked position. I have 483 DTE, which is January 15th, 27, naked 10 and 20 calls. So I'm bag holding, especially the 10 calls, which are ridiculously into the money.
Right.
And I mean, yeah, I think there's a very real situation where over the course of the next year, as Paramount has UFC, has more and more, they keep making great moves and landing more contracts. And I think they got the writers of Stranger Things working on a series for them now and all this. Mm-hmm. So it just feels like one piece of good news after the other for Paramount. And I want to be the guy that's still somehow holding 10 calls when this thing is at 100.
I mean, you got till January. You got a lot of time. You've been patient on that one.
Yeah, and this is like, I mean, and that's part of the calculus too. And I will say I had a 15 call in the middle of those two as well, which I have since liquidated at like a 6x. But these 10 calls, I don't even. I mean, I guess they're at 8x now. They just keep on moving up for me. But yeah, I mean, I have so much time. This is like these two. I don't even want to manage these until June. I mean, I really like Peace Sky. I really like the future.
So are you thinking about scaling out? Like, let's say Peace Sky for whatever reason gets to 25 tomorrow, which would be insane, and I hope it does. You want to trim some off and still hold until January? What's your thought process there?
Potentially. I mean, it would depend on the reason for that move and whether I think it's substantiated or not, or if I'm going to have to wait another 6 months to, get close to that price again.
Right.
But I don't know. In the world where that happens, I think that I would be compelled to liquidate the 20 calls and continue holding the 10s. Because the 20 calls, let me figure out my exact entries here. It's over here, Peace Sky. Let's see. So I got into, what did I do? 10, 15, 20. So I got into the 20 calls at 49 cents a pop, $49 notional. And they are now at 4.30 notional. So
right.
Already very close to a 10x on those. So yeah, I mean, at a point it gets ridiculous. I think if it went to 25 tomorrow, I would go ahead and liquidate those for a 15 or 20x or whatever that would look like. But the 10s are so deep in the money. And I really just believe in the future of this company right now. So no, I think that's kind of a back hold until June-ish, no matter what.
10 might be the bottom. You said Paramount's not going back to 10 in the first place.
Well, yeah, exactly. I mean, I have zero concerns. I mean, they're incredibly long dated to begin with, but I have zero concerns about time decay with the 10s at all. And so, with that taken into consideration, with how much time I have until expiration in the first place, the 10s just seem to make a lot more sense to hold on to for me because they were barely in the money when I bought them. I mean, I think my spot on this is like $11 a share.
Right.
So, yeah. I mean, and plus, like I said, the flux. I want to be the guy that's way ahead of this move.
Mm-hmm. And I mean, so far it's looking like that's the case, brother. So I mean, whether or not we continue to 25, 30, 35, I think that's the case. But Peace Guy's
when I liquidated the 15s, I was in. That's exactly a 2x. I was in 106 out 212 on the 15 calls,
right?
Which means that I just straight up covered the 20s. The 20s are basically house money at this point. So I don't know. Maybe I wouldn't even exit those if we go to 25 tomorrow, man. Paramount to the moon.
We might. Maybe we won't go to 25 tomorrow, but maybe on Monday. So.
I'm doing all this. I haven't even bought my Paramount Plus subscription yet, so I should probably do that. Help out with their next earnings call.
You just reminded me. I need to make sure I'm not still paying for my Paramount Plus. I was paying for Paramount Plus because the Champions League was on there, and Liverpool won the Champions League again. Just trust the process. After the Champions League, I always forget to end it, but usually my dad and I, we get our own accounts, and then we just watch Premier League so that we can talk about it later. But it's always on some type of service. It was on Peacock. And then it went to Champions League, right? We had this conversation before. It is still a little frustrating. And Paramount does look like it has a lot of opportunity to progress. Is the winner of these services going to somehow collaborate and bring everybody into one place? Because it's still looking like all these newer media outlets, per se, just kind of have their own thing going on. A lot of attention split everywhere.
I think Paramount just has a lot of disproportionate upside, even relative to where it's priced right now. I think the market perception of Paramount's upside is a little less than it actually should be with the UFC acquisition. And I say that, and I've given this line of logic on the show before, but UFC averages, I forget the exact number off the top of my head, something like 500,000 pay-per-view buys per event. But that's all the people that actually have the disposable income to shell out $80 a UFC event. And that is not including I would venture millions of people who find less ethical ways to watch the UFC for free. So now when you take the paywall down from $80 two to four times a month down to $12.99 a month or whatever a Paramount subscription is, $19.99, whatever. I think that you're going to have this gigantic influx of people, myself included, running to subscribe to Paramount, and it's going to be way above what they're actually projecting to see for the UFC. And they have something like 87 million subscribers right now, so we're not talking about
that was a key
gigantic
move for
increase
them.
On a percentage basis,
Yeah.
but if the numbers of people that actually come in and subscribe for UFC is 4x what they're projecting, that is just free and disproportionate upside right there. And if it comes in exactly at projections, we've already priced that in anyway, and it's not going to hurt me. So that's part of my logic here is I want to wait until we're like 2 earnings calls into 2026 when all of these UFC people have come streaming in. I think that's when we'll really start to see the dividends be paid.
Yeah, I don't really have thoughts on the underlying or the stock itself, Paramount, but I do think the Paramount move to acquire UFC was such a great move, right? Like, even just thinking about it, like, I'm not a UFC watcher. I didn't grow up watching UFC, but I'm curious, and I bet I'm going to start becoming a little bit more knowledgeable about UFC whenever it is on these type of networks, which is just going to popularize the sport even more. And I think it starts from the bottom up. More kids are going to get into UFC because they're going to see this, that, and they're going to be intrigued by it. A lot of things aren't in front of kids' faces, right? If there were some things in front of my face as 8, 10 years old, I might have chose different. But the exposure UFC is going to get now, I mean, what a smart strategic business deal. It really is mutually beneficial. I think that was a good deal for them both.
Yeah, I absolutely agree. And that is the other side of the coin, too, is that UFC stands to gain a lot from taking the paywall out. I mean, because it's just, and I think especially in this modern climate, I mean, we've both gone on tirades on this show before about how frustrating it is to watch sports these days, how many different streaming services you need to have. Even just the NFL, I think you need to have 4 or 5 streaming services if you actually wanted to watch every NFL game this season. So in that climate where people are increasingly frustrated with having to pay for all of these different subscription services for sports, you're the one sport that's sitting there saying, not just a subscription service, oh, no, you have to pay for every single event if you want to watch our sport, and you have to have a subscription service to get access to pay,
I mean,
which is the most ridiculous thing I've ever heard in my life. When you take that all the way back to a one-time, very affordable monthly payment, I mean, that is huge leverage and exposure that you're going to get. Obviously, Paramount is going to want to do all they can to promote the UFC. I guarantee if you buy, I bet you if I bought a Paramount Plus subscription right now today, the giant header at the top when I first sign in would say UFC coming in 2026. And yeah, it's just rising tide raises all boats. I think it's an amazing deal for both parties involved. TKO Group, which is ticker TKO, the UFC parent company, has seen a similar rally. I just happen to be in on the Paramount side of it.
I'm pretty surprised. I mean, it's just such a dated business model. It's kind of like, I can't even believe we're still talking about pay-per-view in 2025. And I cannot even believe that the UFC stuck with it for that long. I get there's probably a lot of logistic implications involved, a lot of walkarounds, a lot of ripping the, but it's like, come on, it was going to come to this point anyways. And then also, it's 2025. Things are getting more competitive, so when you need to pivot, you got to pivot quick and you got to pivot hard. And it's just like the UFC, it's not like it was an underground an underground organized fighting ring. Like, this was a legitimate professional combat sport. So I'm excited about it. Again, I don't know a lot about UFC, but I'm excited about seeing more UFC in different sports because I find it intriguing. It's just never convenient for me to see, especially if I'm not involved in that sport myself.
Yeah, and it's just so hard to grow a sport when you're behind that kind of paywall. Any other sport, if you want to get into it, even if you don't want to pay for a subscription service, you can go to your local Buffalo Wild Wings on any NFL Sunday and watch some football and see if it's your gig. With UFC, bars make you pay a cover if you want to come there and watch UFC because they have to pay a ridiculously high pay-per-view to be allowed to show it in their bar in the first place. So you can't even get it for free that way. You still are going to be paying no matter which way you try to watch this stuff, unless you use the aforementioned less ethical methods. Then you're going to be paying for it. It's hard to get people into your sport.
Is there a different premium that some of these bars have to pay to get that pay-per-view? I wasn't aware.
I don't know the exact specifications, but it has to do with the capacity of your bar and how many people you actually expect to be there. And then they have these giant licensing fees that they have to pay to be able to show the fight. It's not just like you pay one pay-per-view and throw it up on all the TVs.
Really? So can you not host a pay-per-view event in a U.S. registered if it's a business that is legally allowed to be up, you can't show pay-per-view in those type of environments? Is that the case?
Yeah, I don't know what the exact laws are on it, but you basically can't let people walk in off the street and watch it for free. I'm sure the UFC wouldn't be turning their noses up if, like, tastylive bought a fight for us and we had a fight night at somebody's house or in the office or whatever it may be. Like, those kinds of things are a little more nuanced, but if you stand to profit from showing the fight, you have to get the licensing.
Isn't that just an intellectual honesty question? Because I didn't realize this many people were going to come here. Honestly, like, I know we're playing the fight, but you could play that card if you really wanted to. But just curious, not to go off too much on a tangent. It's an interesting topic.
Yeah, it is, and it's just funny that it's behind a paywall. No matter how hard you try, you're gonna wind up paying for it.
Looking like TKO is really liking the response of all these conversations. So shout out to TKO.
Yeah, TKO also owns WWE now, I believe.
WWE, UFC, tomato. No, I'm just playing. Don't shoot me.
Not.
Just kidding.
Not tomato.
Just kidding.
Those things are so
I'm just
far.
kidding. VIX obviously not doing anything. Let's go to the daily on NASDAQ, see what's going on over there. Go to this daily over here. And let's go down here. There we go. A little bit of a sell-off into the morning. It looked like a little bit more of a controlled sell-off, and then it looks like Jerome Powell or somebody just pressed the buy button because we went straight up since prior to 10:30 today. So market's still looking to digest a lot of this post-FOMC craziness. And again, if I'm not mistaken, I believe it's quad witching. Let me go ahead and confirm that. Quad witching, which adds a lot of volume to the market, but it's kind of like, quote unquote, I don't want to say fake volume because there's no fake volume in the market, but really they're rolling a lot of their contracts and doing those kind of things. So it looks like, oh, there's a ton of activity right now, but it might be the opposite because of the witching, and there might not actually be as many people active in these markets right now on this Friday with the quad witching, FOMC, all those kind of things.
Well, yeah, I mean, it forces people to act, but
right, yeah.
whether they act in a way that generates legitimate volume and liquidity is another question.
100%. Was there anything else that was pretty much catching your eye? I know going into the next week, I'm going to be looking a little bit more at some of the metals, so I'm going to look at gold here.
Yeah, Qualcomm has been doing a little bit of work for me. I've been pleased with that. I am getting murdered on my position on Win, which I really have made a wrong call on here, but it's long dated enough and volatile enough that I'm just bag holding for now.
Nice.
But yeah, I would say that's all that's really jumping off the board at me. Smuckers, SJM. This one's been a wild ride. I was not really anticipating. They had a bad earnings call, ripped down. I got in at the lows. I thought it was too pronounced of a move. I couldn't even really provide you with my exact TA at this time. It's been a little while since I put this trade on. Mm-hmm. And it immediately, like within days, just ripped back to where it was pre-earnings. And I was like, I'm a genius. This is the greatest thing in the world. And since then, once a week, somehow, Smuckers, the jelly company, has had massive like swings of bearish and bullish news coming through and ping-ponging this thing all over the place. I'm still well safe right now. And if it closed today, I would be at max profit. But yeah, Smuckers, I would not have thought would have the kind of volatility it's been showing me in the past few weeks.
What was that ticker in Smuckers again? Check it out.
SJM.
We'll come back to gold here. SJM. That reminds me, I think tomorrow's the day to order more.
Uncrustables?
Tomorrow's the day.
Yeah. You gotta get on those Uncrustables. I was eating two Uncrustables last night. I was thinking about the conversation we just had about Uncrustables.
That's so funny. Now when I order it and I buy it, I'm just gonna think of the conversation we had just now. Have you had the raspberry ones yet? I seen them in the store before. I never picked them up myself.
I haven't gone for raspberry. I'm a grape
right?
guy in general. I will sometimes get a strawberry to mix it up, but I haven't gone for the raspberry.
Did you know those existed?
I did not. I mean, I knew raspberry jelly existed.
No,
but no,
yeah, they have like they're branding it as a raspberry Uncrustable.
Interesting.
I've seen it
one
time.
Like it might be a little bit sweet for me. I kind of gravitate towards the grape because I think it's the least sweet of the available ones.
I agree.
So I don't know. I'd be willing to give that a try.
I'm a little bit more.
I do lots of Uncrustables. I got the system in the microwave to get them exactly right down now. A lot of trial and error on that one.
Well, I'm gonna have to hit you up, get some tips on that because
I think it's a microwave to microwave situation. But for me, it's first of all,
calibrated
it's hard.
perfectly.
You gotta determine while it's frozen which side is the peanut butter side, which is kind of a skill in itself. You got to press on it and figure out the peanut butter side's a little bit softer or a little harder, I should say, while they're frozen. Figure that out. So you got to go peanut butter side down 10 seconds, wrap it in a paper towel. Peanut butter side down, 10 seconds. Flip it, peanut butter side up, jelly side down, 11 seconds. And the 11th second does matter, people. It'll still be a little bit frozen if you only do 10.
For an Uncrustable, an extra 11 seconds will do some damage, whether that's in a good way or a bad way. So it is.
You got it. Yeah, it's the 11th second. You can't do 10 flip 10, at least not in my microwave.
You can't, or yours is going to end up like mine
right.
where you got to be careful. Yours is going to end up like mine where the outside is hot and then you're eating an ice cube in the middle. Like
no, it all works out pretty even. It's that the jelly thaws a lot faster than the peanut butter, which is why you gotta do it in the order that I specified here, because the jelly will get hot and it'll melt the peanut butter No,
that's valid. I'm more
high level stuff. I don't know why I'm just giving this out for free
it's
right
very
now.
nuanced.
This is high level
I will
uncrustable
say.
knowledge.
That is nuanced. Experience is the best teacher, but I go with the strawberry before we close that conversation. I think strawberry
No hate for the strawberry. Everybody, you guys rock with Uncrustables? Let us know.
Strawberry milk, strawberry this, strawberry that. I'm down. I am down. I'm just picking apart this volume profile a little bit. Going to be taking a look at gold. I don't know who else uses the volume profile. Josh, if you're watching, I know I'd be seeing it on your charts all the time, so I know you'd be using them. But we're going to play around a little bit for a few minutes with this volume profile, try to put it on gold, and what we're going to try and do is find out where a lot of this trading activity is occurring at what price levels within an asset like gold. I don't trade gold too much, but let's do this together. An Uncrustable with this will be pretty fire.
Mike said, I don't understand the Uncrustable thing. Isn't it something you put in your kid's sack lunch for school? I mean, yes, but I'm a grown man and I can choose if I want to eat the kid's sack lunch thing on my own time. I'm an Uncrustable fiend. It's just so good. It's so easy. What's up, Bob? Good to see you. Hope you had fun at the event. It looked really awesome. I've been seeing pictures all day. Graham cracker, peanut butter and jelly. Make the little crackers and put them in the freezer. That's sharp, big deal.
That's one of those. That's one of those little snacks. You know, those little Cheez-It crackers snacks you used to rip open after one of the soccer games or when you were a little kid.
I do know what you're talking about.
One time I was so disappointed as a kid because I thought it was gonna be the Cheez-It ones and I bit into it and it was peanut butter and some jelly thing, and I was like, "What is this?"
I've had the peanut butter and jelly ones. I never understood them as a kid because they use like a salty cracker, and it's like it clashes with the peanut butter and jelly. I'm 5. I don't have an advanced flavor portfolio yet. I just give me a peanut butter and jelly cracker.
Thank you. It could all be so simple. Arrow used to
Arrow
trade
did
ticker
used
gold.
to trade ticker gold. That's correct. Scramble everything.
Used to. Past tense. Come on now. Don't tempt me with a good time. We'll load here. Look, we don't even want to load on gold, so we're going to go back to the futures product. It was Tom Sass. He did lots of trades. Yeah, no, I went to experience one of them, and Tom was ripping them off.
Tom does go fast. Yeah. The email after is critical with the list of trades.
But no, let's play around a little bit with this volume profile. So I'm going to go over here to the settings. Just a little context with something like a volume profile. Since we have it up here, volume profiles is just a distribution of volume, as we all know, and it just works out like a distribution curve. And we know with the distribution curve comes standard deviations. And to boil this down, the most simple way is volume profiles also come with something called a value area. And value areas is going to be the middle of the bell curve. It's like that one standard deviation, but that's what we're going to refer to as a value area with volume profiles. And that just lets us know that's where 70% or about 68 point something whatever of trading activity was occurring within that region. So it gives us a distribution of volume in the view of a distribution curve or bell curve, however you want to think about it. So when we go to the ends of a volume profile, think about it as like the tails of the curve pretty much, because that's how it's calculating it. And then, certain softwares that you use can go in, mess with the settings, tweak things here and there. But I can already see from the Tasty tool we have here with the volume profile, you can see this value area high. We talked about that middle portion being the value area. And the high of that value area is what we're going to start calling a value area high. And then on the other end of that is going to be called the value area low. And that just, again, encompasses the value, which is just 68 point whatever the percentage is. We're going to round up to 70% on a distribution curve or one standard deviation. And then again, the ends of it is just going to be the tails of the move. So we know that there was less trading activity that occurred on the tails of these moves, indicated by how small of a bar it has down there. And then again, we can kind of visualize that curve and we can kind of see that bell curve kind of forming on that volume profile. But that's all it is. We're going to play around with this volume profile a little bit. We're going to just tweak the settings, play with it. I know over the years, whenever I was learning new tools on a program or a new software, whatever it was, something that I had to do was I had to go on it, play with it, look at it day in, day out. Okay, I see that. Oh, let me tweak this setting and just play with it. And I think you start to gain a pretty good grasp of some of these things and how they're used. So if we go through a couple of these and none of this makes sense, we'll swing back around to it. But I just want to play with the settings right now. I just wanted to get the basics of what the hell is even a volume profile. That's what it is. And big deal. I know you're very familiar with the volume profile. Maybe me and my mouse.
Yeah, it's a really good exercise for just broader liquidity too. If you look at enough of these, you come to start to really have an understanding of where you might and might not be able to get your most optimal fills getting in and out of positions, which is also something that's always worthy of consideration.
Yeah, that is true. Just like my RKT position, right? If we were to look at a volume profile, there's no volume bars down there, or I probably would have gotten filled.
Is volume profile only on the desktop app? That's a great question. Do you know the answer, Errol?
That's a really good question. We'll get right back with you on that, though. Yeah, I'll get right back with you.
Somebody will let us know. Somebody will come in Errol's ear here in a second and tell us.
Pause. Volume profile. Let me see. Let's tweak these settings a little bit. Let's tweak these settings. I'm not going to lie. I'm colorblind. I'm not a big fan of these colors. You already know. If I could change these colors, that would be fun.
And colorblind Errol decided the best course of action was to get into the red-green space of the world.
What is just absolutely the most ironic thing ever. I mean, red-green, too, at that. But don't tell me with a good time, because you already know. I be switching it up on here sometimes. Not to get too far off track.
Yeah, you go to your horrendous blue and black candles that nobody can see.
Hold on, you remember that? So we're going back to that, and just because we got to bring it back. I'm back after a few hours catching up on other stuff. What did I miss? Are we pinning 6445 on SPX today? So right now we're just checking out the volume profile. We did a little bit of a tour to market, trading at all-time highs right now. It's witching day. Market's trying to digest FOMC. The whole 9 yards. LOL meant 6645.
6645. I was going to say 6445. What the hell do you think is going to happen?
Did you not see what happened post FOMC?
Yeah. Do you know something we don't? What are you trying to tell us? 6645.
Cool. 6645. Let's take a quick look at that and where that's at.
Yeah, I do believe blue and yellow are the colors that dogs can see. A big deal. I know the TV show Bluey.
Did they tell you guys that? Big deal and
what?
Gus? Did the dogs tell both of you guys that? That's the only colors. Did they tell you that?
Streets are saying that.
That's what the streets are saying.
It's like they somehow know like what colors dinosaurs could see and how far dinosaurs could see. Like, are you sure? Are we sure we have enough information and draw these conclusions? My dog sees plaid.
Plaid. Wow, that would give me a headache every day. No, market is still trading around 6645. So if you left and came back, we have not gone anywhere. And
Ukraine told you big deal.
But no, still pinned in that same price range. So you didn't miss much on your lunch break, brother. But if we go back to NASDAQ here, let's go ahead and continue to play with that volume profile. And then once we do that, I think we'll have a little bit more fun in terms of speaking directionally a little bit more as we come back onto some of these segments. But we got to learn how to use these tools that we have at our fingertips first.
Andrew, thank you. We appreciate the research there. No volume profile on the web platform. We know now.
I mean, not yet. If that's the case. Yeah.
Not yet. Our devs are working hard on that thing day in, day out, I assure you.
No, they are. They actually cleaned up added a couple new features, cleaned up a ton of bugs. You guys are going to love it. I mean,
it is fantastic. It's interesting that on NASDAQ here, we see a much more normal distribution of volume, whereas with gold, it was almost I wouldn't even call it a binomial distribution. It just, there's heavy skews.
Yeah.
But yeah, this is much more normal looking.
Yeah, this is a little more of a single distribution kind of vibe. But no, we'll touch on those. A lot of volume trading at the highs. One of the reasons why, you see, I think it'll be fun if we ever come back to a conversation about. I think this conversation is beneficial and relevant, especially when we're at all-time highs. But I think coming back around to the conversation of how and why the market moves. And I think that creates a great case for why we also logically lean long bias at all-time highs, and why the data also tells us it's going to be more likely to put in another all-time highs. And I believe if we were to go down to more of the market mechanics on how and why the market moves in terms of price discovery and supply and demand and those kind of things, it kind of makes sense why the market would drift to higher prices when we're at all-time highs. When we think about it in that way. But I think that'll be another fun topic to eventually circle back around to here soon.
Yeah, for sure. Yeah, we had an interesting discussion yesterday. We were hoping to pull some research that I guess we never got our hands on, but there is a significantly higher chance that we make new all-time highs off of all-time highs than there is that it comes back down. Is basically the thesis of the research that we were looking at. North of 60% chance that we will see another all-time high within a week of any given all-time high.
One thing I have found, so for example, like let's say you're in a position, let's say you don't buy the dip, we're at all-time highs. It's just like very nuanced situations that are fun to talk about. Like let's say we're at all-time highs. Let's say you didn't buy the dip. At all-time highs, are you buying the breakout? Or are you going to be like, well, damn, I missed the breakout. I missed the move into all-time highs, but I'll wait for a pullback. Which personality type are you? There's not a right or wrong question. Some people take more, I don't know, we just have different personalities. Some will buy it straight off the all-time high and it'll keep running. Some aren't comfortable enough to do that. Some will be like, I'll wait for the pullback and then I'll buy it there. Different strokes for different folks.
Yeah, I've always been more of a continuation person myself. The exception to that rule is kind of the strategies that I'll apply with earnings sometimes, where I feel a move is over exaggerated and I'll try to take advantage of a reversal.
Yeah.
But generally, I'm much more comfortable playing continuation, and especially around all-time highs. My stance is just, even at all-time highs, constantly get longer, because as we continue to make, I shouldn't say constantly get longer, but stay long, because as, we continue to make new all-time highs, those positions work out. And if you realize that we're going to have some kind of substantiated pullback for a little while, it's really easy to reposition. But the more all-time highs that you make, the more profitable long trades that you continue to make on those all-time highs, the more room that there is for that pullback to happen. So whenever it eventually does come, you can easily pivot into that and hopefully have a nice little cushion of profits from continuing to be long through the bullish cycle.
Yeah, that's another.
Which has always kind of been my outlook. Because, yeah, I mean, if you make, if you're taking 10 DTE trades or weeklies over and over, and you have, say, 4 successful weeklies in a row because we made all-time highs in 4 weeks in a row, you got a nice little cushion of profits. The next week we come back down, your weeklies burn out, but we've now been at all-time highs for 4 weeks, and there's this giant gap or maybe not gap necessarily, but giant area for the stock to continue to fall before you see another resistance. So, yeah, if you can, it's just about being able to time that repositioning and not holding too strong to your original convictions, which I think in an incredibly bullish time like we've been in the past few months is very, very hard to do, because how can you ever trust that we're actually going to come down whenever this does start to actually breathe a little bit?
Yeah, no, great point. And it's kind of funny in the comments here. We have mixed answers in the comments, right? And I think this is a perfect display of different personality types, because there is no right or wrong answer. Some will be more comfortable buying the breakout. Some will be more comfortable buying the pullback after the breakout. What is the breakout in this case? All-time highs. That's a difficult position to be in if you're not already long. It's like, do I buy the high? Because you're buying the high. Do I buy the breakout, which is the high? Or do I wait for the new high to be put in and then I buy the dip? So it is kind of funny. It's like, someone said, I wait for the pullback, but it never pulls back. I'm like, right. We all feel you on that one. But, there's a couple ways.
Yeah, Bob, I think you put it best. The trend is your friend. I would say that generally tends to be my viewpoint on things as well. I try to wait for the pullback that never comes and just watch it run away. That's funny.
Because the thing is, buying the
also, you
breakout
guys
or the
are absolutely correct in the chat. It's just Tom and Tony are in New York City, is why we have the strange scheduling today as far as Nick and Mike.
And the thing is, buying the breakout or buying the pullback is technically still trading with the trend. You're just kind of entering the trend at a different point in the trend. You know what I mean?
Yeah, of course. But, we always say not to try to catch a falling knife. Shouldn't try to catch a flying knife either.
You see, it's like, don't catch a flying
knife.
If the knife is in the air.
Right. Stay away from the knife.
Well, the knife was in the air in the beginning of April, am I right? And you bought it, right? And you're able to capitalize on the high that we put in today. So sometimes I think you're going to get cut. There's no way around it.
Sometimes you just got to slap on those leather gloves and try to catch that knife.
That's really what it is. I really think that's what it is, because honestly, like sometimes people are like, how did you know that? I didn't, bro. I got slapped up 2 trades before this, and then this one worked out well, but I managed the risk really well on these trades. But it's like, you don't really know. Will you ever have that full confidence to pull the trigger on the breakout? No, in the moment, you're never going to have the full confidence. But anyways, the trend is your friend.
Yeah, hindsight's always 20/20. I was just talking to my dad this morning. I don't know if anybody's seen Kevin Durant's Bitcoin situation.
Now what's going on?
Yeah, Kevin Durant, he's locked out of his Coinbase
KD
account.
and Bitcoin in the same sentence. Let us know what's going on.
Yeah, so with the Warriors in 2016 and 17, he took a lot of his salary in Bitcoin, which is all now sitting in a Coinbase account, millions and millions of dollars of Bitcoin in 2016, 17, which obviously is way, way up from those levels now. But he has not had access to the Coinbase account for like 5 years, it sounds like. They've lost the password and they're not able to get in. So his Bitcoin portfolio just keeps ripping, but he can't get at it. He's Kevin Durant, so I'm sure that they will figure this out eventually. But it led to a funny conversation with me and my dad earlier today, where he said, you know, man, I wish I was buying Bitcoin in 2016 or 2017. It'd be up so big right now. And I was like, yeah, but you know, if you bought Bitcoin in 2016, you would have sold 10 times.
You would have sold in
right
2017. I think we peaked in 2017 before the fall off.
Yeah, fell off, but I mean, we're still, you know, up by orders of magnitude from where we were then.
Right.
And there's 15 times between then and now that you would have sold. There is no way if you were holding Bitcoin since 2017 that you would really still be holding it. Hindsight's always 2020.
Unless you lost your keys.
You're actually
and
in the
them.
moment in these theoretical trades. It's a whole different experience.
Yeah. Again, if you forgot about your crypto or you forgot about your Bitcoin, you found your keys later on in life. I mean, that's one of the situations where that worked so heavily in your favor, it's not even funny.
Yeah, when the time comes to buy, you won't want to. That is really well put. I know you're quoting Nick there, but yeah, that's a good quote to pull here. I actually considered buying a Bitcoin futures contract from a miner in 2012. Oh,
that's
man.
Wild.
Yeah, I'm sorry, Steven. That is pain. But once again, you can't have the FOMO now. Like, you would have liquidated in 2017 or 2016 when that thing went ripping. Probably. It would have been silly not to, as crazy as that is to say, knowing what we know now. It would have been crazy. CNBC is reporting breaking news that KD got access to his account. All right. Thank you, Bob. And thank you, CNBC, for telling us the stories we really want to hear. Kevin Durant's Bitcoin is safe.
It is safe.
Yes.
Do we know how much Bitcoin he had?
No, I don't know. I don't think the actual like percentages of the contract that were being paid in Bitcoin is specified. Oh yeah, BBAI. I see. Oh, Delito. I had to lean in on that username. That's a good username. But yeah, BBAI up 20% overnight. Easiest day trade in my life. Yeah, I know lots of people long on Big Bear AI right now. It's been ripping a little bit recently. They just got a big investment from NVIDIA or PTO or something like that. NVIDIA's investing in everybody right now, man. They got more cash and they know what to do with.
NVIDIA.
Hey, Jensen Huang, get out your boy.
NVIDIA's spreading the funds.
I don't need much. I don't need anything that starts with a B. I just want like $20 million.
NVIDIA is just sharing the love, brother. NVIDIA's spreading the seeds, so whatever pops, whatever pops, they're in it.
Oh, Coinbase CEO Brian Armstrong tweeted about Kevin Durant's account being fixed. Of course he did. I wish I were some big famous basketball player, and when I need customer support, the CEO just directly intervenes to help me out. If I got locked out of my Coinbase account, I'd have to talk to 6 different people.
Maybe that's...
The report is that KD has a, quote, bevy of Bitcoins. Nice.
Bevy. What has Coin been up to these days?
Coinbase IPO with the Dutch auction. Here's my Coinbase fun fact.
The Dutch auction. Hey, look. No, we'll save another crypto for next week. I think some of these crypto talks will be fun.
We will.
They will.
I bet. My goat.
Lack involved.
My other goat.
My goat. Can only be one. Right?
But January 27, 30 calls. You're talking about Paramount, Saj? I assume that's what you mean. That's what I've been on my high horse about today. Gemini IPO. Not like Google Gemini, obviously. You mean something different? Gemmy. Let's take a look at that, Ariel. GEMI. What do we got?
GEMI. Let's see what these options are trading. So we've been absolutely beat down the last few days. IPO, right?
Nice. This is the StubHub curve.
This is the StubHub curve. Let's see what these 63 days are going for. Let's see if we were to get long. So we sold to like 15 put.
how many days old is this stock? We got options on this already?
Yeah, we already have options. That's what I'm thinking. StubHub could come next week or 2 weeks if we get enough volume. They might create the
I'm
options.
checking it right now.
Yeah.
There's options on StubHub right now.
Oh, it's there already?
Yeah.
Okay, there we go. It's like, what's the volume like? We're going to change, we got 2 deltas over here, so we're going to change this column to volume.
Shout out to SIBO.
We got 1 volume right here. He wants that 12.5 call.
Gemini is crypto exchange similar to Coinbase. Ah, I see.
Gem.
Interesting. It's the Winklevoss twins. Ah, okay. It's all coming together. I see. Check circle volume. Sure. We can do that.
Yeah, what do we got? On the day, we've traded 9.9 million shares. Zoom out. See where we've been.
Not bad for a Friday.
Not bad for a Friday. No, Circle Internet Group, I mean, hasn't been doing too much. It's kind of been on its butt. But I mean, we're still trading.
Circle, man. Circle is just my like FOMO trade of the year that I did not get short this thing at 300.
Oh, Gemini?
No, Circle.
Circle.
Yeah, it was at, I guess it just barely touched 300. But when this thing was over 250 for a sustained couple of days, I was like, I wanted to get short so bad, but the volatility was so crazy and the premiums were so high. I was like, oh, there's no way that this works out to be a responsible decision. If I get short on this thing right now, it was going to be so much premium. But man, if I'd been kicking myself, I would still be back holding those things. It was ridiculous off IPO.
Yeah, no, I mean, this thing, this IPO, let's go all the way back real quick over here. Yeah, what last?
I use Gemini. I don't like it very much.
Gemini as in for
crypto
Google
exchanges out there, Bob. You don't gotta stay in a situation that's not fulfilling your crypto line.
This is a free market, Bob. This is Goldman Sachs Active Beta Emerging Markets ETF. I've not traded any of the banks in a while. It has been a while.
I haven't either. I used to, yeah. I mean,
I know banks are
JPM
absolutely shaking in their boots with these crypto exchanges. Banks are in fear of these crypto banks that are coming. And I mean, I would too. If I was running a bank, I'd be like, yo, this could be trouble. So,
no, yeah. I mean, yeah, I think decentralized finance is the scariest thing for these banks. I think that what really needs to happen to actually foundationally shake the banking world is that these online banks like the SoFis of the world and also the crypto exchanges or whoever is the first mover on it has got to start offering loans, because that's how banks really earn all their money is loans. They could to an extent care less where you keep your money as long as they still have loan demand for all types of loans in the world. But as soon as I know SoFi offers loans right now, that is a thing. But it's like the decentralized banks, like I've thought about this a lot because it sounds like something that would actually be kind of appealing to me. But what keeps me off is ATM situation. I don't want to have to pay fees every single time I use an ATM all the time. And beyond that, it's the loans and it's the lack of personability. I like banking with Chase and Bank of America, where if I really have some kind of catastrophic issue, I can just walk down the street and walk in and somebody will be happy to talk to me. And I know that if I banked with SoFi and I had some kind of catastrophic issue, I would have this annoying sequence of people I have to talk to on the phone to ever try to get it resolved or wait for callbacks or whatever else. Human connection is important. Being able to sit face to face with somebody and explain your situations really makes you feel valued. And that's just something that these online banks can't really hang with.
It's valid. And I mean, to the point, Bob Sala was saying, you think there's a free market, but there was a time when there's only 2 crypto exchanges were legal in my state, Coinbase and Gemini. I use both. That's valid.
I can believe that. Lots of the more mainstream crypto exchanges on the world scale are still not legal here. Binance chief among them.
Well, there's probably a lot of politics involved into the reason why that is. They've been definitely trying to slow the process and make it as difficult as possible. And again, I understand. This would literally uproot the banking system if crypto comes to fruition. But I think it's something where we can't help that it's coming.
I used Uphold. You guys should check out Tasty Crypto, man. We got a nice crypto brokerage.
Yeah, no,
right
Dan
here.
Dan and Shelly, they kill it too.
They do.
You know, they will really educate you on what's going on. They've helped.
Yeah, Dan and Shelly, they work really hard, and they do an amazing job. The White House event, UFC, Mike, in response to your question, is I believe they're trying to get that on a 4th of July. What 4th of July? I am not sure, but that looks like it's on course for 4th of July 26 or 27. But that is in the works. Figure, FIGR, offers blockchain-based loans. Okay, that's interesting. See, that type of thing. I think more innovation in that regard could really fundamentally shake the way that banks operate in America now. I'm so lazy. I should switch to Tasty Crypto.
That's really what it. I mean,
we got it all integrated.
Yeah,
it's all great. Also, hey, I'll float this out as my closing remarks as we're running out of time here. I made, count them, 1, 2, 3 more profitable Forex trades, and I still don't know what I'm doing at all. And these ones were the most brain dead ones yet, guys. I put these on because I was bored, and the way that I sourced these trades was I asked ChatGPT, can you tell me some crypto pairs that are close to all-time highs and or 5-year lows? And then I took all 3 the opposite direction, and they all 3 just worked out. It was euro dollar, Australian dollar, and now I'm sitting on, the last one I'm sitting on is euro pound, actually, which is my first one I've ever done that has nothing to do with the dollar.
No shekel right now, though, right?
No shekel. I'm not exposed to any shekel, but I'm just applying very basic contrarian trading principles to Forex, and I just keep winning. I am undefeated Forex trader. So yeah, remember to tweet your Forex trades at me, guys. I will enter them and we will win, apparently.
The shekel, I just love that one because it just feels like we're firing off muskets and signing Declaration of Independence. Like that's what my mind goes to when I think of shekel. Shekel's got to pay in shekel. That being said, anything else to add before we hop on out of here? We'll see how some of these Forex positions pan out too. By next week, we'll circle back around to it all.
No, I don't. Nothing. Super pertinent. I think these IPOs this week are interesting. Are we turning over into a world where there's just not as much excitement about IPOs anymore, or was this just 2 fundamentally bad companies? Jury's still out. We will see.
I think that people can't afford groceries. I think
that is true.
I think that's what it is. I think we're in that cycle right now. Disposable income is down. Debt is at an all-time high. We'll see. See what we get. We'll see how the market digests it. Again, first rate cut. That's so exciting. We'll see what new market environment we're going to be in too.
It is. Cut, baby. Let's go high. I'm long until proven otherwise.
Let's get it. That's going to wrap it up for today's segment. Thanks for hanging out with us today. Be sure to stay tuned for more coming on next, and we will catch you guys next time. Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Veneta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on 1 second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. And the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing. So I stop washing my hands and I'm grabbing like towels to clean. I'm listening to what he's listening to, and I hear your voice.
Why didn't you go knock on the door and say,
he's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here?
I mean, what am I doing? Hey.
Right, autograph session happening right now.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. And we are going to shoot from strength again today and dive right into theta. So Josh, go ahead and cue us up here on the title slide. So we are working through the two sides to theta. And just yesterday, we worked through the positive side of theta. And of course, today, we're going to flip over to the negative side. But before we even flip on to that negative side and kind of work through some of the the vagaries and the subtleties and the nuances of being negative theta, it's important to remember to make money in the options world, right? As a derivatives trader or a derivatives investor, if there are even those types of things out there, it's direction, it's time, and it's volatility, right? We talked about that yesterday from the positive theta side. It's going to be a very, very different type of take and angle today from the negative theta side. So Josh, go ahead and cue us up on the information today. So when you buy an option, this is when you are going to generate negative theta. So again, remember, yesterday we sold options. Yesterday we were positive theta. Today we're buying options. We're going to be negative theta. This is where it's really helpful to remember that at the end of the day, options are what are referred to as a zero-sum game. So that quite literally means whatever one side of the contract makes or wins, the other side of the contract is going to lose, and vice versa. So at the end of the day, for that contract, it's going to net out to zero. The profits on one side are going to equal the losses on the other side, and vice versa. So when you're learning about options and you're learning about derivatives and you're learning about theta and you're learning about delta and you're learning about all the vagaries and subtleties and nuances, it's really helpful to remember, all right, if I understand one side, then indirectly, I kind of already understand the other side, because you're not going to have an option situation where, the buyer is positive theta and the seller is positive theta. Like, that's not a possibility. You're not going to have a situation where, the buyer is negative delta and the seller is negative delta. That doesn't make sense at the contract level. So understanding that when you sell options, you're positive theta. When you buy options, that's when you're going to generate negative theta. Now, can there be situations when you have sold an option, or more specifically, sold an option spread and it actually turns negative theta? There can be, but that's way further down the road than I want to go here today. But just file that away in the old memory banks as a future project that you could undertake. Okay. Your negative theta, you bought the option. So what does that actually mean if we push it a little bit further, kind of maintaining the same parallel that we established yesterday with the positive theta side? That means the natural decrease in extrinsic value as you approach expiration is hurting you. Remember, it was helping the option seller. It was helping the short side of the contract. So naturally, it's going to be hurting you, the option buyer. It's going to be hurting you on the long side of the contract. Again, simply put, it's a zero-sum game. So if it's helping one side, it's hurting the other side and vice versa. The reason why this is the case, though, if we just go 1 or 2 steps further, remember, when you buy an option, you're buying the option for some price here. What do you ultimately want to have happen to that option? What do you ultimately want to have happen to that option price specifically? You want the price to go higher. It's no different than when you buy Apple stock, or you buy McDonald's stock, or you buy Wolf stock, assuming they're still in business, which is a pretty big assumption. But if you buy any stock out there, you want the price to go higher, right? You want to buy it down here and then sell it up there. It's really that simple. It's no different with buying a call or buying a put. Okay, remember, we have this downward pressure on extrinsic value that we learned in the extrinsic value series, and we went ahead and reminded ourselves of just earlier when we went through positive theta. If I have this downward pressure that is causing the extrinsic value to slowly whittle away as you get closer and closer to expiration, that is going to be a tailwind for the option seller. That is going to be a headwind for the option buyer. Because again, remember, the option buyer wants the option price to move higher. He or she doesn't want the option price to move lower. That is going to move and work counter to the objectives that they might have for that position. So as the extrinsic value goes lower, as you approach expiration and get closer and closer to that end point for that cycle and for that specific position, the extrinsic value, the downward pressure on the extrinsic value, I should say, is working against you. That is what negative theta means. Okay. What is this actually going to do to you as an option buyer? What is this actually going to cause? Like, what are going to be the implications of this for your position? Well, that is what you see there in the 2 yellow boxes on the bottom of this slide. Number 1, you are naturally now going to have a greater emphasis on direction to make money. It's really that simple. At the end of the day, you're only making money in one of 3 ways. It's time, it's direction, it's volatility. Yeah, there's like dividends in there, and there's interest rates in there, and there's smaller players that factor in from time to time. But the main movers are going to be time, direction, and volatility. Well, time, we've just established, is now working against you. Right? So remember earlier with positive theta, we had probabilities greater than 50%. We didn't have to be directionally correct. Like volatility was, really neither here nor there at times. And we would be able to generate all of the P&L that we might be going after from time alone, from positive theta alone. But here, it's a very, very different scenario, right? Because now I've got time working against me. So what do I need to do? I need to make up for that. Right? I've got to overcome that in some way, in some regard. And so now I'm just left with direction and volatility. Well, could you make up for that with volatility? You could. But by and large, on any given day, any given Sunday for my Willie Beeman fans that might be watching the show today, you are going to make or lose more money from the directional impact on the position than you are from the volatility impact. And so essentially what you're doing is you're causing yourself to now need a greater emphasis on direction for that position to be successful, for that position to be profitable, because time is now working against you. One final point. And again, remember, this is very much kind of a Theta 101. This is very much kind of a little olive branch to the new traders out there that might be just considering options. All of this stuff is a foreign language to you, and you're trying to understand this stuff at a very basic, kind of cursory level. But one final thought to kind of, nudge you into the forest for some more self-study on your own. Theta, all things being equal, actually increases as you get closer to expiration. Now, this works, on the other side too, if you sell the option, even though I didn't address this when we talked about positive theta earlier. Theta increases as you move closer and closer to expiration. So that means if I buy an option, the negative theta, the daily cost each day in extrinsic value dissipation, is actually increasing as you get closer and closer to expiration. So today, maybe it's negative $5 in theta. Tomorrow, maybe it's $5.30. The next day, it's $5.60, and so on and so forth. So what does that actually mean in practical terms? Well, that means that the hurdle that you have to jump over, the obstacle that's in your way that you have to navigate around in the form of time working against you. It's actually costing you more and more every day you're in the position. Or put another way, if you buy a call or you buy a put, it works on both sides. If you buy an option, call or put, you are going to find yourself kind of needing to be directionally correct more quickly than maybe you realized, because once that theta begins to grow a little bit of teeth and all of a sudden, each passing day is costing you more and more, it is quite literally increasing the hurdle that you have to jump over to be successful on that trade. Now, are there ways around that? Are there ways to mitigate that? Of course. I mean, you get into moneyness, you get into strike selection. Again, you get a bit further down the road. There are ways to mitigate this, but it doesn't change the core fact and the basic foundation of time working against you and every day that passes costing you a little bit more and a little bit more. And so this is really why at the end of the day, we much prefer to sell options rather than buy options. But there is a little discussion around the two sides to theta. So, all right, Josh, go ahead and bring us into the market. We did it, and my video held out, which is that's the big winner. I didn't know if it was going to, guys. I was having issues before we got started, so that's why I got started a little bit late. But thank you, guys. Thank you from the team keeping me up and running back there in Chicago, and so I thank you guys very, very much. But I appreciate you guys. Look at you guys in the chat. I even wore my green shirt, man. Look at that. EME S&P's up 19. Man, they thought it was over. Man, this thing has just gotten started. EME S&P is up 19. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, but only if you're a short, apparently. Up 119, up 115 on there. They got the boomers up 131. Got the Russell 2000 futures index down 18, but it's okay. Give it another hour or so. It'll be green too. And so naturally, I've got a double shift at Publix tonight. Like, I got to close it down, and I'm actually the overnight guy just to restock the shelves. And so it's like, man, I mean, you got to pay for these shorts somehow. And so there you go. You got bonds are down. You got notes are down. Man, look at gold. Man, look at the shift. He's celebrating. Up 37 points. Where are my Hunt brothers at? Hang on a second. We actually have a number of things we have to do in the portfolio today. Look at gold. Look at silver. Up $1.17. Man, they had them a little bit. Those metal shorts, man, they had them. They went down from 43 all the way to like 42.20. Right? And so, man, I don't know if you were expecting a crash in the metals. I mean, you got it. Right? I'm sure iPod Touch is in the house. iPod Touch, Event Horizon in the metals. You got 80 cents on the downswing, man. Like, what more could you want? What more could you ask for? And so everybody's happy. Everybody's excited. We got the green polo. I think I'm just going to start wearing this every day now. I think this is just kind of like this is an everyday type of deal. And so, but I see you guys in the chat, man. Look at you guys. I see David Gallimore. David Gallimore in the house. Man, that's awesome. Look at Brian Dowdy, Grumpy Mike, RC Ashfin in the house. Joel James, Stefan, Ed Bickford, Margin Walker. Man, Donetta's in the house. Man, Donetta, thank you for popping in. I appreciate you. Soul Train's in the house. Man, look at you guys. All right, so what we need to do, though, so we got to get down to business a little bit. This is the last day before Legoland, by the way. I'm so excited. My kids are like, they're very clear of the concept. They are like beside themselves. And so just a little housekeeping. Remember, next week I'm going to be out Monday and Tuesday because we're going to be in Legoland. We're leaving in the morning. We're going to be there Saturday, Sunday, Monday, Tuesday. Come back like Tuesday night or something. And then next Thursday, I'm actually going to be in Chicago, and so I'll be broadcasting from the HQ there next week, which should be super fun. But man, kids are super excited. I'm super excited. Like everybody's pumped, and I'm also super excited because when it comes time to like pack up the car and stuff, like it's not even my job. Like that's Autumn's job, 1,000,000%. And so I'll be just kind of maxing and relaxing, watching the Red Sox lose. But let's go ahead and let's take a look at a couple things in the portfolio that need our attention. So number one. We've got SPY. This guy expires today, and somehow, some way, it looks like we're going to be able to salvage, a little bit from the strategy. It obviously did not work. It did not work at all. It actually would have worked, right on the Fed number. Like if you had been trading a similar strategy or kind of following this type of trade, you had a couple of opportunities when the number dropped and, in the Powell press conference to take this trade off for a decent profit. I think I wasn't watching this trade specifically when the number came out on Wednesday. And then for Powell's press conference and whatnot, because I was obviously doing the show with Errol. But I think if you had a similar trade on, you probably were able to take this guy off for some type of profit. And so, again, you're welcome. Because this is a situation where it actually didn't matter if you followed me or if you faded me. I mean, if you've been following the show for any length of time, you know you should be fading me. But even if you followed me, you had a pretty clear off ramp there in the beginning. Like a pretty clear kind of exit ramp, like lights flashing, arrows, detour signs. Everything was pushing you in that direction. And if you didn't take it, then, there's not much more that I can do. But if you faded me, obviously, then you're at near max win right here, right now. But we're going to be able to take this off. Looks like we're going to be able to save about 60 cents off of the max loss. And so I'm not going to look a gift horse in the mouth. Let's just go ahead and let's do it. So let's see here. If I do, let's see if I go into, people are saying, oh, Josh, are we in the platform? People are saying we're still on the education slide. Can you bring up the platform there? Oh, thank you. Awesome. Okay. Thank you, Josh. And so thank you guys for calling that out. I appreciate that. All right. So for SPY here, but you guys didn't need to see it. You guys know it's all-time highs, right? You guys know. Don't worry about it, Josh. It's all good, man. Like it's all-time highs. Everybody knows. We don't need to see it again, right? It's like I've already seen Groundhog Day 19 times just this month, and it's only the 19th. So I've seen it every single day this month. I don't need to see it again today. I know the whole plot. I've got it all memorized. I can give you the whole dialogue word for word at this point. And so you guys already know, like it's nothing new. Well, let's go into SPY here. If we go ahead to close this guy out, let's save at least a little 60 cents or so. Because, I mean, my kids are going to want Legos, and they're going to want Legos from the mothership. Like, they're going to want them from Legoland. Like, they don't want these, these crummy Amazon Legos. It's the same stuff, of course. But for them, they're in the store. They're swept away with emotion. Like, my wallet gets swept away from my back pocket. Like, everything just gets swept up in the storm that is, obviously, the Legoland gift shop. And so, yeah, I got to save a little something. I feel like I should scalp some MNQs or something like on the show with you guys to pay for all these Legos I'm going to have to buy from Legoland. So there's a pretty significant markup. And so let's go ahead. Let's see, 53 cents. That's fine. Let's just get out of this thing and see if we can get something. I mean, I'll take anything at this point, honestly. Try 51 cents. Hold on a second. I got my new mouse, which is about the same as my old mouse. Maybe it's a little bit better, but I don't know. I mean, it's getting me to the end point, I guess, so I can't be too upset. Sorry, so there is SPY. We got rid of that. Okay, so now we need to close out of Meta and Google. We got to do both of these guys today because they're set to expire, and you can see they're both fully in the money. So you can see that right here, and then you can also see that right here. Right, I've got Google, I've got Meta. Both of these guys are fully in the money. And so, when you have a vertical spread, short vertical spread, and you miss the trade, then it lands fully in the money. That's kind of what a miss looks like when you sell a vertical spread. So it looks like, we're short call spreads in both, of course, because the market never goes down. And so both of these guys are fully in the money. We only have an hour and a half left. And so we have essentially taken this guy down to the wire. Like, this is the end of the road. I mean, Boys to Men tried to warn us 38 years ago, but here it is today. On September 19th, 2025. So they were a little bit early, but nevertheless, a bit of a prognostication on their part. But Google and Meta, it's over, man. It's done with. There's not much more we can say. I mean, if I keep going, I'll find another 3 to 7 minutes of commentary, but I think we'll go ahead and close these guys down. Now, one thing that's always helpful, well, here's your extra 6 minutes of commentary. I try not to do it, but sometimes you can't run from who you are. $5 spread in Google, $10 spread in Meta. That's important because the width of the spread, that denotes the maximum value of that spread. And so theoretically, we shouldn't have to pay more than the width of the spread when we're getting out of this position. Theoretically. So we shouldn't have to pay more than $5 to get out of Google. We shouldn't have to pay more than $10 to get out of Meta. Okay. We are at the very, very end. I doubt we're going to get out for $5 on Google and $10 on Meta. And that's because when you move from theory to practice, there's a few extra subtleties and nuances and vagaries that you have to familiarize yourself with. And one of them is, hey, I need somebody to take the other side of this trade. Who is going to take the other side of this trade with an hour and a half to go at par value? Like at parity? Probably not too many people. So what am I going to have to do? I'm going to have to pay up a little bit. I'm going to have to pay an extra penny, an extra 2 pennies so that I can get out and avoid the assignment fees. Now, if you're like, I'm not paying that extra penny, I'm not paying those extra 2 pennies, whatever, then you could obviously go ahead and just let it go to expiration. Then you're paying assignment fees. And so it's like, it's going to be more cost effective for us to get out of these trades, even if we have to overpay a little bit by getting out of Google for 501 or 502, getting out of Meta for 1001 or 1002. Now, I'm not going to have to get out for 510 or 525 or 550. Like I said, I'm not going to get completely ripped off like that, like I'm about to at the Legoland gift shop. But it's you got to understand that there's going to be a little something that you got to give the man to get out of the trades. And so anyway, let's start with Google. And sometimes at expiration, the orders get rejected and they get kicked back to us if we try to pay more than the actual maximum value. So if that happens, I'll show you guys a little workaround when it comes to that, but hopefully it won't even happen. So here, watch. I'm going to try 5 and I'm going to show you guys. I'm going to say, again, guys, this is live programming, right? It could be me. It could be the AI version of me. Either way, it's live. It's September 19th, 2025. It's 2:25 Eastern, 1:25 Central. I don't know what's going to happen next. It's 95 delta that we do not get filled on this. 99 delta. I will be shocked if we get filled for $5. I don't think it's going to happen because there's only an hour and a half left. Who would take the other side of this trade? And so maybe somebody's in, kind of generous spirits out there that will kind of wants to, help us out. I don't think there will be somebody that's going to be out there, but let's give it a shot just to show you guys and prove my point. I'm going to try to get out for $5. I don't think it's going to happen. If it does happen, then we'll just go back in and edit the tapes, and it'll be like this never even took place. So let's try $5. All right, so there you go. We got filled. I can't believe it. We got filled at $5. Wow, they almost didn't fill it there. I can't believe that. Wow, did that really get filled? Hold on a second. Am I living in... This must be a simulation. I really didn't think it was, but now I'm not so sure, man. I'm really not so sure. Did we seriously just get filled on that? For $5, we got out at parity with an hour and a half to go. Hold on. Are the multifocals? I can't believe my eyes. Guys, we got filled at $5. I can't believe that. I don't even know what to say anymore. I don't even know what to believe. You shouldn't believe anything I said about all this two sides to theta. I clearly have no idea what I'm talking about. No idea whatsoever. It's like positive theta, negative theta. Just do whatever you want. None of it even matters anymore. So I can't believe we got filled. That's crazy. Wow. I'm really shocked. All right, let's go to Meta. I see Ash Finn popping in saying I should have tried $4.99. You're right, Ash. So you know what we're going to do? Man, I'm going into Meta. Watch this. Watch this. We're going to get out of Meta. Maybe it's the same guy out there that wants to help us out on this trade too. 1002. I'm not getting out of 1002. Nah, man. 998. Let's go. Okay. Now, for real, though. It's 105 delta that we don't get filled on this. Like, there's no way. There's no way we get filled on this. There's absolutely no way. That would make no sense. Somebody's going to give us 2 cents off of max loss with an hour and a half to go when the stock is, 75,000 points in the money. This would make absolutely no sense. If we get filled on this, I mean, I don't know what to believe anymore. But I'm going to do it. This is a live show. You never know. Review and send. I'm a little bit nervous. I got to be honest. All right, so we didn't get filled. So my 105 delta play is actually correct. So that's good. It gives me a little bit of confidence. I was actually kind of nervous that we were going to get filled there, and then I really would have lost a lot of people watching me. I mean, I wouldn't watch me. Like if you just clicked on the show, and this is like your first experience with me, sometimes it's better than this. Like this isn't even B-. This is like a solid C. This is a very C type of effort that you're seeing here today. But yeah, I'm shocked that we got filled at $5. And I don't know. We can't get 998. I mean, obviously. But let me try. I say obviously it's about to get filled. Let's try $10. There's no way. There's no way. There's no way. I think we're paying up for this guy too. We have to. It doesn't make any sense. Oh my gosh, I can't believe this. Who is out there? Who is out there? Josh, are you out there on the other side of my trades? Man, I mean, I'm not upset necessarily because this is what should happen in theory. But now all that mumbo jumbo about theory to practice, it's all garbage, man. Throw all that stuff in the toilet, right? It's like, no, man, it's perfect. It's textbook, right? What your finance professors, Josh says he's usually fading me. So yeah, well, you kind of are right now if you're on the other side of my trades, although they're all going to be expired here in a couple of hours. I can't even believe this. Guys, I don't even know how to finish the show anymore. I don't even know what to do because I had this whole thing planned. I was going to for all the new people and be like, hey, You know, sometimes you got to pay up a little bit. Like sometimes you got to give the Sosnoffs and the Sheridans a little something to get out of the trade right at the end, because again, you need somebody to take their side. Now, maybe somebody knows something that we don't know. I mean, the NASDAQ just sold off like 8.5 points in the last hour and a half. So maybe the crash is coming. Maybe we're not closing plus 105. Maybe we're closing plus 75. I mean, that would basically be like 1987 at this point. And so maybe somebody knows something out there, man. Like I thought nobody knew anything, but I don't know what to believe anymore. I have no idea. I mean, it's like I don't even know how to close out of orders. I mean, the P&L Open Bros get another W today, of course. Best Buy getting crushed. Chipotle getting crushed, of course. Oh, look at FedEx. Look at our earnings trade. Hold on a second. Brian Dowdy, wasn't this your trade? Well, look at that. I had completely forgotten about this, honestly. So let me close this out really quick. Look at this short put. Man, there it is, guys. Sold it for $251. We're going to buy it back for 46 cents. It's a thing of beauty. It's a thing of beauty. Brian, this was Brian's trade, right? I think so. Brian, I thank you so much for making it idiot proof for even me, right? I mean, you put it out there. You told me exactly what to do. Like I remember, sell the put, one standard deviation. Like, there you go. I appreciate you, my friend. So thank you so much. So let me go ahead and I'm really taken aback by what just happened in those two orders. Let's buy back FedEx at 50 cents. I mean, whatever they tell us is true, must be true. And so there you go, man. But look at you guys. I see you guys in the chat, man. Where are you guys at? Let me see here. Josh says I should buy a lottery ticket. Yeah, he's probably right. I may have to do a little something. Let's see here. Let me try to surprise and delight somebody in the middle. Man, let's do it. Where are we at? Here we go. Sergio. What's going on there, Sergio? Sergio says, Dr. Jim, considering the number of positions you have, how much is your current buying power usage? I think I'm using about only about 50% or so right now. I'm not sure exactly, but I think it's around 50%. And so now, I mean, we've just taken off a few trades actually, especially FedEx. And so I think we're around 50% or maybe even a little bit under 50%. I think we're somewhere between 30 and 40. And so we're still not that, because you have to keep in mind, like a lot of these positions, I mean, Best Buy, I mean, we're holding shares. I mean, that's $3,600. Chipotle, we're holding shares. That's $2,000, right? But a lot of these positions, like the gold, vertical spread, tiny spread, only a few $100. You've got, let's see. You got, the rigatoni strangle is nothing. It's a couple $100. We did that just yesterday. And so this little Dave Rigetti deal is not really costing us much of anything either. And then like UNH, that's actually working out okay. That's another spread. I mean, we have a number of undefined risk positions on like HIMS and GDX and, Oscar and even like, Palo Alto. But like the smaller guys like GDX, HIMS, Oscar, those are pretty small positions. So we're under 50% right now for sure. And so, but let's see here. Where are we at? Kind of surprised to like somebody else. Let me see here. Well, this is pretty funny. RC says, hey, Dr. J, what color polo do we need for a downturn in the market? I don't know, but I'll tell you what. So, because I've got my little stable right over there. So here it is, man. Like, this is it, right? But I'm saving it. I'm saving it for when it actually matters. I'm saving it for when it actually makes sense, which is clearly not today. And so you guys are stuck with this shirt 80% of the time, and then we'll mix in the magenta for Magenta Mondays. And that's pretty much going to be it. This is going to be the day-to-day roster now, since NASDAQ 25,000. I mean, here it is, 100%. Like, you can't stop it now. Like, you think you can stop it, but you can't stop it now. And so yeah, NASDAQ 25,000. There you go. And again, this is only happening on the Tasty Live network. So aren't you glad that you are here so you can experience it with all of us? Because everybody else, like out in like, just la la land with like Yahoo Finances and CNBCs and whatever, they don't know what's happening. They still think the NASDAQ is 18,000. They're still trying to recover from Liberation Day. Like, they don't even know that it's actually at almost 25,000. But you guys are here, man, and you're doing it. And so, but where are you guys at? Let's go to the beginning. Where are you guys at in the beginning? And we're about to be done with the show. That's unbelievable. That's really, really amazing. And so we started a few minutes late, though, and that was my fault. But let's see. Oh, Daniel Perkins, I see the comment right before the show, says, with our tasty programming schedule in shambles. Is it really in shambles? I didn't know that. I mean, I know Chris is out, obviously, because he had a baby, so that makes sense. Well, I mean, his wife had a baby, but they had a baby. And so that's, that's amazing. That's incredible. And so, but it's nice to be able to count on Dr. Jim to bring the B minus humor. The humor may have been B minus today, but man, the actual content and the value in the education, solid C, maybe even a C minus, maybe kind of like a come see me after class type of deal. Because yeah, not my best effort at all. I'm still shocked that we got filled not once but twice at the actual theoretical max. That just doesn't usually happen. Sam L's in the house. Happy Friday, Doc. End of the week pump session. Forget leg day. It's all about flexing those P&L gains. Man, I don't know about all that. We're getting crushed. And so unless you're our P&L bro, then it's just cardio pain. Yes, the P&L bros are probably doing cardio on Friday. Kind of getting a jump start on the old cardiovascular activity for the weekend. David Gallimore, Dr. Jim, first time back in over 3 weeks. Yes, we have missed you, my friend. Thank you for being here. I've been in the Philippines, in the U.S. now, going back to the Philippines indefinitely in about 6 weeks. Oh, that's cool, man. That's awesome. I know we've emailed about this a little bit too. That's amazing. I think you're pretty excited about it, if I'm not mistaken. And so that's cool, man. That's really, really awesome. I'm happy for you. And I hope you're still able to kind of, access the markets from over there and, watch Tasty and do all the things you would normally do from here, but maybe a little uptick for you in your personal or professional life. And so that's good stuff, man. Awesome. Safe travels, of course. And it's good to have you back. Well, let's see. Brian Dowdy, Dr. J, it looks like I just got to provide you some guidance that you originally gave me. I know the short put is your favorite strategy deep down. It is. It's not even deep down. Like, it's very surface level. Like, I will tell you guys straight up, it is the short put. I mean, I did the whole segment about that on one of the live bashes, like our 6 favorite strategies or whatever. Like, mine was the short put. And so that is my go-to number 1 strategy. Now, I know, you guys see a lot of expecting move butterflies. You guys see a lot of, strangles and things of that nature. But you have to keep in mind, a lot of that is tied to like an event or it's tied to like some binary moment in time. And so if those things are removed and I'm, forced to choose my favorite strategy, like writ large, like all things being equal, it's going to be a short put. It's definitely going to be a short put. And so let's see, the gotcha part can get ugly though, hence your portfolio. Yes, that's correct. It certainly can. It definitely can. But let's see. Oh, Grumpy says, are you searching for Victor? Maybe so. Maybe he's out there. Maybe he's in the Philippines. I think is that on the same side of the world as Victor? I'm not sure, actually. Man, my geography skills, they're not that great to begin with. And whatever I do have is failing me right now. But Sam L says, Doc, taking the kids to Legoland, careful between the plastic bricks and your earnings trade, something's bound to blow up the P&L. Yeah, I don't know, man. Something's going down. It's so funny because, again, we've been there a few times. But this is Amelia's first time going. And one of the cool things about Legoland is they have the lazy river, which that's always a crowd pleaser. Everybody loves a lazy river, right? Well, they have like the big Lego bricks that are floating down the lazy river like with you, which is pretty awesome. Like it's really, really, really awesome. And so like you could pick them up and like start building things. And Amelia was like just blown away at this concept. Like she didn't understand. I mean, she understood what I was saying, but like Eli, her older brother, and Penelope, her older sister, were trying to explain to her like what it meant and like how you're like on the raft and then you're building things. And so she's very, very excited. And so I'm excited because, if you have kids, like that's one of the really awesome things about parenthood is you get to get excited when your kids get excited. And it kind of reminds you about being a kid and like all that stuff. And so I'm pumped. It's going to be awesome. And so let's see. Wolf says, hey, Dr. J, hope leg and try day was good. Yeah, right. Legs and tries. We got to do something to shake this market up, man. Like give me some chest and buys. Give me some legs and tries. Give me like some hams and forearms. Like, let's get a little something different working because the old stuff is just not getting it done, man. It is not getting it done at all. Also, best of luck to your Rams this weekend. Nah, man. Did you guys see my Buccaneers on Monday night? I've been telling you guys from day one. I mean, I'm here in Tampa. Who else would you think I'd be rooting for? Did you see my Buccaneers on Monday night? Man, they pulled it out at the very end, but I never had a doubt. Was there ever a doubt? I don't think so. My Bucs are looking strong. Baker Mayfield, man, he's my guy. If he's still the quarterback, it's either him or maybe it's Trent Dilfer. I'm not sure. It's one of those guys. But either way. Ashfin's in the house. What's going on there, Ashfin? RC, happy, ready for a market pullback? Yeah, you're going to have to wait at least the weekend, I guess. Margin Walker. What's up, Dr. J? Appreciate you, my man. I appreciate you appreciating me. Not too late to put on that Ondis expected move call butterfly. It hasn't moved since last week. That's a good sign, right? Yeah, I don't know if that is a good sign. I'm just going to pass because I want to get to a few more questions and comments because, we had the education stuff. I had to recover not once but twice from getting filled at theoretical max value on my in the money spreads. And so all of that has really thrown me off today. And so we've kind of wasted a bunch of time on that stuff. And so I'm going to pass on your little Ondis guy. And yeah, we'll move on to greener pastures. Rancher's in the house. What's up there, Rancher? Scramble everything. There he is, fresh off his public shift. Nah, man, I got 2 today, and they're both tonight. I got the evening shift to close it down, then the overnight shift to restock everything. And so I haven't done it yet, but I wanted to get a jump start on kind of changing into the work clothes so I can just I get done, I hop on the e-bike, and I'll be there in, 45 minutes. And so, but let's see, Dr. Jim and his extremely pertinent educational piece to close out this week of world-ending market events. That's correct. It is a bit, I don't know why I would be doing these educational pieces right after an FOMC, and then today we probably had consumer sentiment revision forecast estimate, right? That's always a market mover. And so the fact that we're here, I'm shocked at that too, to be honest with you. And so I need to do a better job of timing my educational pieces so that they don't line up so perfectly with the apocalypse, right? It just doesn't really make a ton of sense. But again, now that it's out there, I'm counting on each and every one of you to go on YouTube and watch that piece when Ryan gets it up this weekend. Watch it all the way through so I get that watch time. And you can't watch it on 2X because YouTube is crafty, man. If you watch it on 2X, I only get half the watch time. You got to watch it on a half X. You got to watch it on a half X. We're going to practice right now. You got to watch it on a half X. It's going to be brutal for you. It's going to be so brutal for you. But I know you guys can do it, man. I know you guys can do it. You got to come through for me. And so let's see. Let's see. Oh, David said Victor's in Singapore. I think you might be right. Joel James, Dr. Jim, since the market only goes up now, should we stop selling calls? I don't know, man. I don't know what to believe. After getting filled at the theoretical maxes on those, I don't know, man. Do whatever you want. It's like whatever. I don't even know what's true anymore. I don't even know what's real anymore. Right. And so I don't know, man. I mean, sure, stop selling calls, start buying calls. I don't know. Or maybe start selling calls. I mean, whichever way you want to play it, it's going to be totally up to you. But all kidding aside, to give you a serious answer, I mean, not necessarily. I mean, I don't love selling calls as a standalone strategy. I've been very open about that. We've talked about that many times. I've done it from time to time as kind of like a smash and grab, like a little one-off type of deal. But as like a repetitive, like core staple strategy, it doesn't make a lot of sense to me. Because it's the polar opposite of selling puts, right? I mean, when you sell a put, as Brian Dowdy kind of reminded me of, it's my favorite strategy because the market is, kind of most likely going to go higher over time. I think that's a pretty safe historical bet. Now, it could get really nasty. It could get, really bad in the interim. But if you zoom out long enough, if you sell puts on companies that you wouldn't mind owning, I think it's a great start. And there's a lot of different ways you can play that. There's a lot of different things you can add on top of that, but it's a good foundation. But selling calls as a standalone is the opposite of that. I don't love it. But selling calls with a selling put, then you have a short strangle. That's not a bad strategy because now you've got all the premium that you're bringing in from the short put, and that really changes the dynamic of the strategy significantly. And so, you have to make that call, Joel. It's that, that's going to be 100% your call. I'm not going to stop selling calls. I'm not going to stop taking bearish shots at this market because I still think that, there's a lot of opportunity on the downside, a lot more opportunity on the downside than there is, on the upside. And so, those are just my thoughts. Stefan says, B- humor and sarcasm coming our way. Buckle up. Have a great weekend, Dr. J. Man. I appreciate you, my friend. We tried to give you a little bit of both today. We were very much at a B- level on both. And so that's good though, because that's what you guys have come to expect. But I appreciate you, Stefan. Have a great weekend yourself, my friend. Sergio in the house. Appreciate you. Ed Bickford. Hey, Dr. Dangerous. What's going on, my friend? Thank you for being here. Thank you so much. David says, is Dr. Jim playing a previous record video? Yeah, see, he doesn't know. David, you might be new. Like I'm weaving in these educational pieces now where when the show begins, like you think I pre-recorded this. When the show begins, you're like, oh, his hands look kind of weird. This is probably AI. No, it's actually me. And I know that my hands look weird just in real life, but it's there to trick you. It's there to fool you to where you don't really know what's real. You don't really know what's fake. And so yeah. Grumpy Mike says, maybe his hair looks pretty short here. Really? Man, because I mean, the mane is really, it's the main attraction now, whether I want it to be or not. And so I'm actually giving some serious consideration to maybe getting it cut. Not like short, but just a little something to kind of tame the whatever you would call it. And so Sergio says wolf. Yeah, we dropped a little wolf there, kind of impromptu into the educational piece. We did a little something just to make sure that you were paying attention. And so that's right. David Gallimore says no endless rambling. This is real content. Oh, don't worry. You had about 25 minutes of the endless rambling after. But now we just, instead of front loading it, it's back loaded. It's a time release, right? Again, it's just like your pre-workout. Right? I mean, it's got beta alanine in it, but it's not going to hit you for 28 minutes. Like, it's got some taurine in there, some alpha GPCs in there, but it's not going to hit you for 46 minutes. It's the same thing here, man. It's the same thing here. It's not an immediate effect. We backload it. And so then all of a sudden it just hits you and you don't really know how you got to that point. And so, but it's the same thing. And so let's see. Margin Walker says, this show feels pre-recorded. Man, I kind of take that as a compliment. Like, if I'm Big Deal Donuts, I didn't think it is. No, it was not pre-recorded. None of it was. And then Margin Walker says, we'll find out when he gets done beating the positive theta horse to death if he starts giving shout outs to the chat. That's right. That's how you know. And the rancher says, it's going to take my money. That's how you know. But I take that as kind of a compliment that I'm actually able to like flip into like business mode, like formal mode, like, very kind of like high school prom-ish, like everybody's best behavior, like blah, 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 blah. And then, once we get down with the educational piece, it's like the last hour of prom. Like, everybody's having a good time. The shirts, you got a couple buttons down. It's like everybody's having fun. Everybody's out there on the dance floor. And so that's basically what this is. And so let's see. I'm almost out of time. That's crazy. David Gallimore says yes, because the live Dr. Jim rambles for like 60% of the time. 60? No, man, it's 70 to 80 minimum. And so, man, I appreciate you. So this is real content. Yeah. So there you go, David. Hopefully it helped you out a little bit. Margin Walker says, in spite of my previous smart aleck content, I love Dr. Jim, and I love you too. I appreciate you. And I welcome all the smart aleck contents, all of it. I welcome all those things. Oh, man, I got to go. I'm totally out of time, man. I appreciate you guys. Man, look at you guys. I see you guys in the chat. You guys are my favorite. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on, Wednesday, Thursday. I'll see you guys sometime next week.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. From Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's going on, everybody? We're trying to put a bow on this Fed week, along with the expiration that's supposed to be one of the biggest ever. Been a wild, wild week here. We're going to talk about a few things. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler, and I got a guest today. Special guest, Gus Downing. What's up, man? Gains by Gus in the house.
Yeah, man, doing good. Happy to be here. Triple witching. It's exciting times. We're in here, and excited to get into it with all of you. I just right before we got on air, almost fell victim to a very sophisticated city card scam, but fortunately was able to avoid that situation. But it was my card got stolen, and then when Citi started canceling the transactions, the scammers called me from an 800 number pretending to be Citibank and like protecting me from fraud. And it wasn't until they asked me to verbally relay my one-time code to sign in that I was like, this sounds wrong. And I hung up and called Citi and informed them of the situation. They said they know what's going on and they're doing what they can or whatever. But just narrowly avoided disaster there. So I'm grateful.
Man, that is real undermining there. That is serious. Whoa.
Yeah, I don't know how they also had my phone number. I don't know, man. Scary world we're living in. You got to stay vigilant.
I know. I mean, most of the time, and that's the thing. Most of the time, we give the information out, right? Like it's like, man, where'd they get it from? But it's usually from us somehow or another, right?
No, yeah. If I wasn't so conditioned to just every one-time code I've ever received saying we will never call you and ask you for this code, I may not have been so wise to it. But as soon as somebody acting like they were from the company asked me for a code, that set off the alarms. And then when I called the real Citi number, they certainly never asked me for any code. So it all worked out.
Nice job, man. Way to avoid it, man. It's been a wild week here, in some way, shape, or form. I mean, not so much. I would say like. Just everything that has happened, right? We're at all-time highs for on pretty much every indice. Pick one, and we're at all-time highs on it. We all obviously had Fed drop rates a quarter point this week, theoretically with more to come, probably another quarter point in October, probably another one in December. So it's that's kind of set the stage for where everything is right now. Everything's seemingly bid. I mean, whether it's gold, whether it's silver, whether it's stocks, I will say bonds were bid coming into the week. They have sort of trailed off, but it's just been. I mean, what have you been paying attention to more recently these last couple of weeks?
Yeah, I mean, I've been I was just saying to Errol on Tuesday, I've kind of been keeping up with mid caps a little bit more than I ever have, but that's just where I've felt the most comfortable getting involved. And also we're kind of out of earnings season, but there's been a few mid cap spots where there's been earnings calls that I feel, drove the stock too far in one way or the other, and I've gotten in to play the reversal here. Paramount is the star of the show for me, P-Sky. I've been deeply long this since they announced the UFC deal. It just keeps on taking legs up for me. I was joking around with Errol on our show an hour ago that I'm 10x on my 10 calls and I'm 8x on my 20 calls, and I just continue to hold here. But yeah, this has certainly been the star of the show for me. And then of course UNH also has finally started to make a move these last couple of weeks. That's been catching my eye. I've been long there since the very bottom. Let the record show that I was long UNH before Warren Buffett. But
I was too, actually. I was too in this account. And I always talk about trades in multiple accounts. This is my Taste and Show account. I was long in here before Buffett too, right? I actually got out before, and literally maybe the day before he said that he was getting long. But I also have some in my personal account, and I'm still long that, and both of them are zebras.
Yeah, I am. I was long some shares from 268, which I am almost completely out of now, but still holding on to my options position there. I just have a naked June 18th, 26, 500 call. So real gamma play here. But I think it's got a lot of room. I think that we're through the worst of the storm here for UNH. Whatever the result of this lawsuit with the is it FDA, FTC? I don't know who's suing them, man. But whatever. Whatever result we get, whether it's good or bad, will at least restore certainty. And once that is lifted away, I don't really see what stops this thing from returning to 450, 500 range. It's not like much has changed about the fundamentals of the company. I mean, I understand that their CEO got shot and that they have this pending lawsuit, but fundamentally, I mean, their customer base hasn't changed very much, and they theoretically should still be just as profitable as they were before the CEO incident. So I see nothing stopping the momentum here.
I will say the only thing that worries me is if there's going to be some tariffs. I know there were just talk of I mean, it was more pharma tariffs. I don't think that necessarily could be them, but just who knows if there's some kind of situation going on in that space that is unforeseen somehow. I think that's the only thing. But as far as company specific, you're right. I think this thing still has more upside to go for sure. I mean, at the very least, I'd like to see it test that 200-day moving average there of around 400 and change. And I think at some point or another it should. I would say, yeah. I mean, when you look at like the breakdown here, the real big breakdown happened around here, which was obviously a volatile time, breaking down from about 500 and change down to the 400 level, and then it was kind of a slow breakdown from there. So we need to get back up to 400 and change for that thing to keep rolling.
Yeah, I'd be inclined to agree. And there's a gap to fill up to the 380 level before we even start talking about that. But I just feel like there's finally some momentum back behind this thing. Buffett's involvement really helped to drive that. I know some other billionaires have started to get involved, in Congress people, and the types of people that the public likes to follow. So yeah, hopefully should do good things. I never want to be on the opposite side of a Berkshire Hathaway trade. I'll say that much.
Yeah, I know, right? Yeah, when I think about that, it makes me think back to the Kraft Heinz situation, that buyout. I had some calls in Kraft, and I had them on for maybe a solid 2 months, and I got tired of them, and I pitched them. And literally the night that I pitched them, they announced the deal with Kraft Heinz, and stock completely took off. I mean, I missed out on easily a 50 grand trade. It still annoys me to this day. But now they're breaking up, so maybe I'll get another chance to get some Kraft calls. Who knows?
I was going to say, yeah, it rocketed on that announcement, but holistically, it really hasn't been a great merger for them at all, and they're splitting back up now. I just was just reading some Twitter outcry about mac and cheese the other day, which is hilarious that I'm reading mac and cheese discussion as it pertains to the market, but it very much did.
What was that about?
I don't know. They're doing. I guess that they're gonna actually Kraft is gonna now split again themselves, and the mac and cheese is gonna get shot off into whatever the new brand is, and people.
Yeah,
are
there's
really
going to
upset.
be. I think it's sauces. There's one side is sauces and one side is snack food. So I think I think that's the way it's going. I believe.
Yeah, that sounds similar to what I've heard, but yeah, I can't remember exactly. People are upset about the mac and cheese. People are very brand loyal to their Kraft mac and cheese, is what I can tell you.
They really are. I've never been a huge fan of Kraft mac and cheese.
I can't say I have either. I'm a Velveeta guy if I had to pick.
It's kind of. I'm not going to disparage it too much. I just never been a fan.
It's the powder that puts me off. If we got
exactly, bro. Yeah. That's what I'm talking about.
If there's liquid cheese going in there, I just feel better about that, and I feel like it tastes better on the back end as well.
Yeah, and I know a lot of people. You can tinker with your consistency of it based on how much milk and butter you put in. Obviously, you should put a lot more butter than normal. That probably helps, but yeah, I made it a lot though for a while there. I mean, my kids, I used to make that quite a bit for them. Before they were making their own stuff, I was making that quite a bit.
Oh yeah, it was certainly
Annie's as well.
I was putting on various brands of boxed mac and cheese while I was in college for a long time for sure. That was a staple meal. As I'd go to HEB and get the store brand box of mac and cheese and a pound of ground beef, and that's meals for like 3 days right there. It's great.
No question. Let's talk about one of the stars of the hour. This Oklo stock. This stock has been bonkers. A nuclear stock. So obviously, it's always had this kind of, and more recently, I shouldn't say always, but had this tie to the power, who's going to be the power generators for a lot of these AI applications. And this stock has really kind of taken the mantle more recently. There's been a lot of positive news this past week. It's been wild. I sold a strangle in here yesterday, getting beat up on it. I don't mind it too much. This is probably the first thing that I've sold in a while. As a matter of fact, I got 4 different strangles that I just put on this week. Finally found some vol to sell it in. I know these are crazy moving names. If this thing's going to keep going, it is what it is. I'll live with it. I'll learn how to manage it. I've had worse things happen, but I actually readjusted this thing today. It was probably a good decision. I was short the 141, so the 75 140 strangle coming in today. And as this big move happened, I kind of reorganized it and got the strikes as you see now. I was actually able to collect a little bit more. But collecting a little bit more means nothing if the stock doesn't slow down a little bit soon. So we'll see what happens here.
Yeah, this one's an interesting name. I'm actually not surprised to hear that you're involved at all. I have to laugh a little bit because literally yesterday I was sitting there thinking to myself for 15 minutes that for inexplicable reasons, this stock just gives me very similar vibes to CoreWeave, and I know that's been one of your stars of the year. So
I wish CoreWeave would move like this.
yeah. So, but yeah, I think I mean I'm really high on nuclear power as a whole. I think that this is a budding industry. I'm not surprised that they're looking into this to, tie this together with AI. I feel like those kind of are two of the industries of the future. And yeah, this move has been incredible. It's I mean, yeah, we're getting a Palantir type move out of Oklo here, and I'm interested to see if the momentum can continue, or at some point this thing has to become a little bit overvalued and breathe for a second. But I've been saying that about Palantir for 2 years. So
I mean, but they do breathe though, right? Like that's the thing. To clarify, breathing, like moving up, 3% is one thing, and these options are not priced for 3% right now. Like just looking at the vol. First of all, this is not really vol. This is basically put call parity when you're talking about something that's expiring in a few hours here. And I mean, look, I just pulled it up because I just want to show everybody. And let me double check too. As far as option volume on the day, this one is it was in the top 20. I'm gonna see if it's climbed any. It's still number 18 overall in all option issues on the day. And God, look how many options have traded. Like 26,000 on 125 line, 36,000 on the 130, 36,000 on the 135 line. And hell, it might get there before the end of the day. Who even knows? But I'm out in November, man, and I'm chilling on it. Like I'm not really gonna do anything at this point. I might adjust come Monday. There should be new strikes, I would imagine. It will not stop at 165. Who knows? We might get a 200 strike. I would love to sell the 200 strike, and I would just adjust the strangle going forward. We'll see.
Yeah, I think that's a very attractive angle, and I mean that's certainly the way that I would be looking at this as well. I wouldn't ever want to. I mean, as much as it might burn me, I would never want to get involved trying to go higher on something that has this much momentum and may already be a little bit overextended. But at the same time, I mean, the move that we got at open today out of Oklo is a move that I would typically like to try to sell into, and it has just. It's been sustained. This thing just keeps on ripping. So I'm very happy I did not get involved this morning. I definitely would have been on the short side, but it does feel like we are getting to the point where the short side may be where the value is. If 200 or even 250 calls start to rear their head, I would be getting involved if we have the opportunity to do so.
Yeah, I would imagine we should get those coming Monday or whatever. If this thing is up another, if we come in Monday and this thing's up another like $15-$20. I am definitely trying to figure out ways to get short. I wouldn't advise puts though. These puts are so damn jacked. I mean, dude, like I sold this. I sold these earlier. Where did let's see. I sold these 95 puts earlier in the day when stock was around this morning. So stock was around $7 lower, and it doesn't have the exact price, but I'm pretty sure I sold these for like $9.70, and they're not even a dollar lower. The stock is $7 higher. I mean, that just tells you these are remaining bid. These puts are remaining bid for sure.
Yeah, and I mean, especially if we come in Monday $10 or $15 higher than we are right now, I think it would be tough to find a more textbook situation where selling calls is the right call. Because I mean, yeah, the premium that we would be seeing would be so crazy all the way out to, I mean, I don't even know what a standard deviation on this looks like if we open that much higher on Monday. But I can imagine outside of one standard deviation move, there would still be a ton of meat on the bone to try to take advantage of.
Yeah, for sure. This is like quite the move here. $56. So yeah, one standard deviation right now is somewhere down in this range, close to this. Holy cow, man. This is it's always interesting. I always think it's interesting, even if you're not trading it, for people to look at stuff like this, especially if you're getting a little bit more sort of educated in the vol space and understanding how stocks move and things like that. Just looking at how the vol is working, obviously you can see this vol being bid to the upside, which is not what you normally see, right? You only see that in names like this. And matter of fact, I tweeted this out the other day. There's a couple of names that are kind of bid to the upside now. Vol is kind of up, and the stock has been up recently. I think Oracle's kind of another one of them. Baidu's another one of them. I've actually gotten short vol, and most of the names I just mentioned. Baidu's another one of them. The vol has been bid to the upside in here, but again, the stock has been on, like, you look like this, right? I don't have any option position in here. I have thought about it though, but I think I got enough volatile names that I have strangles in right now. I'm not going to do it. But this is another one. I mean, this BE, this Bloom Energy, this thing has been on the run more recently. I don't know. I thought they were more of a sort of crude play. Maybe you know more. I don't pay much attention to what names do as much as I used to, but I thought this is more of a crude play. But maybe there's some kind of nuclear situation going on with this, just based on the chart, because it's been on the run.
Yeah, I can't say that I'm familiar as well. Yeah, last I heard this was tied into crude, but there must be some kind of nuclear exposure happening here. Maybe Jack can help us out on that front.
You know what I'm saying? Like it's a trip. So yeah, there's been a bunch of these, and then of course Oracle, ever since the earnings move, has just really kind of stayed bid, if you will. There was also the news this week about the TikTok possible tie-in. I mean, they were one of the ones rumored at one point in time to be connected. So yeah, I had been a little nervous about this, but look, man, I've been buying a lot of things and or doing like calendar spreads here and there. And I've finally been looking for some things to sell. These are the few things that I'm able to sell. And I do like selling big names that have a lot of strikes where you can kind of keep yourself, even when you're get shorted, you're still kind of out of the money, if you will. And that's where the wings usually end up sort of eroding more than anything. So these are the plays I got right now. These are the first, I think I don't know the last time where I had 4 different names that I'm short vol in. Maybe April was the last time.
Interesting. Yeah. Oracle is a very interesting one to me. I think Oracle is just in a spot where you can like more or less be sure that in the next 45 days this is going to take a big move in one direction or the other based on a binary event of this TikTok sale. I do think that the broader market is still very much pricing in them buying TikTok. I do think it goes much higher if that sale gets finalized, though. I don't think that we are fully pricing in that reality yet. And obviously on the other side, we would just return right back to where this gap started if the TikTok sale doesn't go through. I mean, that's the entire reason for this move. I'm being told that Bloom does hydrogen and gas generators. So that's
what I know, something along those lines.
Yeah, alternative.
I'd be worried if they're going to actually buy it. I think they're just one of the number of people who have an investment in it. I don't think they're going to be the main ones. If they were the main ones, I don't think I'd be short balling here. I'd be worried about like this thing jumping another $100. I'm still kind of worried about that, but I just got to trade what's in front of me in this situation. And this implied vol is kind of high. It is a huge name. I tell you, if Oracle goes another $100, I'll be prepared. Trust me. I mean, when names move big, I'm ready to go. So if it's gonna do that, I will be prepared. And there's a lot of other different things you can trade along with it. And that's the nice thing about it. It's not like a one-off. Like if this goes, a lot of things in the space are gonna go, and I'll be on those to make long plays. But for now, I'm just trading the vol in front of me.
Yeah, and I mean, there's also the equation of price factoring into that and how the market perceives what they would pay for whatever stake they wind up getting in TikTok. It's still a lot of moving parts. And the news breaking earlier this week was that they're 30 to 45 days from a deal, but Trump moved the deadline 3 months. So I don't know who exactly I'm believing on that front.
I like it. That helps me out. I keep my position is good. I'm set. I'm good. 3 months is good. Give me some time. Thanks, Trump.
Yeah. So we'll see, but that's an interesting situation. I'm interested to see if it ever actually, if a sale ever comes to fruition, or if we're just going to continue keep kicking this can down the road. But I mean, from everything that I've been reading, it sounds like Trump is willing to let TikTok go away, and that's why they're anxious to make a deal. But also, he's moved the deadline 4 times, so it's a tough one to judge.
Yeah, it is.
Looking forward to a company called Whiffle or something that does dystopian shit. It's true. That does seem like the reality that we're living in right
now. I'm looking at volatility here. I'm looking at now the front month is October, and there's been this almost constant, there's been this nearly constant, almost $2 move, or excuse me, $2 roll price between the VIX futures, the front month VIX future, and the second month. Right now it's $1.60, but I wouldn't be surprised by next week if it's $2. That's what it was for September and October, and that's eventually where it's going to head between October and November. Vol has just kind of stayed low. We've been in contango area, but I like this environment. Honestly, I don't mind it too much. Things are moving. There's quite a few movers out there, and that's what I like. Like, I don't mind if vol is low as long as there's a lot of different things moving, and we've seen a lot of movement.
Yeah, no, for sure. And I mean, It's difficult to trade at all-time highs under most circumstances, but there's just been so much happening in the space with all these individual names that I feel like the volatility still hasn't been hard to find, as strange as that sounds. And I mean, also, I just stay perpetually long all the time. I will find ways to reposition if and when we do finally take a month off of this run. But if we're just going to continue making 2 new all-time highs every single week, I see no reason not to just pretty much blindly stay long until proven otherwise, because the market has shown us time and time again that it does not care. I mean, the Fed decision on Wednesday, I had a very accurate prediction on that we were going to overprice in the cut coming, and then we were actually going to come down once the announcement was made, and that's what happened. But we only moved down 50 points, and then we just go shooting right back up, like nothing matters, because it seems that nothing does.
My biggest loser on the year is SPX. You want to know why? Because I keep doing put butterflies and put spreads, and I'm tired of it. I'm done with it.
I'm always getting on Errol for the same thing, because every time we come on air, he tells me about a new NASDAQ short, and I'm like, stop doing this. Stop getting short over and over.
I don't know what he's doing. Yeah, at least I'm doing it with options. It's defined risk. I'm like, whatever. I'm out of it. Like, if it doesn't work, it's cool. And that worked. That's what happened this week. I had this puts. So I had this one, the 6,600, 6,500, 6,400. I had that coming into this week, and I had it for this past Friday. I literally just rolled it yesterday to Monday, but I mean, it's going to expire worth. It doesn't matter if it's Monday or what. Like, that's just kind of been, it's just been kind of futile to try even expect a meaningful pullback in the market more recently. And it's going to happen when we don't least expect it.
Yeah, no, yeah, I agree. That's exactly what I was about to say, is you just got to keep doing this, because the first week when you decide not to, all of a sudden that'll be the week that it finally comes back down. Yeah, I mean, there's been occasional periods where you could take an angle of neutrality and have it work out, but there has been, in the last 3 months, very few times where you could have taken a short trade all the way to expiration and had it work out, save for some zero DTEs here and there.
I'm surprised, even on a day like today, which is expiration. I am really surprised that we're not at least negative. Not that I'm expecting 80 to 100 points. I'm just surprised we're not like down 25. Like, I really am. I mean, I thought if there would be a day, this would be the day.
Yeah, no, I mean, yeah, you would think so. Triple witching, all-time highs for who even knows how many weeks in a row now. And the market just does not care. I got to put that on a t-shirt. That's what I keep saying, but it's just true. It's the market cares not about frivolous things like rate cuts. It would much rather just go higher all the time.
I know, right? Yeah, no, you gotta love this, man. You're often long and long calls. This is a great environment for you. Like I said, volatility is low, so you're not overpaying for calls in any way, shape, or form. And that's kind of been the modus operandi more recently.
Yeah, it has been. It's been lots of naked calls and lots of short put verticals that have worked out if I want to be a little bit more defined risk. But yeah, I legitimately, let me look right now. Do I have a short position on in my portfolio? I do still have that win position. That is the only one that we discussed last time I was on here. That's my only true short right now. And I got some puts on Tilray as well, but that's more of a meme trade for me.
Tilray, I haven't heard about that one in a while. Oh God, yeah, it's $1 now.
Yeah, it's $1. I have.
I mean,
I
are people
noticed
still
that
trading like the cannabis names like that? I even wonder.
I noticed a few weeks ago that this thing was up a little bit again from its sub $1 doldrums, and I was able to get puts at the 50-cent strike December 19th, and it was roughly 120 DTE when I put these on for 2 cents a pop. And so I bought 25 of them. And I figured if Tilray does Tilray things and something happens and it takes a gap back down to 75 cents, I'll just be laughing in the bank. And if not, it's only a $50 post up and I could really care less. So I sort of see this as a risk-free trade for me, but I am short, aggressively short Tilray, which, yeah, that's a name I haven't thought about since probably 2021 until I saw somebody talking about it on Reddit.
Yeah, I know. I used to have some of these Tilray shares. Every now and again, I'll find certain names and just buy a few shares, and that's
yeah. I used to like Tilray, and I liked Hexo a lot back when Hexo was around. But yeah, nothing's come to fruition yet. I mean, I like the marijuana industry as a whole. I mean, its legalization is only growing, but I mean, save for some of these ETFs, it just feels really awkward to try to find good angles on these individual names.
Yeah, I wouldn't do ETFs. I know a lot of people, that's why I had this one up. A lot of people like this MSOS. I just remember looking at one point in time, and I looked at the specs, and this thing was there was a large position of the US dollar in it. Like, that's not what you want. You want some exposure, you know?
Yeah, I know MJ is the other one that people like, which is very aptly named.
God, you can make a basket of these stocks. I might. Wow, this is $30-something though, huh? You can make a basket of some of these stocks and that are under $5 or $4, and maybe just buy them. And like I say, things like this, you just put them in a separate account where you don't look at them every day because you just don't need to. And then one of the days, in the next couple of years, when they start to really pop again, you just have them, and you just had them from the lows. But you don't have. That's the hard part. Is like when you buy something, you like $1, like the Tilray, and you're like, okay, cool, I want this thing to go. I can't wait till it's $5 again. That's going to take some time, and you don't want to look at it every day. You really don't.
Well, yeah, and it's a big if, because I mean that's the counterpoint to this industry is these companies also do just fall by the wayside and go bankrupt from time to time, and that's not usually something. I mean, even with penny stocks, that's not usually too much of a risk. Obviously 80% of penny stocks wind up going bankrupt or whatever, but usually I feel that if I'm buying a penny stock and I plan on holding it for a year or two, I'm not super concerned about bankruptcy. I might be concerned it'll go from $2 back down to 50 cents. But with a company like Tilray, especially operating in this space, I mean, you open yourself up to liability for lawsuits and everything else. There's all kinds of things that can go wrong. I mean, we can't even take credit cards yet.
Yeah, exactly.
We got a long
So
way to go.
it wasn't them who credit card fraud you. That's for sure.
Yeah, that is for sure.
Folks, thanks for watching the show. Gus, man, good to have you on once again, and I'll see you again soon, buddy. Appreciate you.
Yes, sir. Happy to be here.
Folks, thanks for watching the show, and as always, be smart, be patient, trade them small, and trade them often. See you.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Hello, everybody. Tim Knight here. It is Friday, time to end the week, and it's been pretty much lifetime highs every single day, I think. I'm pleased and relieved to report that in spite of that, the 100% short portfolio is still up. So that's weird, but nice. And that's what I try to do when I do short stuff. I try to find stuff that will defy even the magnetic pull of everything endlessly higher. And of course, today's a big quad OPEX day. So maybe we'll see a little more dynamism starting next week. I've got some charts loaded for you, and let's jump in and talk about them, because that's what we do here. We begin, as we always do, with a spider, and as usual, lifetime high. Let's change this to a candlestick to make it a little more clear. And Wednesday was kind of a crazy day. It was our one weird day. We have been, ever since the month began, pretty much relentlessly moving to lifetime highs every day. Wednesday was a bit of a wobble, but it shook that right off. And so boink, boink, Thursday and Friday just notched up 2 more record highs. The diamonds also a little bit in the green, and also another lifetime high there. And overseas, a teeny bit of weakness. EEM is kind of hanging out as an inside day. It's off not even 1/5 of a single percent. China also down, although barely. Worldwide markets are very, very little activity right now, and there's not much to move things. I mean, we're weeks away from earnings season, and the mega events, Jackson Hole and the CPI and FOMC, they're all behind us now. As far as semiconductors go, which has been kind of a foundational to this rally, SMH is taking a bit of a breather. We had a huge rally yesterday to lifetime highs. We have shaved off a little bit of that, down 0.5% right now in SMH. NVIDIA, which is the biggest company in the world and the biggest component of the semiconductors, obviously, is down just pennies. Its own lifetime high was achieved about a month ago, a few weeks ago, end of last month. So we're just kind of hanging out down here. My own only semiconductor position, my AMD short, still looking pretty good, down not quite 1%, and that one I'm hopefully a keeper. As far as precious metals, which have been having an amazing 2025, gold doing nicely. We're up about $40 on gold, so we undid yesterday's damage, as you can see here, and it looks like probably a lifetime high close. I mean, yes, there have been prices traded higher than this, but in terms of the close, this is probably going to be a record for GLD. The miners also having a very good day, lifetime high, blasting above their former peak right there. So we'll just say goodbye to that horizontal, boink. So tremendous day for the miners. Silver also having a good time, up almost 3%, like so. So it really undid all the damage from Wednesday and Thursday, vaulting above even Tuesday's high. So just across the board, it seems Earth is pretty convinced that fiat currencies are doomed, and the real money, which, as I've said before, kind of the premise of this entire segment is bullish precious metals, bearish equities. And precious metals have been knocking the socks off of equities for 2025 in spite of the nominal, and I say again, nominal highs. Because if you look in terms of normal money, in terms of real money, the stock market peaked, this seems impossible, I know, but it peaked a quarter century ago. It sounds nuts, but it's true. And there was the last actual bull market in stocks, if memory serves, lasted from something like 2015 to 2018, something like that, a brief chunk of time a few years back. But on the whole, stock market has been down for this millennium. Sounds insane, but if you look at it in terms of gold, that is the case. So yeah, the magic of plunging currencies will create astonishing stock market results. Just like, a house in Palo Alto is $8 million. Get someone from 1960 to hear that. It sounds crazy, but there's reasons. It's $8 million to get a very average home, because money ain't worth much. In terms of palladium, which is my love interest, it's down a little today, and that's okay. That is totally okay. When it is up, it usually blasts gold to smithereens in terms of its performance. It's still easing back a bit. I have faith that palladium's going to have a great future ahead. Over in energy land, crude oil is down. Looking at the front month of crude oil, it's down about 1.33%. And this rather sloppy right triangle pattern I've been tracking for years at this point. It's moving in the right direction. We had 2 prior magnificent tops here, each of which were followed by a big plunge. This latest one, I contend ultimately it'll still do the same thing. It's been a little hoofy about doing so. So here we have roughly, this is the descending trend line of the right triangle, and I haven't drawn it, but in your minds I can sort of see a horizontal of the base there. And we have been engaged in a series of lower highs. So we got this, and then this, and then this, and then this. And what we'd like to see, of course, would be a failure right around there. Slip below that level. Sloppy is a good term for this, but it is still a pretty decent pattern if you look at it from a great enough distance with maybe some fog in the air. XOP, the oil and gas exploration ETF, is down about 2%, also very sloppy. XLE, which I'm short, and I shorted a couple of days ago, is down nicely, about 1.3%. And I've tightened up the stop on this one to today's high. In terms of some individual shorts I've got amongst them, here's BP, which this is the 4th instance in recent history of a top. The prior 3 had a pretty decent drop following. We haven't completed this pattern yet. It kind of a fake out right here. It broke down and then went blasting higher again. Quite a tight stop on this one, like so. Send that to the back. There. So that's the stop loss on that one. Basically yesterday's high. ConocoPhillips, COP, much cleaner pattern here. And one other one I'm short, Occidental, OXY, and this is down particularly nicely, about 2.25%, like so. And the stop right there, where that price gap is. So energy moving the right way. Some other non-energy shorts that I'm in are as follows. There's Accenture, which broke this multi-decade trend line a long time ago and completed this rather warped but still legitimate head and shoulders top here and has been sinking nicely like so. So we've got a new multi-year low today. It doesn't look very dramatic, but this is a new multi-year low on ACN. Cracker Barrel, once again, Uncle Herschel, exit stage right, a nice drop on that one. So the Cracker Barrel's been a very good short position. And let's just highlight this pattern within a pattern, like so. So that's been pretty cool. Dollar General. We've talked about Dollar Tree and Dollar General many times. I don't know what Dollar Tree is doing today, but I'm not in it. DG, I am short and have been for some time, and pretty steady. If you look at this, that's not a bad trend. And keep in mind, this is about context. Lifetime highs every single day, and yet still we get this kind of behavior. Just imagine what would happen if the market was allowed to go down for more than 17 minutes. You'd really get some bleeding. And then Dick's Sporting Goods, DKS. I did a post about this idea yesterday, and it's a good start. We've got about a 2% drop on this one, a nice clean stop loss here, anchored to the left shoulder, like so. This pattern is not complete. It is probably months away from being complete, if ever. But being a little bit impatient, I'm jumping in at these levels. And as I said, a 2% slip isn't a bad place to begin. I see the ES keeps vaulting higher and higher and higher. We're up about 32 right now. But just to give you some very broad context, here's the cube. The cubes are above their own lifetime trend line, as you can see. They slipped above it about a week ago or so and have been above it ever since. Interestingly, Wednesday's low perfectly touched this line. So it's kind of become support as opposed to resistance now. And so it looks like a lifetime high close coming on the cubes. Also, this ratio chart of ARKK divided by the cubes illustrates nicely how the likes of Cathie Wood being more aggressive in investing has worked out very well, because this is a very good looking chart and very bullish pattern here. And so on a relative basis, ARK bottomed out last summer and has had a tremendous recovery since then. But going back to the theme I mentioned earlier about bullish metals, bearish equities, these two, which I'm using silver this time, shows that nicely. Here is all the data I've got on the Dow Jones Composite divided by silver. And you can see a massive top here, which broke down in 2006 and led to this marvelous slump. And now we've got this one, even a little bit bigger than the last time, just about complete, and could mean years of higher metals and lower equity prices if history plays out like it did before. And just one last example, the small caps of Russell divided by silver. We had a beautiful top here, a different one here, this egg-shaped thing, this it's a diamond pattern, and this is already broken down and it's working its way lower. So really cool stuff to come, I think. That's it from me. Have a good weekend. I'll see you here Monday. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you gotta do is look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and as foretold, as always, we have new highs. E-mini S&P 500 futures 67.22. We ticked to the high of 67.26 just a moment ago. For most of the session, it's been a 2 or 3 point grind fest. Besides the early part of the morning where the E-minis were actually unchanged at one point. One of the shocks that I've seen today is just the volume that we have right now. 950,000 contracts traded. A very light day for an expiration triple witching, hell of a crazy week that we've had. Maybe that's a little bit of a surprise to everybody out there. NASDAQ up 137. You got the Dow up 151 and the Russell down 19. The Russell bucking the trend here. You got bonds down 12 ticks. Maybe that's the reason there. But gold and silver as well moving higher. Gold's up 37. Silver up over $1 here, moving higher, near the highs at least that we saw this week. You've got oil selling off a little bit, Ford/CL down 88 cents. Bitcoin has been taking it on the chin today, not participating in this buy everything rally, down $2,300 on the future spot, down $1,500. And volatility has remained pretty sticky throughout the session. I think it'll be a telling sign into the close today. If we see volatility contract into the close, I think we get much more upside going into next week. We'll see if that happens here because volatility is staying bid. Maybe it's in anticipation of the flurry of trading activity that should come in the next 30 or 40 minutes. 30 minutes, I should say.
Yeah. We are seeing some moves here. That SPX Iron Condor was actually insane. We put it on at like 8:45 and it was a 50% winner at 9:15. Something like that. Like the implied move in SPX was cut in half after the first hour of trading. So just craziness across the board, but definitely put on a bunch of trades from this morning.
Yes, we did. Fast market, which was fantastic.
Yep. So yeah, AMD threw on a call diagonal spread there.
Celsius, CoreWeave, AMD. Starbucks
did the stupid in Intel, which you just love to see. Short put financing a long call spread. Rivian, short put there. And then while I was doing the show with Jamal, did a call calendar in Microsoft as well at 5:30.
There you go.
Long November, short October. So put on a bunch of new trades. We'll see what happens there, but yeah, this gold move is very painful for me. I need gold down 100 points next week.
I know you were almost there. It looked like you were you were in the perfect spot, but no, they took it away from you.
It seemed like it was going to happen, and then the market, everything was red after the Fed announcement, and then they said, "Oh, why are we doing red stuff?
Yeah,
we should do green stuff."
Yeah, come on. Today's been a wild day. I closed out a bunch of upside butterflies that I had that I never would have thought would be worth anything that happened to be worth a lot. If you look at a lot of these trades like Palantir, I had an upside risk-free butterfly in. I took some profits in that. I did the same in Hood as well. Another one where, it was basically playing for all-time highs. It was there. I had CCJ as well. That one is back to all-time highs. It's been a face ripper. Hims was another one where I played it to 55. We're right back up there too. So you got bailed out on a lot of stuff in the last couple sessions if you had been leaning long.
Yeah, absolutely. And some of these things are just going crazy. Aklo up at 133 now. Just insane move. Like this is full squeeze situation here.
Yeah. Yeah. My beam energy, bloom energy, BE is one of those. INQ, another one. Let's see what open door is. This sort of stuff usually spooks me, but it doesn't seem like anything matters to the downside.
It's insane.
It's a furious rush to get as much upside as you can in basically anything you can find. I was looking at Apple today. I know they had their iPhone 17 release, and Apple's going nuts to the upside. Google's another one where it's $3 or $4 to the upside. It's basically just rotating. You're keeping some of the high flyers like your Aklo that you pointed out, some of those stocks. But we're moving away from the crowd strikes to the Apples and the Googles today. So maybe on Monday we get another rotation back to the crowd strike and Palantirs and stuff like that.
Definitely. Yeah, you're seeing crazy moves in Apple relative to implied volatility. Like these options were worthless.
Yeah.
The 0-day options were worthless yesterday, and now they're worth $1, $2, $2.50. Craziness.
Yeah. They're buying it all today. You look at the high option volume, the upside moves, and some of these are just, bottom barrel stocks here. Pretty craziness here. In the S&P 100, if you look at some of those stocks, to the downside, Intel giving it up a little bit today. You got Nike and Target on there, BMY, Eli Lilly, Walmart a little bit. On the upside, Palantir, you got Oracle, Apple, Tesla. Tesla's up $8 or $9. Netflix is kind of bouncing here a little bit. It's felt squeezy. It has felt squeezy for the last 2 days, really.
Yeah, even the currencies are moving swiftly. I got out of all of my positions that we put on. I had like 7 or 8 currency pairs, and they were basically all long the dollar. So they all worked out very well. But
they took some pain. Some pain for a little bit, no doubt.
But yeah, we'll see what Glenn has to say next week after the weekend movements and what have you. But yeah this is I guess when we were younger, the status quo was S&P up 7 to 10 points every day. Now with the S&P 3 times the price, is it a S&P up 30 points every day is the new status quo with a little mix?
Yeah, that's what it is. That's the 0.25%. It's
crazy. But yeah, SoFi. I was just looking at this with my brother. SoFi mooning. It went from 10 to 30 over the summer. Just absolutely nuts. These stocks are going crazy right now. There's nothing else to say.
Yeah, it's you can't fight the tape on this on a day like this.
Yeah.
There was no, you had a little bit of a pullback in the middle of the day. And by pullback, the E-minis were like unchanged, maybe down 1 or 2 at the lows. I don't even know if let's see if the overnight low was 14 points from the close. So, it's been all upside. And you can't miss. Everybody's a genius at this point. You know,
Mm-hmm.
speaking to my buddy that says, you know, if it's not 15%, you know, who cares? That's what this market is, and you know, it can go on for a lot longer.
Yeah, some people in the YouTube chat looking at Apple. So some are saying they had some nice trades with this way outside of the expected move. But yeah, someone asking, is there any short spreads that are possible in Apple? I think with a move like this, it's
an
tough.
IV rank at 12.
I would rather do a debit spread because like right now you're getting a 7-point move today, which is abnormal, of course, but this is realized volatility exceeding implied. IV rank at 12, implied volatility at 24%. You have a 10-point projected range over the next 28 days. You're basically getting that today. You've exceeded that this whole week. So it's tough to sell premium in this environment where you're not getting paid in terms of a high vol environment to sell it. But if you think this move will reverse back to the downside, you can get a cheap vertical spread or diagonal spread on and define your risk. So I would rather do that than sell a spread in a low IV environment where you can only pick up $1 where you're risking 4 up at 255 in October. And that's 9 points away. We're getting a 7-point move today. So I'm not sure the risk reward is there for short premium defined risk in something like Apple with such low IV.
Yeah, and we get the question all the time of like, what do you do when volatility is low? And in something like Apple, if you were looking to get some short delta, it's relatively cheap to get that delta via a long put spread, calendar / diagonal spreads. I mean, you can pick up 20 or 30 short deltas for relatively cheap, given that volatility is so low here. It stinks to have those positions on and watch the market grind higher, but that's kind of the route you have to go. It's the same thing to the upside. Like, it's hard if you want to play Apple to the upside, how do you go and sell the November, 230, 220 put spread at $1.80? It was trading at 230, 4 days ago. We were at 230 in the middle of this week. It's hard to do that sort of trade. You kind of have to do, you don't want all that risk on the downside there, just given where it is.
Yeah.
You want to do the at the money call spread or the at the money, calendar / diagonal spread. Those are the things that kind of, look a little bit better. But yeah.
Yeah. Yeah. It's a tough world out there unless you're just blindly long, then you're thriving. What else we got here?
Are you doing anything with your IBIT position?
I am not.
See, I closed out of my I had some call diagonal spreads that were wrapped around the 66 handle. And so I'm thinking I might join you in some sort of strangle type position here.
Mm-hmm. Yeah, I think in terms of put premium, now's a fine time to roll out to November.
Yeah.
Because we're right there. I have the 65 short put. We're at 65.38. So actually, we could take a look here.
You want to roll it out to November?
Yeah, I'm going to do it in the next week or two anyways.
Mm-hmm.
So it's just a low IV rank environment. Doesn't help me from that perspective, but there's still going to be call skew here. If I rolled out right now, I'd pick up another 260.
Mm-hmm.
So maybe I do that.
You're going to go roll to the 65 what?
75. Just the same thing. Or I could go 65.73 right at the orange bar expected move for $3 flat.
Mm-hmm.
Yeah, let's do that. We could do that.
Yeah, because that still leans you pretty long. I mean, because you're right at the money.
Yeah. All right. Let's see. I'm going to do 65.73. Actually, I'm going to do the 65.75. There's way more liquidity there.
The 75 strike?
Yeah.
Still a 7 delta.
Yeah. So 260 And this is a longer term cycle anyways, going to November. So I'd rather have a lot more upside room before I have to make an adjustment. But yeah, let's see. Where are we going to get filled at here? There you go. So I just rolled to the November 65.75, picked up 257, which brings my total credit received to $2,600, almost exactly.
Beautiful.
Yeah, so I'll post that to the follow page right now. But yeah, it's been crazy. We're mid-September, and the credit received has gone from $500 to $2,600. Love to see it. Which with the strikes at 65.75, that brings the break even to the downside below 40 and above
100.
100. Yeah. Yeah. Actually, yeah, it's like 39 to 100 is the break even range with this trade now.
Yeah, it's as good as it gets, Mikey.
Yeah, it's been beautiful.
Yeah. What's our favorite DraftKings doing? Is that even in play anymore? Trading at 43.
Yeah, I mean, regardless of IV rank, it's usually a high IV product. 45%, 47%. I don't have a position on there now, but they have been moving a little bit, a little sell off.
Do I sell the 42.5 puts in October? 147.
I think you could. Certainly could.
The 40-ish delta. Let's see.
Yeah, I think that makes sense for a little fade the sell off play.
They just move these markets. They just widen these out 25 ticks. I'm going to leave that in. We'll see if I get filled. Now we got some volume coming in. Look, you see, just got our million contracts here. Got E-minis moving. I mean, they got to squeeze them higher, right? You got to buy them before we get into the weekend.
Yeah. Can't
go home short.
No,
and by short, I mean not enough longs.
Yeah. I mean, it's been wild. I was hoping that the initial sell-off from the Fed announcement would have sustained and we got some more volatility in this market, but
you're not
the VIX didn't move with that move. So, and we've talked about that all the time. Like if the VIX doesn't move, it's tough to expect more of the same. But yeah, I mean, what do we have in terms of expected move through next week in SPX? 68 points. 68 points, 70 points.
Are we going to close here right at 666 in the SPX?
Potentially for a little ominous weekend action.
Oh God. I don't think anybody believes anything bad anymore. There is no such thing as bad news. You got to buy them. Keep them forever.
Yeah.
Get more, as much as you can.
I feel like this is what we were saying and feeling like before the last market crash.
Yeah.
But when does that come? That's the question.
Yeah. Steep
contango between the V, X, and Z contracts and volatility futures. All three of them are below 20. Expected move through Monday is 25 points. That's nuts.
It's nothing.
Under 30? Come on.
I'm telling you, a big old nothing burger here. Can't buy a down tick. I'm interested to see what happens with volatility here in the next 5 minutes. Because it seems like they're squeezing volatility out of this market, at least right now, looking at some of my other accounts.
Wow, Microsoft up 7.
Oh, there's my DraftKings.
Microsoft just ripped 7 points in the last 3 minutes.
You got to have them, Mikey. Come on. As Dylan would say, stop thinking.
I know.
Stop thinking.
No more thinking. I did put on that call calendar spread that's coming in nicely into this move.
Yeah.
But
the 7-point upside move will help, no doubt.
I mean, a 3-minute 7-point move and Google's selling off. Good call out from the YouTube chat.
I mean, this is
Marcus.
just squeezy. This is, I mean, they're moving everything higher right now. Gold's up 40. Is this back to highs? Pretty much. Silver as well. And
is there enough money in the system to never get another 10% pullback? No, we'll get a 10% pullback.
One day. We might be dead. We might be dead by then. But at some point, yes.
I mean, this is just how the brain works. Like literally, when we had the tariff stuff going on, everyone was like, "This is different. This is going to impact everything X, Y, and Z. Everything's over." And now we're talking about how there's never going to be a sell-off again.
Yeah,
it's just insane. It's the herd mentality permeates through the markets for sure.
For sure.
But yeah, the question of like what could trigger a 10% sell-off beats me. I just know that it
more
will
sellers than buyers.
True. But yeah, it will happen again. Microsoft up 8 now. What is happening?
I don't know. I mean, this is all it's a quarterly expiration. So you have a lot of options expiring. You have a lot of rebalancing. A lot of that stuff is happening right now. So, maybe that contributes to some of it. But yeah, I mean, the no reason $5 up move with 5 minutes to go before the weekend. Gotta have them, Mikey. Gotta have them.
Mm-hmm. Yeah. I think it's crazy to see these last minute moves in some of these stocks, but gotta goose them up before the close, right?
Yep.
Bitcoin's continuing its slide, which is interesting.
Microsoft up 10 now. Look at you. You might even be able to take that call calendar off intraday.
I mean, it's moving so fast that this spread isn't moving that much.
Yeah.
It's up $60, which is nice. But like we must have missed something.
I don't.
Or maybe not.
I don't think so. I think that's just the market right now.
Couple minutes left here. What do you think for next week? So expected move in SPX plus minus 70 points. You think we're inside that, outside that, and which direction?
I think we squeeze higher.
So inside up?
There's not a thing that can take this market down. Not a thing.
Not a thing or a tweet.
From
very specific people.
We're done with the tweets. Tweets don't matter anymore. Money print to go burr. It's all going up. Oh no, we got what's the probability on 7,000 at the end of the year? What do you think on SPX? What would be your guess? What would you put it at? That's
from a probability in the money or probability touch.
Let's just say delta. Let's just go to delta. We'll go to the
30 delta.
You think it's a 30 delta?
No, probably 25 delta.
I think it's about a 20. Let's see. 7,000. Oh, you're right. 28 delta. I mean, that's a 50-50 shot of 7,000.
Yeah. Bump that up to 100%. Yeah, it'll be crazy to see if we get to 7,000 by the end of the year. We have a couple months left, but looking at volatility, looking at the steepness of the contango, if nothing happens, nothing changes in the overall market from a economic standpoint, from a global political standpoint, I'm not sure why we wouldn't creep higher towards that level if we don't reach it, but
yeah, we got people in the chat calling for the 7,000.
Yeah. I mean, my quarterly guesses reflect that.
Yeah.
I think I was at 69.69 by the last quarter.
And a question on like how are we saying it's a 50-50 shot? So when you look at delta is the probability of it being in the money at expiration based on all the factors right now. When we think about probability of touching that strike at some point within that expiration, we double the delta. So it's just a quick trader hack on how to estimate probability of touch. And you can actually pull up probability of touch on the platform as well. We could just put that up there. Delta, and where is my touch? There we go. We go back to 7,000 and it's a 50-50 shot. You can even see it there.
Yep.
So that's why we were saying it's a 50-50 shot. And even just using the expected move, you can see, it's right there. It's in play.
Mm-hmm. Yeah, what a move. That's for sure. And yeah, they're kind of pumping these options too.
We got some 8,500s, some 9,000s.
Yeah. Well, what's crazy about these options is the January 2026 option, so just after the end of the year, if you look at the price change in the 7,000 strike, at the beginning of this month, they were trading for $3,000. Now they're trading for $9,000. So they are pumping the premium here in the out of the money options. So
I would, if I was a market maker, I'd make them 12,000.
But what's crazy about that is we've only had, so in the same time frame that those options have tripled in price, we've only had a 250 point move to the upside in SPX, which is like 3%. So triple the out of the money 7,000 strike for the end of the year versus a small move in SPX. Ugh.
Less than a minute to go till the close. Are we going to get the quad sixes?
Oh, yeah.
Right there.
Yeah.
66, 65.
They're toying with us now.
Yeah.
A little sell-off into the close. Okay.
Oh, don't even give me that. You got vol up 10 ticks. Here we go. A little bit of vol. That's nice to see. I want more. Give me more. Make vol great again. Give me that.
Yeah, biggest mover on the day. Oklo up 30. Microsoft up 10 in the last minutes of trading. Absolutely nuts. Apple, there's the bell. Apple up 7.5. What are you going to do?
What are you going to do? E-minis up 27. You got the NASDAQ up 150. They sold off about 5-6 handles on the close. I wouldn't consider it a weak close. But it's been a fun week, been a wild week. We'll see if this continues into next week. But we're going to take a quick little 90-second break and come back and do this all over again next week. We'll see you then. Everybody, have a fantastic weekend. Go Bears. Please get your first win. Peace.